Good.
Take a look at crypto this morning. We have already a few times here with us now, getting after it relentlessly, right? Anthony Pompliano, founder and CEO of Professional Capital Management. And you're always in a positive mood. Even though crypto is not always positive, it is this morning. You expect more new highs on Bitcoin.
I mean, new all-time high. Satoshi couldn't have written a better script, having it hit a new all-time high on the night of the election. I think one of the most important things is we have the first Bitcoin president. President Trump ran on a campaign point that he was going to protect Bitcoin. He was going to create a Bitcoin strategic reserve. And I think that you saw Bitcoin's price kind of reflect having somebody who was so pro-Bitcoin win the White House.
Relatively, it's not that recent, I guess, but so you think this is the real Donald Trump on Bitcoin that he's been for the last, how long, a year and a half?
I think that he's surrounded by enough people who really understand this. You know, people like Bitcoin Magazine CEO David Bailey, many others who have really spent the time with him. And one of the interesting things is whether he believes in Bitcoin or not is almost a moot point. Is what is he going to do? And if he's going to protect it and not be abrasive, that's a win. But if he also creates the Bitcoin Strategic Reserve, I think that'll be a huge tailwind, and it'll kick off this global game theory, right? If the United States starts to lean in and welcome Bitcoin and say, hey, this is an asset that we want on our balance sheet, other countries are going to have to respond. And the interesting thing about Bitcoin is that it's been a bottoms-up adoption story. Individuals adopted it first. Now we see corporations and financial institutions. But the central banks are some of the biggest buyers of gold. Gold is up huge. And so if central banks start to buy Bitcoin and put it in their reserves, that would be a massive tailwind for Bitcoin.
So even short of a sovereign wealth fund or anything like that, and Becky, we haven't talked about Gary Gensler in light of what's going on.
You mean that he's not going to have a job?
You tell me.
Of course he's not going to have a job.
What
do we need to talk about here?
We know who's not going to be SEC commissioner.
I can tell you who's not going to be the SEC commissioner. I can tell you who's not going to. I can tell you who's not going to run the FTC. I can tell you who's not right. I can go through the list.
Yeah.
It's going to be a house cleaning, obviously.
Mark Cuban is not going to be if he wanted to be at this point. You think Gensler's gone, and you think that would be good?
I think people expect whenever a new president comes in, they're going to, kind of play musical chairs with all the regulatory organizations. What I do think we are on the precipice of is a kind of an economic explosion. Right, we have somebody who's coming in who obviously is very business friendly. He's surrounded by people who are very business friendly. They have some radical ideas in a positive way in terms of what they can do to cut taxes, drive GDP growth, use the country's balance sheet to try to close the deficit gap. And so I don't expect them to be able to do everything that they're saying that they can do, right? When you're on the campaign trail, you say a lot of stuff. But if they can accomplish 50% of it,
So which
it'd be pretty
50%?
powerful.
Like, which are the ones that you think are most important and maybe most likely to get put through?
Well, I think actually, if you look at what the American people did last night, they basically issued a mandate. They said, we want lower inflation, we want affordable housing, we want a secure border, we want a government that doesn't go and engage in more war, and we want to feel like we are safe, secure, and strong at home. And so if you are the president coming in and you can say, how do I get inflation down and under control? If you look at home affordability, start to deregulate and allow people to build more housing in this country.
Right, because the problem is not giving people $25,000 to say you can go ahead and buy a house. The problem is creating more supply.
For a minute, I thought you were the inflation trade. You're talking about those sides.
Oh, God.
What he's going to do with tariffs and cutting taxes and not
All good
taxing
for
kids.
Bitcoin.
Yeah, all good for Bitcoin because of inflation. Then you just said he's going to bring inflation down. I don't know who I believe. I don't know which part of you I believe.
I think there's a difference between skyrocketing inflation and currency debasement, right? And the currency debasement is why Bitcoin goes up. Inflation is usually happens alongside of it.
Isn't
it? It's not in the sense that you can have the currency continue to debase and lose purchasing power without having that inflation number spike to 9%. Right, and I think that's what we really saw here was we saw inflation spike over 9% during the Biden administration.
So what do you think it should be? 5%, 6%, 7%?
I tend to think that the inflation rate is not 2%, it's higher than that, but it's not going to be 5 to 10%.
Do you think the Fed goes along with that? If they start to see inflation picking back up, wouldn't the Fed then raise rates? And wouldn't that have curb inflationary economic expansion?
One of the biggest questions I think that we're going to face as a country is how involved should the president and the executive branch be involved in monetary policy. Donald Trump has said that he thinks the president should be more involved. We obviously have had a situation where the central bank has been
inflationary
independent.
stuff and then saying we're going to keep rates going down, interest rates going down is the right policy?
I don't think that you can keep rates going down if inflation is spiking. And so I think
Becky,
that's where you get a lot of
back
complexity.
off.
And it's not as clear in terms of when inflation is spiking, what do you do to get it down?
And by the way, the bond market isn't paying attention to the Fed lowering rates at this point anyway, not on the long end, not even on the short end at this point, but the 10-year is all the way back up at 4.47. So there's only so much that any administration or any Federal Reserve can do.
Yeah, one of the things that's really interesting about policy is you kind of draw, the perfect playbook, right? You're like, hey, this is the theory of what could happen. But then that plan meets the real world. And so you can try to
It's
do
like
all
Mike
these
Tyson,
things.
right? You can do all these things till somebody punches you in the face, or if
Yeah.
that person punching you in the face is the bond market.
And it's also a very complex system. So you say, hey, I'm going to go get home affordability down. Okay. Or you go and you do that. As soon as you do that, all of a sudden inflation spikes somewhere else. You got to go and try to address that. Then asset prices crash, right? And so you're just constantly
Incentivizing people to build more housing supply, that seems like the right way to go at it.
And one of the questions I think with housing supply is how much is the president and the national government able to do that versus is it local governments? One of the things that I say is
Okay, let's have a good day.
The Reserve chairman is more important than the president, but for many Americans, actually, who's on their local city council may be more important than who's in the White House.
You know who we haven't really talked about, and I know we gotta go, we gotta run, the Fed chair.
We did a little earlier.
Like, but do we really think that Powell
I don't
stays?
I don't know.
Does it go?
Does the Fed stay independent?
This is
I
the
don't think
question.
I don't think Jay Powell is planning on going.
I don't think Jay Powell is planning on going anywhere. I think it's very hard to remove Jay Powell,
Right.
but there's been talk about
Our
all
guest
sorts of
mentioned
things.
Nixon and Arthur Burns, and then I mean, HW blames his loss on Greenspan. And you mentioned Mike Tyson. He's the most ripped 58. Did you see him?
I mentioned Mike Tyson.
Well, you mentioned Mike Tyson. Yeah, sorry. Have you seen him? He's the most ripped 58-year-old, and he's going to fight Jake Paul.
I don't know if I'd get in the ring.
He may be
for a
more
couple
ripped
$1 million.
as a 58-year-old than I am as a 58-year-old. Anthony, you got to have to totally relentlessly against
Thank you, guys.
Yeah,
It is
well,
just after 7 a.m. right now, 7:01 on the East Coast this morning. You're watching a very special edition of Squawk Box on CNBC. I'm Andrew Ossortner along with Joe Kernan and Becky Quick, and NBC News is projecting officially now that Donald Trump has won the presidency. That call coming in around 5:30 a.m. Eastern Time. This morning, NBC News also projecting the Republicans will take control of the Senate. Many House races have yet to be called. We are only half done here, though, on Squawk Box today. We've got a huge lineup of guests still to come to discuss all this down, break it down, and make sense of the election results and what it means for our economy, the stock market, and so much more. We should say that the stock market is ripping this morning. The Dow up about 1,200 points. We got David Rubenstein on the list, Kyle Bass, just a whole litany of great guests to discuss all of this with. Let's show you Treasury yields as well, though, right now. If we flip the board around and show you the 10-year and the 2-year, you're looking at 4.469 on the 10-year, the 2-year down at 4.2 for the moment, Becky.
All right, for the very latest on what we're seeing in the election results, we want to get to Eamon Javers. Good morning again, Eamon.
Good morning, guys. The first president to be reelected after a defeat since Grover Cleveland back in the 1890s. That may be why Donald Trump has been talking so positively about the 1890s out on the campaign trail over the past couple of weeks. This was a fascinating one overnight. Take a look at the Electoral College map as it stands right now this morning. We still have a couple of states out there to call, but look at Pennsylvania up there in the upper right-hand corner. That really was the straw that broke the Kamala Harris campaign's back. They were depending on that blue wall, and it didn't happen. Pennsylvania going for Donald Trump, that's 19 electoral votes. That made it almost insurmountable. Then we got the call from NBC News that Donald Trump will be the winner of this election in Pennsylvania. It wasn't even that close. I mean, the margins there were bigger than some of the margins that we've seen in the polling running up to the election. And you look at Donald Trump last night coming out about 2:30 in the morning, declaring victory even before it was officially projected by a lot of the networks. Still
Wasn't
a
even
big
that
smile on
close.
Trump's face, surrounded by family last night in Mar-a-Lago. Here's what he had to say.
We made history for a reason tonight, and the reason is going to be just that. We overcame obstacles.
America was trying to be transformed by Barack Obama, his 4th term, and he failed. So now I can kind of, as a sole proprietor of a small business, I can go ahead and forecast my next 4 years at least. to be prosperous and maybe no wars. Maybe a little bit, I don't know. I don't like the sweep. I don't like that. You know, I'm not going to like that. But I did the same thing on my voting registration. I swept it. I said, you know, I don't give a shit who is it. I'm voting R all the way down. I don't care. I'm just yes on everything and R all the way down. That's how I voted. I didn't read nothing, just R and yes. I read just the initial headlines and okay. Abortion, blah, blah, yes. I don't care if you want to kill your own babies. But I've never done that. I've never voted a straight ticket before, but sweep, that's the way I voted. I didn't care. I said I just R. I saw Jill Stein on there one time and I said, is she still in there? It's weird, you know, I couldn't stand listening to Kennedy speak, and then all of a sudden he backs Trump, and all of a sudden I can hear him clearly now. I'm gonna get on out of here. Let's have a good day. We've got a big old jump in the market, so I'm looking for a pullback and then a consolidated area.
You know,
And we got to let all these goons on Wall Street, every one of them, I mean, you listen to how that one chick talked about, Jenny talked about Tesla consistently, and it's up $30 from her little rant, and then Wall Street never gets it right. But what Wall Street does is adjust. I mean, you're going to see a lot of frowny down faces on CNBC because you've heard me sit here and debate them for the last year about this whole interest rate thing and now the election thing. And this guy on the left, I mean, he's the one that's been pumping.
Well, personally, I think it's a redemption for
Harris.
President Trump, but more importantly, I think it's a signal that the people in America really want to get back to the basics. I think this election.
I think that's what makes America great is the basics, not, you know, separating each other from their gender and their race. And
These are the two driving issues that I think people spoke with yesterday, and I think we're encouraged because there were 7 states that we were very concerned about, and it looks like they're all, for the most part, going to be in line. So this is a sweeping victory. I'm delighted with it, and I think now we can get to work.
David, let's talk about that work. So your expectation on some of the big issues, taxes, corporate rate, individual rate, tariffs. We've heard former President Trump, now going to be the president again, talk so much about those. How do you think that all plays out?
Well, Andrew, I think we have a roadmap. You go back and look in 2017, I was in the White House shortly after he was elected, and he talked about the same issues we have right now, how to get the economy going. We focused on regulation, energy, taxes, and banking. You'll see some of that now, but also you've got a foreign situation right now that's very troublesome. You have 2 existential threats, in my opinion. Neither were really talked about much in the campaign. One is obviously the China issue, and then the second is this financial debacle that we have now with our debt and ever-increasing situation there, and then you have Social Security and Medicare under threat. So Yeah, we'll get to busy. He'll get to work very quickly. This time he only has 4 years. Last time he thought, well, maybe we'll have 8 years. So I think you'll see him come out of the gate quickly with a majority in the Senate. I think you'll see his team put together very quickly, and then he'll start executing this plan.
We don't know. We never know when to stop calling people senator, but I guess I'd stop calling you senator when I call you Mr. Secretary of something. Is that going to happen, David? Commerce? What do you think?
Joe, right now, we haven't even counted all the votes. Look, there are a lot of talented people, and I think what you're going to see President Trump do is just what he did in his first term. He's going to surround himself with really AAA players. These are major league entities, men and women, people of color. You're going to see this. What he said tonight is really telling, I think, Joe. He said, this is a time to heal our country. You don't hear that a lot at this point. But I'm anxious to see that executed. You heard...
David, you know what I just saw? You got something that's very important to President-elect Trump. You know what it is?
What's that, strokes?
Clubhead speed. You remember he said someone didn't have he had, hey, you know what? You got the golf down. You might as well go back into public service. Seriously. That's right. Go ahead.
David, we have talked a lot about tax and other financial implications, markets implications from this. We have not spent much time this morning talking foreign policy. How do you think this plays out when President Trump has said one of his first prerogatives is going to be dealing with the situation or trying to solve the situation between Ukraine and Russia? What do you think happens with the Middle East?
Well, I think there are 3 priorities right now. One, and he said this on the campaign trail, one is to stop the fighting in Ukraine. I mean, I think this can be done. He's got contacts. He knows how to do that. And then, of course, the Middle East. I mean, this is very dangerous. Iran and Israel have an open, undeclared war right now, mostly cyber. But you see that going on before our very eyes every day. And then, of course, there's China. Now, the tariff issue was part of the foreign policy. We made it part of the economic conversation, but it was just as much part of the foreign policy. Our supply chain is way over too dependent on China and other foreign countries. So I think you'll see him come out of the gate.
Support the CHIPS Act still?
Well, I don't know. I think that'll be modified, but you'll see him come out of the gate quickly on all these fronts because 4 years goes by very quickly as we learn.
David, one of the other questions we've been talking about all morning is the role that Elon Musk is likely to play in this administration. We talked about trying to create a more efficient government. There was a tweet he put out this morning. Maybe we can even put it up on the screen, very reminiscent of an old tweet that he put out when he first bought Twitter, where he came in literally physically holding a sink. I don't know if you've seen it. He's now has an image of himself superimposed over the Oval Office, also holding that sink. What does that look like to you? We also noted that Tesla stock this morning is up about 13% on the back of this news.
Well, when you see that rocket be brought back to Earth, cradled in that structure, you think, okay, this is what we need in the federal government. But guys, I've studied this budget, as you well know, over the last 10 years, and you look at in the last 4 years, discretionary spending is up like 40%, guys. It's outrageous. What we need is a basic restructuring plan. If this were a corporation, you would have big ideas coming in from all points to get this thing to become much more efficient and less costly. I think Elon Musk plays a very significant role in this. He has Donald Trump's trust, he has the ideas, and he's not afraid to break some glass. So I think you'll see him in the administration in some role, but I think his advice is going to be invaluable no matter what role he plays.
We're showing that tweet right now. I don't know if you have an opportunity to see it from where you're sitting. Separately, we've been talking about sort of winners and losers this morning, and I'm curious, as somebody who's in the investment world and business world, and you've looked at it, some people saying, you know what, this may be great for TikTok. The president has said before that he may not want to shut down TikTok. It may be bad for Meta, given some of the comments he's made about that company. We're looking at, as I said, Tesla up 13%. We saw Rivian, by the way, I don't know if I could explain it, down about 5%. What is your thought in about some of those names?
Well, I think the big winner is very clear. He committed to it. I think a lot of us are committed to this. That's a renaissance of domestic manufacturing. Look at our supply chain. Rare earth elements, shipbuilding, steel. We've got to rebuild that here in the United States. So you're going to see tax structures, tariffs out there that will encourage domestic manufacturing to return to the United States. And I think that's going to be the huge winner in the first couple of years of the Trump administration.
David, it is great to see you, and we hope to talk to you a lot more in the coming days and weeks. Thank you.
Thank you, Andrew. See you guys.
You bet.
When we come back, a big lineup of guests that you don't want to miss. We've got Carlisle's David Rubenstein, Heyman Capital's Kyle Bass, Galaxy CEO Mike Novogratz, and Omega Family Office Chairman and CEO Lee Cooperman. Stay tuned, Squawk Box will be right back.
PC.
Welcome back to Squawk Box. NBC News projecting Donald Trump has been elected President of the United States. The markets figured this out a little earlier. You can see the Dow futures this morning up by over 1,300 points. S&P futures up by about 128. The NASDAQ up by 315. And joining us right now to talk about the implications is David Rubenstein. He is co-founder and co-chairman of the Carlyle Group. And David, good morning.
Good morning. Thank you for having me.
Let's talk about what this means for the markets. You have seen the equity markets kind of off and running, a gain of maybe 2.75% for the Dow futures right now. We've also seen Treasury yields higher as well, somewhere between 12 and 14 basis points on the 10-year. What do you think this means for the stock markets, first of all?
Clearly, the stock market today will be up very strongly. I think many people in the financial markets were pushing for and wanted a Trump victory, and they got that. But also what you got out of the election appears to be a very strong, united government in the sense that the president is likely to have the House and the Senate, not just a majority, but many people in the House and Senate will feel they got elected because of him. And not since 1964, when Lyndon Johnson won overwhelmingly and he had big majorities in the House and the Senate, many of which those seats came about because of Johnson's strong coattails, did you have a president with this kind of power. So Donald Trump has the power as president to get a lot done through Congress, and I think members of Congress will go along a lot with what he wants. Even when President Obama had a majority of the House and the Senate initially, he didn't have quite the coattail effects that I think Donald Trump has had in this election. So I think you're going to see a united government. I think the country seems to want a united government. I think you're also likely to see the markets go up for a while, for sure.
So if he has a lot of sway over those senators and especially House Republicans, what do you think he will go after first? Because even if you have that kind of sway, you can't do everything at once. How do you think he will prioritize, and what do you think the major initiatives are going to be?
Well, initially he said that he will do tariffs, and I suspect that that doesn't require Congress to be involved. I think his main legislative initiative, though I obviously can't speak for him, would probably be things in the tax area. His tax cuts from 5 years ago are expiring, and so if he wants to have them extended or enhanced, he'll have to get that done relatively quickly. I suspect if he controls the House Ways and Means Committee, the Senate Finance Committee, it looks like he will, he shouldn't have as much difficulty getting that done. You'll have to deal with the deficit issues, but I think the markets don't really care about deficits. That's what we learned. So as long as the markets don't care about deficits, and they don't appear to be, I think he can get through his tax legislation.
You might argue that the Treasury market cares a little bit. And look, we had Gary Cohn saying as recently as last night that he doesn't think that this is necessarily concerned about deficits. You're just seeing the Treasury markets normalize and having higher yields on the back end of the curve. You think that's the case?
Well, I think the theory will be that, yes, we'll have some deficits for a while, but if economic growth can get to the level we want, that's the best way to solve deficits. There's no way we're going to solve deficits by cutting spending. We just can't cut the key parts of the government that really are 90% of the spending, which are entitlements, defense, and interest. The only way you can really get more revenue in is greater economic growth, and I think the markets will assume that that will come about. You know, if you didn't ask me, but if I were to say who are the big loser in this election, it's probably the pollsters. The pollsters, I think, were not that accurate, and it maybe artificial intelligence can be brought to the polling community because, you know, they seem to have not really predicted exactly what was happening, and it now is clear that there was a gigantic wave in favor of President Trump.
David, to your point about growth and to your point about dealing with deficits, there's a fascinating piece, I don't know if you had an opportunity to see it, Larry Fink of BlackRock writing, quote, "We need to increase the size of our economy so that what we owe becomes smaller relative to what we make. If GDP rate rises at an average of 3% in real terms over the next 5 years, the country's debt to GDP ratio would stay roughly stable at a high but reasonable level." Do you believe that we can get and stay at a 3% or above rate given all of the sort of cross currents that we're just talking about?
Nobody knows for certain, but I would say that if you can get 3% or 3.5% growth, it will solve a lot of problems. Right now, the budget is basically 90% interest, entitlements, defense spending, and there's no room to really cut there. And as a result, you're only going to get through this with growth. There's no other way that I can see.
Okay, let's talk maybe immigration. I would think that would be high on his list of things to get passed too. Taxes, I understand, tariffs, and immigration. You think those are the first three?
Immigration is an issue that the president can do a fair bit on his own. I don't know whether the president will go, I can't speak for him, but whether he'll try to get legislation through Congress. Clearly, it's very complicated to get that legislation through, but the legislation that was negotiated earlier this year that didn't pass the Congress, if he were to support something like that, I suspect it would get through. In the early days of his administration, the first 100 days, he should be able to get a large part of what he wants to get done, just as Roosevelt did. Now, the 100 days is an artificial measurement, but I think if in the first couple months, if President Trump can get united behind a couple ideas, I think he can get those through Congress, because I think Congress is largely going to go along with what he wants, because it's clear that he had coattail effects throughout the nation in ways that the pollsters did not see. I
It's
have
hard
to
to
say-
imagine too many Republicans standing up to him and saying, no, we're not gonna do what you want to do.
I agree with you. 4 years ago, you invited me on exactly this day, 4 years ago, and I said then that I thought President Trump would run again. And if you go back and look at the tape, I think you were all skeptical. I didn't anticipate he would exactly do what he did, but I did think that he really wanted to prove that he had won the last time, and I think he deserves some credit for going through very difficult circumstances. He overcame a lot of financial problems, he overcame a lot of legal problems, and I would not have anticipated he'd been able to do this, but I did think he wanted to run. I should say, finally, that President Biden deserves some credit for what he has done as well. He spent 50 years in public service, didn't do many things that he could have done in the private sector, but he really dedicated his life to public service. And I think a lot of things that he did will benefit the country and President Trump. I think the CHIPS Act, for example, the Infrastructure Act will have benefits we'll see for many, many years. So while President Biden will be leaving the political scene, I don't think we should just say that he didn't accomplish a fair bit in 4 years, even though he didn't control Congress completely the way that President Trump does.
Do you see the CHIPS Act surviving without being kind of massively changed at least? Same story with the IRA.
Again, I can't speak for the president, but I would say, the new president, but I would say the IRA will probably have some adjustments. I wouldn't be surprised. But I don't think the IRA will go away because it does have some really good things in it that I think both Republicans and Democrats will like. But I do think the CHIPS Act, while it takes a while for it to be felt, it will be beneficial. It takes a while to build a foundry. You can't do it overnight. The infrastructure legislation, I do think, has some real benefits people are already seeing. So anybody who's president of the United States should feel that they have a mission to unite the country. And President Trump said that last night. He wants to unite the country and try to bring the country together. He isn't going to run for election again. And when you're freed from having to run for election again, I think you can do things that you wouldn't otherwise do. That's not a concern of his in the future. He doesn't have to worry about getting reelected. It's not something that's going to be on his mind. So I think he deserves a lot of credit for bringing this campaign to the conclusion the way that he wanted. The campaign had a lot of bitterness in it, and clearly there's going to be some hard feelings for some time. But hopefully he can heal that, and hopefully he can show some grace and kindness towards some of his competitors and political opponents, because I think the country really wants to be united. And I think the country is looking for some strong leadership that can unite the country in a way we haven't been able to do for a while.
Here, David, on that front. But let me ask you a separate question, which is, to the extent that there are going to be folks inside the Democratic Party that hopefully be introspective on a morning like this and in the days and weeks and months to come, what is the lesson?
Well, the lesson is that the lesson for Democrats, I'm sorry?
I just was going to say, NBC just called Montana for she. So that adds, David, just
52.
Yeah, we're waiting. Just defeating John Tester in Montana, that boosts the GOP Senate majority. Sorry.
To 52 from
To
the
52.
51 we already saw.
Yeah.
Well, clearly the Senate is going to be Republican by more than anybody thought. And I think the House, from based what I've now seen, is likely to be Republican. And as a result, the president has a mandate, I think, to do what he wants. Now, we've learned in mandates they can evaporate. And so if you don't get things done in the first 6 months or so, you have a problem, because eventually people don't like some of the things you want to do. So I think the president is likely to try to do things quickly. We have a lot of executive orders, which is what he did before. I think he'll have a number of executive orders in the beginning, as President Biden did as well. And I think you can get a lot done by executive orders, but I think showing a willingness to work with the other side probably can be helpful in getting some of the votes he might need from Democrats, because you can't get everything you want with all Republican votes. But I think it's an opportunity.
But back to the question about Democrats. If you were going to have dinner this evening, and maybe you are, with an Obama or a Clinton or Harris or the leadership, whatever you think the leadership even of the Democratic Party looks like, I don't even know if they are the leaders anymore. What would you be telling them?
Well, life will go on. The country won't fall apart. It's still the strongest country economically, technologically in the world. We're still the role model for many countries around the world. But clearly, you've got to listen to what the voters want. It's a democracy, and the voters clearly didn't want what some people were selling. And you've got to adjust. And in the business world, you have to adjust when people don't want to buy your products. And in the political world, if people aren't buying what you want, you've got to adjust. And I think that that's the lesson that we get out of this. We also realize that polling is not as scientific as a profession as we had thought. So while polling is a lot better than it was 10 or 20 or 30 years ago, it's still not perfect.
What if President Trump wants a Democrat? You ready for whatever he wants you for? You're good at things. You're in, a lot of things, David. Would you consider it?
I think the best thing for me to do is to help the Baltimore Orioles win a World Series. That's my main mission.
I was going to say, David, I'll run the blind trust. You go into office. I think it's a deal.
Or something. I mean, your
well,
talent's wasted. If askew it, sir. I know you.
I think that the best thing for me to do is to appear on your show from time to time when I'm invited, help the Orioles, and do the best I can to help my company. I think that there are a lot of younger people than me who can do public service. I did public service 40 years ago. I got inflation to 18%. Nobody's invited me back since then, and I think there's probably a good reason for that. So I'm going to stay where I am.
I forgot about
Carter years, the Carter years. David Rubenstein, thank you, sir.
If the Dodgers get Soto, you might as well give up on the Orioles too. So.
Thank you. My pleasure.
When we come back, a lot more on this very special edition of Squawk Box, the day after the election. Donald Trump, the next president of the United States. When we come back, hedge fund manager Kyle Bass is going to join us on an important geopolitical ramifications question of Donald Trump's election to the White House, especially for China and so much more. Do not go anywhere. Squawk Box coming right back after this. Welcome back to Squawk Box. Joining us right now to talk about the election, which NBC News projects Donald Trump has officially won. John Hope Bryant, Operation Hope founder and CEO and a CNBC contributor, and Mick Mulvaney. He served as acting White House Chief of Staff to former President Trump. He's now co-chair of Acton Strategic Advisors. Mick, I'm going to go to you first. What comes next when you think about the priorities that Trump has laid out, the economic priorities that he has laid out? What do you see happening over the first 100 days at this point?
The way I explain it to people, Andrew, is that what you liked about Donald Trump in the first term, you're going to like more. What you didn't like in the first term, you're going to like even less. And that's because the team is ready. They've actually prepared this time. The 2016 win took the entire Trump team as somewhat of a shock. And they didn't have, for example, teams in place, executive orders written, et cetera. They're not making that mistake again. So they're going to hit the ground running, whereas there was a very steep learning curve 4 years ago. I think David Rubenstein was right. The first legislative priority is going to be taxes because Trump has to have Congress to do that. But at the same time be working on the border and on regulatory policy because he can do that through the executive branch.
Nick, there's no Russia hoax going on either. That was 2 years of getting bogged down in, I don't know what what you'd call it. Will there be something? I'm ready for something else. I don't discount the possibility that immediately the opposition, the loyal opposition might try to find something. Don't you think?
You know, there's some real fringe elements on the internet. Keith Olbermann is calling now for an investigation, but I don't think anybody's listening. I think that the victory was so substantial. It's not a circumstance where he wins the Electoral College and loses the popular vote. I think the Democrats know they lost and they got beat, and what they were selling didn't sell to the voters. So I do think it might be a little bit different. Maybe that's naive in Washington, D.C. That certainly will be different if the House does end up going to Democrat control. It doesn't look like that's going to happen, but it still could. But maybe Trump will get a chance to actually work on his agenda as opposed to being distracted with investigations.
John O'Brien, you have been a supporter of Kamala Harris. I'm curious, on a morning like today, as you think about what this election means, what it means to the Democratic Party, what it means to you, what do you think?
Well, I'm a supporter most of all on the healing of this country, and that we're better together. And my guess is she'll be gracious and respectful, as she always is. My desire, and hey, Mick, good to see you, brother. My desire is that we have focus on 5 things, Andrew. First of all, it was said overnight. I was on overnight, and I think it was Jay who said we have an ownership class, then we have everybody else who feels like they're sort of renting America. And that's not sustainable. And there was a sales job done to the bottom of the pyramid, whether you're struggling poor, white, or whether you're black and brown urban, that there was an agenda for you. And now, so that sales job is over and the deal has been closed, so to speak. Now it's about leadership. It's no more sales. It's about how do we materialize that and repair the ladder from the bottom up. How do we help somebody in Erie, Pennsylvania? How do you help somebody venting their frustrations is not going to pay somebody's mortgage or put them through school or start a business. And so we got to repair that ladder. And so these 5 things: economic growth, everybody agrees on that. 2, healing. That's probably something that's unique to me in adding on this list on your program. 3, strengthening the middle class, because 70% of this economy, Andrew, is consumer spending, 70%. And I think that if you look at the swing states, we did a Hope Credit Score Index, all those swing states basically look the same. When you look at the credit score and the life expectancy, they are stuck in the middle. So growing the middle class, growing the table, which includes our demographic growth, embracing our demographic growth, the legitimate diversity of this country, growing the table, otherwise we're at risk from Iran, Russia, China, and North Korea, who want to be us economically, and then reducing the debt, both the country's debt and personal debt, through growing the table and economic growth. So it's sort of a circular, not a firing squad, but a circular strategy up. I think that we've got to get the small businesses re-energized, and the consumer, the individual, has got to see the ladder rebuilt. The color is green, Andrew, what I'm really saying. It's not black or white or red or blue, as I keep saying in your program.
Right.
It's green. That's what this election, I think, was about.
Mick, to the extent there are executive orders that you think the president, things that the president can do on his own versus things that are going to require Congress and the Senate and the like, what do you think is just immediately doable that we should keep our eyes on? And I ask in part because we're watching the Dow, by the way, up now about 1,351 points. The market's trying to say something about where this is all headed. I don't know if that's tax policy itself? I don't know if that's around tariffs. I don't know what you think is that the regulatory environment? What's happening here?
Yeah, I think, by the way, you've used the magic word that doesn't get enough attention. Yes, there's going to be attention to immigration. Yes, there's going to be attention within the executive branch to tariffs. But it's that deregulatory agenda that really was the secret sauce to the first term. It was the reason he was able to spend as much money as he did, add to the deficit, have really, really good job numbers, employment numbers, really good wage growth, and not have inflation. The deregulatory agenda was the secret weapon, and I do think you're going to see that go into high gear. It won't make a lot of headlines, but it will have a direct impact on the economy. If inflation is too much money chasing too few goods, making it easier to get goods and services to market is going to help keep inflation in check, and you'll see them focusing on that.
Mick, do you see a fight over the Fed in the next coming years? I mean, we've talked about Jay Powell. He's made comments about Jay Powell.
Yeah.
Is there going to be some kind of,
I think you're going to have a real healthy discussion about the role of the executive authority in this country. Should the president be the chief executive officer? Should he or she have the ability to hire and fire people? Are these so-called independent agencies really the way things should be structured? You're going to have that debate. Yes, I don't think you're going to see dramatic change, but you're going to have that debate for the first time in a generation.
I know you got to run. Is that a healthy debate?
I think it absolutely is. Should the president be? Look, 1,700 people work for me at the CFPB. I could hire and fire 7 of them. That's not right. I think that's a debate you're going to have.
Hey, Andrew.
Go ahead, John.
Andrew, I think an easy one here for the new administration and the new Senate should be financial literacy. This should be easy. Financial literacy for all. K through their kids' children's savings accounts because it's more likely to graduate from college. Just give them financial literacy all the way through college. And that will do a lot of what I said earlier and help to bridge some of the divisions of economic prosperity in this country and rebuild the ladder.
I think that's something most people, all of us at the table, can agree on. John O'Brien, Mick Mulvaney, thank you for joining us this morning.
Thanks, Sean.
My pleasure.
We do want to get back to the markets, and as I said, they are ripping right now. The Dow up about 1,350 points, the Nasdaq up about 333 points, the S&P 500 up about 130 points. We're going to get right over to Don Chu. He's been tracking all of today's early morning movers. What's on the list?
So Andrew, Joe, Becky, among the bigger gainers so far today, it speaks to a little bit about the deregulation conversation that you guys were just having. So let's take a look at the bank sector first and foremost, because we are seeing large gains for America's biggest banks out there. JP Morgan Chase up nearly 7%, Citigroup up 8.5%, Bank of America up 8%, Wells Fargo up 10%, and Goldman Sachs up 7.5%. The view there is possibly a deregulatory environment under a hypothetical Trump administration in its future policies could be one that benefits the big banks. Now, to the other side, on the downside, there's maybe less of a focus these days on clean energy going forward, at least for the time being. That's the view some traders are having. For that reason, look at the solar companies like First Solar down 14%, Sunrun, Enphase Energy, Sonova Energy. The Invesco Solar ETF, ticker TAN, is down 12%. So clean energy taking a hit, so on the other side of the equation. Meanwhile, traditional fossil fuels and hydrocarbons. Look at some of the big producers and companies based in the U.S. ExxonMobil up 1.5%, Chevron up 2.5%, ConocoPhillips up 2%, and Halliburton up 7%. So oil and gas stocks on the rise. One other individual stock to keep a close eye on right now is what's happening with Tesla, seen as a beneficiary. Not all EV makers are following this suit, but Tesla shares up 12.5% on that, and its close ties to Elon Musk, of course, controlling the CEO of Tesla and his close ties to the future President Trump coming up. And then it is, of course, still a fundamental earnings day. CVS Health, I just want to call your attention there. Those shares up 8.5% right now. They reported earnings this morning. The earnings came in below analyst estimates, but the revenues came in better than expected. They did also say that they're not going to provide formal guidance for the time being. They're going to wait to see how things shake out first. But remember, this is a stock that over the last year from its highs has lost about 33% of its value during that span. So perhaps a bit of a bounce here for CVS guys. Joe, I'll send things back over to you.
Very good, Dom. Good rundown. Thanks. Joining us now on the election and the key issue of geopolitics. Kyle Bass, Heyman Capital Management, founder and chief investment officer. I could probably just say take it away, Kyle. But I want to. I've been trying to figure this out. Did China like the Biden administration? I mean, Trump has expressed admiration at times for not just dictators, but for President Xi himself at how smart he is, and not really an envy of being able to control that many people and almost autocratically. Is China happy or sad today, Kyle?
Yeah, I think, well, look, Trump has an interesting negotiating style. Whether he, kisses up to these authoritarians or says sweeping things like he says to NATO, he's less predictable. He is not, doesn't come from the hallways of the liberal elite, and so his style is very different than everyone else's. His comments about disbanding NATO, if you think about when Putin took Crimea in 2014, only 3 of 31 NATO members were paying 2% of GDP or more for defense. Post Trump's comments, it went to 18 pretty fast. So whether his comments were hyperbolic or whether people thought he was going to disband NATO or stop funding NATO or doing whatever he was going to do to abolish NATO, what he did was he scared a good 15 members of NATO all of a sudden conformed, and they were all in Europe, spending more than 2% of GDP on defense. So today we've got 18 of 31. We should have 31 of 31, Joe. So when I think about China, particularly, it was Trump's National Security Council that really turned the dial, that really advised our country and our leadership on what Xi Jinping's plans were, on his plans to forcibly take Taiwan, on his plans to achieve global primacy at all costs, that they are actually not our strategic competitor, that they're actually the enemy. And in the last administration, it was the Security Council and Secretary Pompeo and various other cabinet level positions that really worked hard to combat China's smokeless battlefield on the warfare on the smokeless battlefield. And I think this time it really depends who Secretary of Defense is going to be and who his National Security Council is going to be this time. Last time it was Steve Mnuchin and Wall Street fighting him at every turn. I wonder if his new Treasury Secretary, which I think will be Scott Bessent, will probably not be fighting at every turn to defend China. So I think she is not going to be happy with the new administration's China policy.
We've got Scott Bessent coming up next.
Coming up next. That's you know what? This is going to take some time, Kyle, because I was just thinking we have talked about so much this morning, but very little about geopolitics. We could talk Ukraine. We could talk Israel. We could talk Iran. We can talk Europe and whether they're just mortified. I don't know what they're thinking at this point of what their future looks like economically, NATO-wise, and everything else. Where do you want to go? What comes to mind?
I think it's important to pay attention to the whole landscape that you just laid out. You have a scenario where there is no off-ramp for a Russia-Ukraine war. I believe there's no off-ramp for the Israel-Iran and Iranian proxy wars. I think the next move will be Israel taking out the energy infrastructure and the nuclear infrastructure of Iran. Iran has already publicly declared with all of their leadership that they're going to hit back at Israel. Clearly, Israel begged the Biden administration to not, let's say, strike the way that they wanted to strike pre-election. And now you've got Xi Jinping eyeing Taiwan and the Philippines, and he's told us since 2017 in public statements and speeches through his various standing members of the Politburo that he's going to take Taiwan during his lifetime. And the next 74 days before the election be an interesting time for me because you have a scenario where all of these multiple fronts of war are open, and you have a scenario also in which the financial architecture of the world, CNBC is so good at talking about the economies of the world, but the financial underpinnings and the currencies of all of the countries surrounding the Middle East and in the Middle East, and all of the currencies and countries in Southeast Asia, the architecture of the world is in a position today where it hasn't been this bad in a very long time, and it's a result of many of these currencies hyperinflating due to the inflation that we just pushed to the world in dollars. So I see more conflict coming I don't see any denouements or rapprochements coming because the financial architecture is so damaged.
We've criticized previous administrations for not enforcing red lines. You know, scary things can happen if you do enforce a red line. And I don't, you know, Trump talks about strength and things wouldn't have happened if he'd been there because, you know, other countries, he's either unpredictable or they really do fear that he's capable of things that, you know, maybe the Biden administration would never dream of. But are there risks to lighting you know, there's tinder there, Kyle, and everybody seems to be nuclear armed, and I mean, could we end up more likely to get involved with something like that, or less likely through strength?
You know, I mean, Iran and Khamenei and you know, the Iranian Republican Iranian Guard over there has been calling for death to America for a long time. They've been saying that Israel shouldn't even exist. And if you look at the target package for Israel, there are a number of nuclear sites in Iran. So, you know, they're going to need our help on some of those sites if, in fact, that's the tack taken, where we have to try to penetrate many hundreds of meters into the ground to destroy some of Iran's nuclear ambitions. And the question is, will we do that or not? I don't know. I think that you're talking about red lines. If you lead with weakness and you lead with begging for meetings at every turn, you know, Trotsky's quote comes into play. You may not be interested in war, but war is certainly interested in you. You'll end up causing many, many more deaths and destruction later if you don't lead with strength on the front end. So I believe the policies that have been enacted in the last 4 years, especially sanctions policy, the tip of our spear is economic sanctions. And when you look at the last Trump administration in 2017, we had Iran literally screwed to the ground. We had them with $12 to $15 billion of working capital. And through this administration, they released $100 billion worth of funds to the Iranian regime. So guess what happens? October 7th happened. So when you look at our sanctions on Russia, we didn't sanction anything. We sanctioned 10% of the oligarchs. We sanctioned a bank or two. We didn't touch Putin's energy business. That is the blood flow that lets the tumor grow. We were too afraid to press the stronger, tougher sanction buttons because we were afraid of gasoline prices going into the midterms. We need leadership that will press the tough buttons, Joe, and really start to cut the blood flow off to the tumors, the bad guys in this world.
Right. Yep. But there are, like they said, there are consequences, and we'll. It's very, you know, this stuff is hard, I guess, isn't it?
There is no easy button.
Okay. All right. Thanks, Kyle. We'll take back. Coming up, Donald Trump economic advisor, just mentioned Scott Bessent, is going to join us. Stay tuned. Squawk Box will be right back. NBC projects Donald Trump has won the presidential election. Futures now almost 1,400 points. Surging. Joining us now, Scott Bessent, a founder and CEO of Key Square Group, and we have talked.
Call him secretary.
Yeah, we'll get to that soon. Scott, I don't know how much you want to go into that on whether that is a possibility as far as Treasury. But both sides agree it's just the way to get there is different. The only way out of this is growth. Larry Fink, I thought it was interesting. He wrote something about that today, about how it's got to be growth. I think his idea of how to engender growth is probably 180 degrees from where yours is.
Yeah, Joe, I think we're going to do it through, excuse me, deregulation, energy dominance, and reprivatizing the economy, because we've seen this massive government spending. We had a 7% deficit to GDP, which we've never had in peacetime or non-recessionary period. So, and we've got this Elon Musk cost-cutting commission, which, over the past weeks, months, when I've been out talking to people on the campaign trail, the public is very excited about.
Scott, we've had people earlier more or less characterizing the president as someone that does like to spend some money, and we talked about whether the IRA would be repealed. Talked about whether even the infrastructure, what would happen there, and there are people saying that instead of repealing these things, that President Trump's going to take credit for the red states that benefit from all this spending, fiscal spending. What's going to happen? What would you recommend?
Yeah, look, this IRA, or Inflation Reduction Act, which is Orwellian named, is the doomsday machine for the budget. I believe that this thing was originally scored, and for civilians and normal people like I used to be, all the scoring is done over 10 years. I think it was originally scored plus 50, then it scored at negative 300. Now I think we're at $1 trillion, and I've seen estimates that over the life, this thing, it could go to $4.5 trillion. So I think a priority is going to be turning off the IRA, and you've seen President Trump and his disdain for this Green New Deal. And, I just can't imagine a worse time to move towards this kind of EV mandate that we've had.
Hey, Scott, all of the IRA, though? All of the IRA? Because we've had guests who have come on today and suggested that not just President Trump, but a lot of Republican senators and congressmen might like some of the spending that's taking place in their district.
Well, look, I mean, it's already embedded, and I think it's deeply cynical. What the Democrats tried to do was to embed this in the districts. Becky, that I couldn't have written a script with greater incompetence than the Biden-Harris administration did. We had this incredible endogenous AI boom that is going to require huge amounts of electricity. Probably 3% of the growth in electricity, and they simultaneously were pushing for a 2035 EV mandate, so more electricity. So we're on the verge of an electricity shortage in the U.S. We're already seeing one of the sources of inflation and the affordability crisis is electric bills going up. So I don't think anyone's going to have a problem with slowing down or cutting off this IRA.
Scott, there's been lots of questions about the future of the Federal Reserve, its independence, whether Jay Powell remains in his role to the end of his term, whether there are shadow chairmen that are tried to be put in place or other things like that. I don't know how feasible or even practical those things are, but what is your, what do you think President Trump is going to do as it relates to the Federal Reserve, and what would you recommend to him?
I think he's already come out and said that the Chair Powell is going to finish out his term, and I was misquoted by a very good Barron's reporter who I think misunderstood what I said. I think that we should appoint the next or nominate the next Federal Reserve chair very early. One of the sources of the great inflation, the 2022, was Jay Powell was the latest appointment of this century. And you'd have to ask the Biden people why they waited so late. He was not renominated until the end of November 2021. He was confirmed in December 2021, and then he began hiking rates in March of 22. If they had renominated him and reappointed him 6 months earlier, he could have gotten started sooner. So the other thing too is, think about it. President Trump has already said he is not going to renominate Jay Powell. So in a way, that increases his independence, right? He's not gunning for a reappointment. So
Let me ask you a related follow-up question. One of the candidates, and we've had him on the broadcast many times, is Kevin Warsh, that people talk about as a prospective chairman for that role. But one of the things that he has been is, I would argue, not dovish. Dovish would not be the term I would put with Kevin Warsh. And how you think President Trump would think about somebody who isn't quote unquote dovish, given some of the things that he may want to do.
Well, Andrew, I think it's how do we define dovish, because Jay Powell did what I thought was an inappropriate jumbo rate cut in September, and look what dovish got us. Exclude the move in the bond market today, which we could talk about if you want, but a dovish Fed raised the 10-year rate by 70 basis points. So that's not dovish. That they're actually tightening financial conditions at the 10-year end, which is what drives a lot of capital formation for businesses and certainly the mortgages. So I think that we have some great candidates, including Kevin Warsh, and sometimes holding short-term rates brings long-term rates down. So I don't think that someone who is cut on the short end, and I think too that we can get into an equilibrium where Trump 1.0 was very disinflationary, or you could just say that inflation was very quiescent under President Trump. It was around target of 2, and if you can get inflation back to target through good policy, then I think we could get into a proper easing cycle that the Fed chair would push for.
Hey Scott, the election's over, so I don't know if we need to promise everybody the world anymore. But if the economy was, let's say you were Treasury Secretary and you had to, the buck stops with you. When the president says, okay, we're doing tips, no taxes, we're doing Social Security, no taxes, we're getting rid of the cap, I'm extending my tax cuts, I'm all these things, and tariffs, some of them, maybe it's negotiating, but you're going to have to deal with some of those consequences. Aren't a lot of those things inflationary? And were there times where you were just like, Mr. President, or President-elect, don't promise all these things. I know there's an election, but it's not all possible to do all things for all people, is it?
Well, Joe, there's a lot to unpack there on both sides. So let's talk about first some of the tax cuts that President Trump talked about during the campaign. That's going to be a negotiation with the Republican Congress, and it looks like we did have a sweep.
Right.
Like, here's what I want. Okay.
That's it here. Now I'll sign whatever you give me. It's
right.
like,
Well, no, and look, I've already been in conversations with a lot of the Republicans who will chair those committees, and I can tell you, in the Republican Congress, especially in the House, there's a big appetite for pay-fors, and so it will be a negotiation.
Although, Scott, that comes down to the idea that there's a big appetite for pay-fors, but I would also imagine there's not a big appetite to tussle with a re-elected president who is coming in with a landslide, with a red wave, who's clearly pretty powerful on this, and a lot of the reason that many of those elected, or the reason that they're going to have the majority is because of President Trump. If he really wants this, it seems to me like he can push whatever he wants in the beginning.
Well, but Becky, I can tell you the one thing he doesn't want is a replay of what we just got under Biden-Harris, because the reason Donald Trump, I would say the two reasons Donald Trump is going back to 1600 Pennsylvania is the great inflation and the squeeze, especially on working class people's real wages, and the mass unfettered immigration. So let's talk about the squeeze on wages. That you would not do a replay on the squeeze on wages because under President Trump there was real wage growth. Under Biden-Harris there was a loss of purchasing power, especially among the bottom 2 quintiles of earners who have a very different basket of goods and services. So President Trump has some very good ideas, but I guarantee you the last thing he wants is to cause inflation. And this is a problem we're seeing all over the world. I think Prime Minister Kishida in Japan was pushed out because of negative wage growth. And,
Meaning some of the things that he promised he knows would be inflationary, and so he's not going to push through and follow through on some of those things?
Well, look, you can't have it both ways. You can't say a tax cut's inflationary and a tariff is also inflationary, right? So I don't think they're necessarily inflationary. And what we're seeing, I think, today in the bond market is, I don't think the bond market is worried about Trump 2.0 inflation. I think what you're seeing is a healthy move geared toward a growth impetus. We're going to see deregulation, which is disinflationary. We are going to see President Trump has said he wants to get energy prices down, disinflationary, and then tariffs are a one-time price adjustment. The Federal Reserve, in their Teal book in the summer 2017, said that the Fed should look through tariffs. And my view, and I don't have a say now yet, or maybe ever, but is that I would recommend that tariffs be layered in gradually, which would the price adjustment would be over a period of time. But I think if you take that price adjustment coupled with all the other disinflationary things President Trump is talking about, that we're going to be at or below the 2% inflation target again.
Hey, Scott, personal question for you. I don't know if you can answer it or not, but just should we expect to be doing interviews like this from the lawn outside the White House in the future?
Well, I don't know if you'll be doing them with me. I'm sure you'll be doing them with somebody.
With you, Scott, with you.
Look, I'm going to do whatever President Trump asks. If he says, Scott, be better to have you on the outside, we can speak once a week, and you can critique what's going on, I'll do that. If he says, I'm going to settle the war in the Ukraine, please go help rebuild the Ukrainian economy, I will do that. There have been no discussions about jobs. Important thing was to win, as we did last night. It was a real wave. I am not surprised. It's what I think I said it when I was on before. I predicted that we'd have the trifecta, and that President Trump won the popular vote. So, as you said, he does have a mandate.
Okay. I was actually, when he said it might not be him, but it'll at least be us, I was actually happy that you said at least it'll, right? At least it'll be us, because who knows? Right? I'm needy. I'm very needy, Scott, so thanks. Maybe it'll be you, maybe it'll be all of us. But good to have you on for an extended talk today, and we'll see whether we talk and whether we're begging you for interviews in about 3 months.
Well, you can still ask me on it as a private capacity.
Either way, we will.
I still have a day job.
You do. Okay. Thank you.
Okay. Thanks.
Okay.
Thank you. The Fed kicks off its latest meeting today, and a lot of economists are expecting a 25 basis point rate cut tomorrow. Joining us right now on that and the Fed independence conversation is former Dallas Fed President Rob Kaplan. He's now vice chairman at Goldman Sachs. And Rob, let's pick up with what Scott was just talking about, this idea that former President Trump and upcoming President Trump has said that he would not renew Jay Powell. Scott just said maybe that it makes the Fed even more independent over the next couple of years. What do you think?
I think the Fed will act independently this year and next year, and they'll do their best to screen out political influence and political considerations. That's what they've been doing, and I think they'll continue to strive to do that.
And that Fed operating under independence should be doing what, you think?
So they'll go ahead and make a cut in November to down 25 basis points. I think December they'll leave their options open. They won't commit to it, and they've got to take some time to see how the economy unfolds and how these policies unfold. I've been saying for a while that there's two phases of the rate cutting. Phase one is as long as inflation is sticky around 2.5, they can get to say 4.25, 4.5, but they need to see progress from 2.5 to 2, in my opinion, to cut rates lower, and I still think that's the approach they'll take.
Okay, let's talk through some of these potential policies. I'm assuming you heard this conversation we just had with Scott.
I did.
Okay, let's talk about the idea that if they rein in spending, whether that be cutting back the IRA, the CHIPS Act, trying to cut government spending. I don't know how effective they'll be able to be with some of those initiatives, but if they do rein in spending, that would be anti-inflationary. Then you take the idea of lower taxes and put that where you want in the pot. Tariffs could be inflationary. How do you see all of this adding up?
This is going to be a mosaic. It's going to be a puzzle, and you're going to have to look at it holistically. So the first issue I look at is what are the immigration policies, and what's the effect on workforce supply? Does it actually go down, or is it more manageable? But that's the number one question. What the immigration policies and some of the things that have been said, what do they actually do? Tariffs we've talked about. Remember, tariffs is just on goods. Goods is 30% of the economy, and people are dynamic. If things are more expensive, they substitute. They buy other things, and some of this may be negotiating. There's going to be a significant regulatory review economy-wide with the intention to improve productivity per capita. That's disinflationary. There's going to be, I'm sure, and Scott mentioned it, a focus on energy policy and probably pressuring Saudi Arabia and domestic producers to produce more. And so you'll have to look at the mix and how it unfolds, but I'd be careful not to prejudge it. I think the one thing I'm very sensitive to, and they'll be sensitive to, debt to GDP went from 70% pre-COVID to over 100%, and we're seeing the term premium on the Treasury market inching up, meaning we're paying more to sell duration in Treasuries. And I think managing the debt load and how we do it is going to be a significant challenge.
Rob, thank you for joining us this morning. I know it's been a long night. You've been asked to comment on a lot of different things too, but Robert Kaplan, we appreciate your time, sir.
Good to see you.
You too. Stock futures reacting to Donald Trump's electoral victory. You can see this morning the Dow futures at this point up by about 1,270 points. The S&P futures are up by 125. The NASDAQ up by about 330 points. We've also seen Treasury yields higher this morning. Let's get to our senior markets commentator, Mike Santoli. Mike, there's a lot to run through here.
There's a ton, Becky, absolutely. I mean, the market just in general terms obviously sees kind of green lights and dry road right ahead of it for now. And it was somewhat spring-loaded. I've been talking the last couple of days. The market got pretty hedged up into the uncertainty of the election. You have the average stock correcting. So now we have this tension release, and the market is trying to execute that 2016 Trump trade once again across the board. Now, we can argue about whether the preconditions are similar or not, but right now you see the Russell 2000 futures on a one-year basis now about to overtake the NASDAQ 100. Of course, the S&P is going to open at a new high
as well, even if it's up 20% already year to date. Now, on a 2-year basis, importantly, the Russell 2000 is still lagging the NASDAQ 100 by like 60 percentage points. So in other words, there's a lot of catch up for small cap, for value, for core cyclicals, for things that have been left behind, and banks making a big move today. Here you go. You can see that's a 2-year version of that. Want to put the moving yields in some context. A 2-year chart of the 10-year Treasury yield does that. Now, what we've done here for sure is we've kind of broken whatever downtrend we had from October of 2023, those highs. As Scott Bessett was saying, as Robert Kaplan was saying, we can argue down the road for how much of this is rising inflation expectations, how much of it is real growth expectations going up, how much of it is deficit concerns. That's not clear right now. What is clear is in the short term, it eventually becomes maybe a little bit of a pinch on some things like the Russell 2000. Today, it's not that. We're going to also, by the way, 30-year fixed mortgage is probably at 7.5 before we blink here. Take a look, too, at Tesla. Another catch-up move relative to its sort of peer group here. This is a 2-year of NASDAQ 100 against Tesla. You see it's pretty close to maybe going toward that high for Tesla back in, I think it was the summer of 2023. Finally, the volatility index getting smashed. This was actually a predictable and widely predicted impact of the economy. It's all about short-term hedging, about uncertainty. That's going away. We're back down toward 15. That's kind of the long-term average. Probably room for it to go down in the seasonally strong period for stocks in November and December.
Okay, Mike, thank you for that. I want to get more on these election results. President Trump, the president once again. I want to bring in Eamon Javers, who's at the table, who has not slept too much either.
No, just a couple of hours, really. Take a look at the electoral map, though, and then you'll see how we got here this morning. This map is going to stop mattering as we go through the morning, as we go through the next couple of hours. But you see Pennsylvania there in the red column for Donald Trump. That was the deal breaker for Kamala Harris. That was 19 electoral votes. We still do have a couple of the battleground states. Remember, at the beginning of the night last night, we were following these 7 battleground states. Pennsylvania, the big one there. You see Georgia also going, and North Carolina going in the former president's column. That was the deal breaker. We're still waiting for the upper Midwest. We're still waiting for some of those West Coast states. So there is still some result to trickle in here. Overwhelmingly, though, this will be seen as a huge, huge victory for Donald Trump. He was very happy about it last night, about 2:30 in the morning, addressing his supporters in Mar-a-Lago. Here's what he had to say, and take a listen to this, Joe, because it plays in to what you guys have been talking about.
We're going to be paying down debt. We're going to be reducing taxes. We can do things that nobody else can do. Nobody else is going to be able to do it. China doesn't have what we have. Nobody has what we have.
So Donald Trump there saying, Joe, paying down debt and reducing taxes at the same time. And the question for the Trump administration now, and especially on the back of your last interview, is how do you do that practically? Can you get into a position where you generate so much revenue that you can actually pay down debt at a time when you're cutting taxes? And can this incoming Trump administration avoid setting off an inflation bomb that does the same thing to their presidency that it did to the Biden presidency, with these tariffs being seen as widely inflationary? Those are some of the constraints that they're going to be under. The former president this morning promising a lot in terms of paying down debt and cutting taxes.
We just did,
What Scott said.
we just had Scott on, and he was talking about the first Trump administration. I almost read from a stock fund, perspective that past results are not guaranteed of future performance. Results. You can't just say, hey, we did 1.9 inflation last time. We may do 1.8 this time.
It's not plug and play like that.
No, and he also made it sound, though, Scott made it sound as if the president realizes that and is going to have to modify some of the things that was saying on the campaign.
Really interesting point of your interview, and I think you pinned him down on that to the extent of, is the former president promising things that he's ultimately not going to deliver because they're inflationary, because he realizes we just saw the political danger of inflation.
Right.
Trump's not going to want to get anywhere near that, so does he back off on these tariffs or back off on some of these other inflationary things?
Well, I was going to ask you this question, Eamon, but we have Michael Watley with us joining us now, chair of the Republican National Committee. I'll tell you what the question was, and Mr. Chairman, thanks for joining us. It's great to see you. Polymarket, the betting sites have gotten a bad rap, but they were so ahead of everything yesterday and so accurate that I got to ask you. Right now, the House, Republican House, 90%. Can you fill us in on it? Is the House going red? or I'm sorry, staying red?
Yeah, we're in a great position to keep the House. We had a great set of victories last night. President Trump, the greatest political comeback in history, with a mandate. And I think that when you combine that with the Senate seats that we had and our ability to keep the House, this is going to be what we need to move forward with the America First agenda. And I think that we're going to see moves that are going to allow this economy to breathe, this economy to grow, and for us to be able to bring down inflation, bring down costs, and really truly have an economy that's going to work for every American family.
You know, Michael, the markets themselves, there's an old adage that they love gridlock, and they don't say just Democrat gridlock when a Democrat's president. The markets like gridlock for a reason when either party is in power, but I don't know. The markets just don't trust either one to be unbridled. Is it? You would say it's unequivocally would be a great development for the economy if it was Senate, House, and President Trump?
Yeah, just look at the impact that we had during the first couple of years of President Trump's term. When we unleashed the energy, brought those prices down. You know, people talk a lot about tariffs. Tariffs are a tool to be able to get us into a fair trade agreement. It doesn't need to be free trade. It needs to be fair trade, and it needs to serve the American people, the American economy. We're very excited about being able to work with the House, work with the Senate. We want to extend the Trump tax cuts. We also want to see no tax on tips, no tax on overtime, no tax on Social Security. So there is definitely going to be a package that's going to have to move forward with it. We obviously, President Trump is going to be a leader for all Americans. He campaigned on that. We saw seismic shifts, black voters, Hispanic voters, Asian American voters that came his way. He reached out into the Bronx. He went into Philadelphia. He went into Detroit. He went into Atlanta. So, you know, he's not going to be constrained by typical Republican borders. This is the most big tent Republican Party that we have seen in generations. Having people like Elon Musk and Robert Kennedy Jr. and Tulsi Gabbard come on board, I think he's truly going to be able to build bridges and work across the aisle.
Michael, a couple things. One, you just referenced RFK Jr. Do you anticipate that he will oversee things like food and even as it relates to FDA pieces around vaccines and the like?
Well, now that the dust is starting to settle a little bit on last night, some of those discussions can happen. President Trump was very clear throughout the last several weeks. We do not want people measuring the curtains. We do not want people talking about positions in a potential administration. We wanted to be out there campaigning on the road. That's why we did
the president
three
himself
rallies
said that, though. I mean, the
we
incoming
will see
president.
we will see what those positions are all going to look like. I can tell you the formal discussions, now is the time to start that and start putting it together.
Right. And Michael, we've also been looking at the markets this morning and looking at specific stocks, winners and losers and the like, and just wanted to get your sense of maybe how you think about it. We've obviously seen Tesla shares have risen materially. Elon Musk appears to be will appear to have a major role in this administration in the future. I don't know if you saw his tweet holding the sink this morning superimposed on the Oval Office, very similar to the tweet that he had sent out when he first took over X. But I was also curious about things you were talking about, China and tariffs, things like TikTok, which former President Trump, now the new president again, has talked about keeping, despite some of the concerns about it being a national security threat. On the flip side, companies like Meta, which might have benefited if a TikTok weren't allowed in the U.S., but also his comments about Meta being an enemy. For those investors who are trying to think some of these things through, how should they?
Well, I think you just take a look at what the president promised over the course of this election. One thing that we saw during his first term in office, promises made, promises kept. He is going to make sure every single day that this is going to be an economy driven towards helping bring down inflation, bring down prices. We want real wage growth. We do not want the wage, decreases that we've seen over the course of the last 4 years. So I think we have a track record, and I think folks can see what he did in the past, but more importantly, how he approached it in the past. and he will definitely have a team of professionals who know what they're doing around him in the administration.
Michael, we had Scott Besson on, and I have no idea whether he eventually finds his way into the administration, but he seemed to imply he thought the IRA was toast. That'd be one of the first things that we might see the president, along with the Senate and the House, try to reverse. What about the CHIPS Act? What about, I don't know, take your pick, any of the things that the Biden administration did over the past 4 years, that all open to possibly repeal?
I would say at this point in time, all those discussions can start in earnest. We need to make sure, what the final majority is going to look like in the House. We had a great night in the Senate. I know that the leaders from the House and the Senate have already had, some initial conversations in terms of process. But we want to get to January 20th and hit the ground running. The House and the Senate will come in January, and we do not want to waste a lot of time. We have a limited 4-year window to be able to get this economy out of a ditch and make sure that we're working for every American family.
All right, well, we appreciate having you on. I guess on your resume now, you're putting that you were the RNC chair for this, what just hit you and your co-chair. Is this going to be right at the top there? I guess
it absolutely has to be. I think that when you look at this type of a campaign, you look at these results, it is a real opportunity to serve the American people, and that is absolutely not lost on any of us.
It might be more the American people than although I give you a lot of credit, and Laura a lot of credit, obviously. Success speaks volumes. Thank you. Appreciate having you on this morning.
Thanks, guys.
Thank you. We should also mention that crypto prices, they are surging right now. This is after Donald Trump's electoral victory. You're looking at Bitcoin at $73,000, almost $74,000 this morning. At one point it was, I think, even marginally higher. Want to bring in Galaxy founder and CEO Mike Novogratz. Mike, I believe that you were supporting the other candidate, but I'm curious, as you see these markets moving the way they are, what your reaction is.
Listen, it was a great night for the crypto industry, right? And if you listen to your last guest, Donald Trump, that keeps his promises. If you go back to the speech he made at Nashville to the crypto community, his agenda is very pro-crypto. J.D. Vance is pro-crypto, Peter Thiel, Howard Lutnick, Kennedy. He surrounded himself by people that believe in the industry, care about the industry. I mean, the crypto community showed up, right? There are now over 240 congressmen who, the crypto PAC thought were pro-crypto. And so we've got a Congress that is moving our way. We've got a president that's moving our way. And so for Galaxy, for the crypto industry, I couldn't be more optimistic.
And in terms of your optimism, it relates to the way this is going to be regulated, because now you have a bet going that there will be a Bitcoin reserve for the country. I mean, sort of
Listen, I'm not sure
play out the permutations here.
I think the biggest thing is the OCC, the FDIC, the SEC, the regulatory chairs getting direction from a president and a Secretary of Treasury that says, hey, we want to lead in this industry. Those three positions with someone who's open-minded to crypto and is pro-crypto changes everything. Allowing State Street and Bank of New York to custody crypto, allowing the banks to hold it on their balance sheet will bring in billions, hundreds of billions of participants into our ecosystem. And all of a sudden we'll start seeing decentralized systems launched and work. And so this is really a step change shift. Now, it's not going to happen overnight, right? You don't get a new SEC chair in a week. But over the next 1, 2, 3, 6 months, as these new people are put in these positions, I think you're going to see a substantial shift in the energy of this industry.
Mike, to the extent you want to throw out some names, who do you think might be up for this SEC role? I know we've had a lot of names thrown around for the Treasury Secretary role. We just talked to Scott Besson, and we had John Paulson on the program earlier this week. Those are two names that have been floated for that role. We also have had Jay Clayton and others. Who do you think would be the right person to run the SEC under a second Trump administration?
Listen, Hester Pierce has been there, and they call her crypto mom. And I know she's probably throwing her name in the hat. The chief legal officer at Robinhood has been thrown in. I'm not sure the exact person matters as long as they're very open-minded to this industry. And I think there's just no way Trump's not going to pick someone who, I mean, listen,
Right.
He's launched his own coin. And so, his family is engaged, he's engaged. And so I just think it's hard to you got to wake up and slap yourself in the face. We have gone 4 years of a very, very difficult regulatory environment, and that's all about to change.
Right. Hey, Mike, can you put your macro hat on for a moment this morning? I'm curious if you were investing more broadly outside of the crypto space, where you think the winners and losers are?
Yeah, listen, I think in the short run, right, emerging market currencies, China are getting hit. You're seeing it today. I'd probably be a buyer of Chinese stocks on any dip because I think the Chinese are going to respond with a big stimulus package. I like the yield curve getting steeper. There's one, I guess, wild hair out there, right? Elon Musk was really the only person on either side during the campaign that talked about America going bankrupt, that talked about this giant deficit that we have that we need to do something about. If that's the case, if they actually take him seriously and do something, and he's best had alluded to it, that would change things, right? That would change things in yield curve. It would change things in gold and silver. I don't think it will happen. I don't think Donald Trump has it in him after having just got this mandate to say, oh, I've got to tighten my belt. I just don't see it. I don't see us, Social Security and Medicare really are the two things you'd have to go out and attack, really unpopular politically. And so one of the reasons I still
So how much progress, therefore, do you think that Elon Musk can make then?
Very little. Again,
With little.
57%.
He doesn't do little. Mike, have you not watched Elon Musk? He's landing rockets between chopsticks. He doesn't do little.
Listen, it will be interesting, but you've got to let's see what the House comes out. I think the Republicans will win the House, but it's going to be very close. And so you're not going to have a giant majority in the House. You don't have 60 in the Senate. And guess who gets to decide who gets to spend money? Right? Congress, not the president. And so it's always easy to get euphoric about, oh, this is all going to happen. Listen, Social Security, Medicare, and Treasury financing is 57% of the budget. Add the military on, and you're at like 75%. And so you got 25% to play with. It's hard to cut a lot out, right? We have a $6.75 trillion budget. 25% of that, for Elon Musk to cut $2 trillion out of the budget, you'd have to cut 100% of non-Medicare, Social Security, and debt service and military. And so I'm hoping he makes progress. Trust me, if Harrison won, the first tweet I was going to send was, please hire Elon Musk to help on efficiency of the government. I really think it's an amazingly good idea, and I'm hoping he makes progress. I just think it's a lot harder than you think.
Right. For those folks out there thinking about equities this morning, especially S&P 500, obviously, which is weighted almost entirely, or so much towards the big tech names. Do you buy? I mean, clearly the market is suggesting that, but I ask because this is something you do for a living.
Yeah, listen, there's a ton of buybacks coming in the next few, 5-6 weeks. And so the supply demand tells you to buy equities. There's momentum on its side. We're about to take out, the recent high in NASDAQ. And so I think there's one last surge in equity prices. The risk, of course, is if the bond market doesn't like this, right? If bonds are down 2 points, if they fall another 3, 4, 5 points, at one point equities are going to say, hey, what's going on? But right now it feels like equities higher, bonds lower.
Mike Novogratz, thank you for joining us this morning on this election, the day after, as Donald Trump is our next president. Thank you.
Thank you.
All right, when we come back, continuing coverage of the 2024 election and the response in the markets. Investing legend Lee Cooperman will be joining us right after a quick break. Squawk Box will be right back.
Welcome back to Squawk Box. The markets reacting this morning to Donald Trump's victory in the presidential election and all the ripple effects of that in the House. We don't know quite yet, but at least the Senate, the futures right now have been up over 1,000 points really all morning long, just under up 1,300 right now. Republicans have flipped the Senate at this hour. NBC News is projecting a 2-seat majority, but there's still a number of races too close to call. The balance of power in the House is not the same as too close to call. In this case, too early to call, but as I pointed out a few times there, some of the betting sites do have a pretty solid probability that the House actually stays Republican.
Well, a lot of the seats that were up in contention that they thought
California
maybe would be flipped were not, and so that's why you're thinking that it's too early.
Could be Mike Johnson still.
Yeah.
Meantime, Donald Trump speaking overnight to his supporters. Here's what he said about the potential role, which we talked about a little earlier, of Robert F. Kennedy Jr. in his administration.
We could add a few names like Robert F. Kennedy Jr. He wants to do some things, and we're going to let him go to it. I just said, but Bobby, leave the oil to me. We have more liquid gold, oil and gas. We have more liquid gold than any country in the world, more than Saudi Arabia. We have more than Russia. Bobby, stay away from the liquid gold. Other than that, go have a good time, Bobby.
And we will see what his good time looks like. Obviously, there's going to be lots of debates about vaccines, the FDA, HHS, all sorts of things that could come under his purview or not.
All right, let's get straight to our next guest. Lee Cooperman is a billionaire investor and chairman and CEO of the Omega Family Office. Lee, you have been on with us for quite a while. I know you weren't supporting Donald Trump. I also know that you've been looking at the markets for a long time as a reluctant player in the markets. You were there, but you don't have great long-term implications for what you think might be happening. This morning, the equity markets, at least, are up pretty sharply, 1,300 points now for the Dow. What do you think with the Trump administration coming in? What does that mean for the markets?
Well, I think, let's face it, price earnings ratios are a function of a bunch of things: growth rates, interest rates, and confidence. And I expect under Trump we'll have more growth, higher interest rates, and clearly the market has more confidence. And that's what's being reflected this morning. And I was not in favor of Trump. I was not in favor of Kamala Harris either. I basically felt that we needed an adult in the room, and we didn't have an adult in the room. We still don't, in my opinion. So I would think that the market is reflecting a degree of optimism that may be uncalled for, but we'll see. I'm not short any stocks, which is a good thing. I am short the S&P above 6,400, and I don't think we get there. And I think the market is down next year, if I had a guess, but it's just a guess. We have guns and butter, and I think guns and butter are going to lead to crowding out. Now, whether he could do enough to reverse the trends, we'll have to wait and see. He does have a mandate, and I think you have to say that a country that elects Donald Trump is a country that's very unhappy. And, literally half the country is with him and half the country is against him. He didn't win by a major majority, but he's in control, and let's see what he does. I'm rooting for him.
Doesn't sound like it.
Well, I'm not negative on him. I'm negative.
We don't have an adult and have the very unhappy country, and it is what it is, I guess, Lee. We could be happy for a couple of hours anyway today.
You think the country's happy, Joe?
I think the country spoke in a pretty overwhelming fashion.
Because of how unhappy they are, though.
Well, the popular vote, too. I think that there's I think there's a popular vote of people that are happy. Yeah, Lee, I do.
Yeah, but I think that there's half the nation is unhappy, half the nation's happy.
Maybe either way.
Well, I understand that.
Will Rogers' comment was, if politicians did 10% of what they promised, there would be no need for heaven. So Trump is promising a lot. We hope he can deliver. I don't know. At the end of the day, the market's 22 times earnings, and given what's going on in the world, the Middle East, and given what's going on domestically, given our fiscal situation, I would think the market is very fully priced.
You did. Oh, go ahead.
None of the models work. The market is expensive against interest rates, yet it's up a lot, and interest rates are up this morning.
That's what I was going to point out. The higher yields that you're watching at this point, the 10 years at 4.44, so that's a 14 basis point move from where we were yesterday at this point. Not traumatic, but it definitely shows you where the bond market initially thinks things might be headed. And that may be a question of inflation. It may be a question of the yield curve normalizing. That's what Gary Cohn has been telling us over the last several days. What do you think, Lee?
Well, I said this in the last time I was on the show. I thought the Fed would cut short rates, but long rates would move up. And I think the Fed will cut again, and long rates will move up. We're nowhere near, prior to 2008, the 10-year government bond yielded in line with nominal GDP. So if you have real growth of, as I say, 2.5 or 3%, and inflation of 2.5 or 3%, the 10-year yield wouldn't be excessive at almost 5 or 6%. And the market does not allow for that in terms of its pricing. So, I'm not a trader, and I'm not short anything, but my inclination would be to sell stocks on strength. I don't think the market.
You said you are short north of 6,400, above 6,400 for the S&P, and obviously we're not there. This morning you got another 500 points to go to get to that. You didn't think we'd be there. So you're short above 6,400 of the S&P. Are you short anything when it comes to bets in the Treasury market?
No, I'm not. I retired in 2018, and I'm trying to keep my life simple. I have some health issues that basically slows me down. But no, I don't play the game as well as or as actively as I could did in the past. But I would say my general view is bonds are short and stocks are fully valued and will more likely go down than up from here. And that if one was a trader, then sell strength at the opening. And that the market will be down next year. But I'm not making any big judgments at the current time. Clearly there's a big wave of confidence. And when you think about the confidence, just think about it. 20 former members of his administration say he was unfit to be president. Tariff stuff, that's crazy. Think about it. Tariffs are basically a relief for labor. You're basically making companies to increase production domestically, which increases demand for labor. If you're going to limit immigration and you're going to throw a lot of people out of the country, that's going to push up inflation. So when you're betting on
if the tariffs are negotiating tactics, which is what we've heard from some people on his campaign, I guess we will see. But if the tariffs are a negotiating tool.
You heard the same thing about Kamala. I'm old-fashioned. I listen to what people say, not what they do. And basically, the idea that Kamala was not going to do anything to tax the rich, even though she spoke about that aggressively, and the fact that Trump is going to not do tariffs, you're relying on people doing the opposite of what they said they're going to do. And that's a risky proposition.
Where do you think markets would be this morning if Harris had been elected, if she was going to do all the things that she said?
We go down 5%. At the end of the day, forecasts beyond the year are more about politics and economics. The country clearly spoke. They're unhappy with the current conditions, and I don't think a lot of what Trump has to do is not going to create more happiness. Do we have to deal with the deficit? I think so. The deficit is out of control. 9 years ago, Simpson Bowles came out with the report. Everybody thought it was intelligently done. Nothing was done. The problem today is 3 times greater than it was 9 years ago. So, I have a conservative view. I'm happy for the country. I would be happy if Bernie Marcus was still alive. He was a good friend of mine. He passed away a couple of days ago. He was very strongly in favor of Trump. I'm sorry he didn't live to see Trump elected. But we lost a terrific individual. And, I've said in the past that I think that Trump's economic ideas were superior to the Democratic Party, but his conduct was just so unconventional, so offensive that I couldn't vote for him. And that was not even though I felt my pocketbook would be enriched by his being elected. And I voted my values, not my pocketbook. And I did not vote. I voted strictly Republican in the House and the Senate. And I did not vote for President either Trump or Harris. I wrote in Mitt Romney. No, he didn't have it.
Lee, how do you think your pocketbook is going to be benefited by this administration? Which policies in particular? The tax laws?
Well, the pro-growth policies will probably help my portfolio. Look, I'm going to make money this morning, and I'm inclined. I'm not a trader, but I'm inclined to think the market's overreacting. But I'm flexible. I'm watching things. I'm not short anything. I'm looking for low PE stocks. You can find plenty of them with good managements, free cash flow, and dividends to pay me to be patient, and a willingness to buy back stock. There I would be careful. Everything I look at bothers me, to be honest with you. You know, what the wise man does in the beginning, the fool does in the end. Twice a year I visited with Dr. Henry Singleton for 25 years. He invented stock repurchase and perfected it to a degree that nobody understood. In 1982, he was pictured on the cover of Business Week magazine as Icarus, the mythical Greek god that flew too close to the sun, whose wax wing melted and fell to Earth. So Business Week was very negative on what he did in 1982, even though he was buying stock back at 6 or 7 times earnings. Now, with the market at 22 or 23 times earnings, it's sharing buybacks on. You know, so you got to be flexible. But I say to myself, what the wise man does in the beginning, the fool does in the end. Look at Intel. Intel bought back hundreds of millions of dollars, billions of dollars worth of stock. Now they're dependent upon government assistance. Bed Bath & Beyond bought a lot of stock back, and they went bankrupt. You got to be very careful. So, magic. Let me just hang up here. Hold on.
Okay. Lee, want to thank you for joining us this morning. Lee Cooperman.
Coming up next, continuing coverage of the 2024 election and the response in the markets. After the break, we're going to show you some of the biggest movers we're calling the anti-antitrust trade. Don't go anywhere. Squawk Box, this very special edition, as Donald Trump is our next president, returns after this.
SquawkBox.com.
Welcome back to Squawk Box on this special edition of Squawk Box, the day after the election. Donald Trump, our next president. A lot of movers in the markets to watch this morning. Dow up, by the way, 1,250 points right now. I want to get straight over to Dom Chu, who's looking at some of those winners right now.
Sure, Andrew. So one of the things that traders are paying a little bit more attention to this morning outside of the traditional sectors from a regulation standpoint are sectors and stocks that were impacted by antitrust actions in the near to medium term, deals that were killed. The thinking being that in a Trump administration, you could see perhaps more ability to get deals done on the merger front. So I'm going to take you through a handful of examples to kind of give you an idea of what I'm talking about here. First is on the fashion side, a recently killed merger in the courts between Tapestry, the Coach and Kate Spade parent, trying to buy Capri Holdings, Versace, and Michael Kors. That was shelved because of antitrust concerns. Well, those shares are now higher, in part because of some of that perhaps incremental, slim optimism about what it could look like in the future. Another place to look at is on the airline side of things. These stocks are on the move as well. Spirit Airlines is up about 12.5%. Frontier Group up about 5.5%, and JetBlue is up about 4.5%. Remember, JetBlue had tried to put a deal together to buy Spirit that was then scrapped by the courts, so we'll see whether or not airlines are in focus. Another place to keep a close eye on is on the grocery front, where there are concerns about a deal done between Kroger, a grocery giant, trying to buy Albertsons. Albertsons is up 2.5%, and Kroger is up about 1.5%, so grocers in focus. And then one other place to watch, guys, Andrew, is on the Live Nation front. Remember, earlier this spring, the Justice Department sued Live Nation, alleging monopolistic behavior for live events. Live Nation shares currently up about 4.5% right now as well. So, Andrew, we'll maybe try to call it, perhaps casually, the anti-antitrust trade. It's certainly something that traders are watching this morning as well. I'll send things back over to you guys.
Okay. Dom, thank you for that report. We are going to be back in just a moment on this historic morning.
E201.
All right, everybody, welcome back to Squawk Box. The market's reacting to Donald Trump's victory in the presidential election. We've watched the futures this morning sharply higher all morning long. Right now, Dow futures up by more than 1,200 points. S&P futures up by 120. The NASDAQ up by close to 350. The Republicans have flipped the Senate. At this hour, NBC News is projecting a 52-seat majority at least. There's a number of races that are still too close to call. The balance of power in the House, also too early to call, but if you're looking at betting markets, if you're listening to some of the people in the know here, it is looking much more likely like the Republicans could maintain control of the House as well. Right now it's 178 to 203. As a result of all of this, we've seen lots of moves in the market. We mentioned the futures already, but the Treasury market has been the other place to watch because Treasury prices have come down. Treasury yields are up this morning. Right now the 10-year is yielding 445. That's about 15 basis points above where we were at this point yesterday. The 2-year at 427. Still a lot of questions about what this is all going to mean, which policies will be inflationary, which will be pro-growth, and how that all plays out. But obviously we'll be watching all of that in the weeks and months to come. We've been talking about the markets all morning long, what this is going to mean. We've been talking about the policies all morning long, and we will continue with that. Right now, we're going to hand things over to Squawk on the Street, but thank you for joining us this morning, and we will see you right back here tomorrow. Take care.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber, and Post 9 of the New York Stock Exchange. Stocks looked open at all-time highs as markets reprice across the board on Donald Trump's decisive and historic political comeback. The dollar and small caps are soaring. Volatility collapses even as control of the House still remains unknown. Our roadmap begins with the stock surge following that historic election. Donald Trump becoming the first in over a century to win back the White House after losing it.
Plus, we're keeping an eye on Tesla shares because they're on a tear. Of course, Elon Musk was amongst Trump's biggest and most vocal backers, and investors are betting Tesla will benefit from his victory. Also on Earnings Watch, keep an eye on shares of CVS. They're rallying. The company does hold off on providing fourth quarter guidance. Meanwhile, shares of Supermicro, they're headed in the opposite direction, as it says it has no timetable for giving us its annual results.
Let's, of course, begin with futures surging today after Donald Trump's stunning political comeback. NBC News projects he has been elected the 47th president of the United States, defeating Vice President Kamala Harris. Trump secured a second term after surpassing the 270 electoral votes needed for victory, and he's on track to win all 7 battleground states in a race that many pollsters predicted would be neck and neck. Jim, I'm reminded of what George Bush once said about a midterm. This was a thumping.
Yeah, this really was. This was what we used to call, in political science, a critical election, meaning that there's a watershed that changes pretty much everything. And it means that it goes from, say, in this case, liberal to arch right-wing. And I think that we should realize, from our point of view, that there are 2 markets, not one market. There's one market that we all know, which is the stock market, and that is screaming. The other market that is absolutely cratering is the bond market. The bond market is somewhat larger than the stock market, and we have to recognize that some of the prices we see could be undone by the bond market, as they would be, David, any other day of the week for the last, say, I don't know, 100 years?
Yeah, certainly rates are going to be an important component of the tapestry that investors try to consider, and we'll see whether that Treasury yield remains elevated. Of course,
Not being talked about.
Well, we've talked about the possibility, certainly, of a Trump presidency, including significant tariffs, which might be inflationary. Although, again, much of this remains unclear because you don't know what you're going to get once he actually takes office. And taxes coming down, which conceivably will send the deficit higher, which will also potentially pressure yields, and prices obviously coming down. So we'll see, but this is certainly a reaction, one that we've been seeing a bit in the bond market, certainly in the weeks prior to the election, as many anticipated.
That's what it turned out.
Potential
The
Trump
October
victory.
thumping of the bonds may have been anticipating this, but to go back to what you're saying, Carl, when you have this kind of repudiation of a regime, and the repudiation, the regime is regarded as overly regulated, as anti-business, it is anti-growth. And this administration is regarded as pro-growth, anti-regulation, and frankly, all systems go for us. The problem is, as David just said, you can't pay for it. But as we had some great guests last night, you did. Can I just say you did an unbelievable job? And that you're here is so exciting for me. I mean, come on. I mean, he's here, and it's
Also,
like
he looks great.
As do you both.
Nah, I look like but I will say that we have to accept the fact that Richard Fisher, who's a great economist and also a great businessman, is saying at some point we're going to have to pay the piper for the budget deficit. And I think there are probably some people who say, you know what, never going to happen. We're going to grow our way out of it, Trump. And then people look at the screen and saying, oh my, where are they going?
That's where the House, and obviously Carl mentioned that at the top of the broadcast, the House becomes important because if Republicans maintain control of the House, you'd expect that he can move tax legislation pretty quickly.
Right.
Given the majorities in both the Senate and the House. And we may be getting answers on sort of the deficit and what that's going to look like.
We actually saw yields come off a little bit late last night when the House became a little cloudier.
Right. Well, I think that you have to have. There got to be some people in Congress who just say, you know what, we're headed to 7%. The problem is, until you get to 7%, people don't take action. 7% being the level I've always felt that is the end of the housing market. Now, for instance, when you see rates the way they are today, we should be selling the housing stocks aggressively, because every single time that rates have gone to this level, we sell them. I don't think today we say to yourself, you know what, people buy houses anyway because President Trump is now the president. That doesn't work. So everything goes up, and then by midday or tomorrow, we start looking at what shouldn't have gone up. And what I'm trying to get people to do is anticipate what should not have gone up because of the bond market.
So you are in a sell the news mode to a degree?
To the ones that are directly impacted. If you were looking at mortgage rates and you felt that they played a role in housing, as we know they did during the month of October, then I think you want to double your sell on housing. Because these are about rates. And tomorrow what will come and say, wow, mortgage rates just went up big. What's that have to do with Toll, with Horton, with Lenore? We have to remember that there is a market that is directly dependent on the bond market.
Without a doubt, and that will have an influence. That said, if you lower corporate tax rates, you can see what the potential reaction would be. Obviously, the Russell is having quite a well, we haven't even started trading yet, but looks to be up substantially.
The small business is the backbone of Larry Kudlow of the United States. Maybe Larry Kudlow becomes Treasury Secretary.
I don't think that's been discussed as a real possibility, but we will certainly spend plenty of time speculating on who the economic team will be.
But I'm just saying that this orientation is different from the first. The people who were with President Trump the first time around, for the most part, are not.
That is true.
That's my
but it will still be equally important as to who he appoints for us to Treasury. You know, the name, I mean, Paulson obviously has been a guest on our air many times. John Paulson, the hedge fund manager. Scott Bessent has certainly been a name people have thrown around. But who knows? You know, that speculation will start in earnest very soon, I'm sure. And will be important to your point, Jim.
We have to try to anticipate everything. There's so many winners. I'm not trying to be a downbeat about stocks. I'm just saying, please remember that everything's going up, so you have an opportunity to be able to scale out of some stuff.
I'll tell you one winner, guys, is the M&A market.
Okay.
Banks up 6 this morning.
You're going to be more relevant than ever.
Do I? Thank you, Jim.
No
I've been
problem.
looking for that opportunity.
I just probably should throw that in.
Yeah, my old beat there of M&A is most likely going to get quite busy. I mean, you can just, you know, in fact, even this morning, a couple of CEO conversations I had in the media industry, for example, which
is David Zaslav the big winner? Is Zaz the big winner?
I think the flexibility that many of these companies will now have that they felt they did not under the current administration is going to be significant, and it should allow for a lot more potential deals in industries that are desperate for some level of consolidation. Obviously, when it comes to our parent company, we've been talking only recently about this possibility, strong possibility of a spin-off of the cable networks of NBC Universal. That includes ours. Happy to go into that in more detail. But if you're Comcast, does it allow, for example, for you to consider a charter deal?
Exactly what I was
for the cable
thinking,
side,
David.
because that's certainly something. I mean, you can go down a lot of roads. Guys, remember Exxon and Chevron? Just to put this in perspective, talked about a deal. Now, there is no way you could have ever imagined a deal like that previously. I'm not saying in any way that that is likely to happen, but it's the kind of thing you can at least contemplate again, because there is not going to be nearly the strictures on consolidation that there have been in this administration.
No, you're right. I mean, I've known Jonathan Cannon for a long time, and I won't try to place him today in another job. But I can tell you the job he has currently is not going to be the one he has. He's the head of antitrust for the Justice Department.
No.
Now, Justice Department is very anti-Apple, very anti-Alphabet. They have, at one point we were thinking they were looking at NVIDIA, not even clear. But I will tell you that's all over. Now, there was a case.
Well, and also, by the way, back to entertainment, the Apple's of the world or Amazon's, I mean, conceivably could step up for the big purchases that we could not imagine under the current administration. So, there is going to be, yes,
I don't think Lena Khan's staying. I don't know.
Well, she can stay as a commissioner, but she will not be chairman. So,
right,
until her term expires.
But she doesn't care for Amazon, and I think that the prime people are going to take over, David, which is pretty much everybody in the country
when it comes to M&A and to consolidation. Now that said, we can see one-offs. Albertsons, you've seen that's moved up. We can see one-offs conceivably, where, as we know from Time Warner and AT&T, if President-elect Trump takes a dislike to it, you may see outcomes you would not have anticipated. But that said, broadly speaking, believe me, everybody is starting to strap in right now and get ready.
I would say, in terms of David Zaslav and Warner Brothers Discovery, I think everything is now possible, and the law model reflects that no one could buy them.
Really?
But they not be able to buy others.
What else does he have to say?
It's definitely
everyone watches the damn show.
It's broadening our range of what is possible. Jim, as for trip lines, Solar's down 10 pre-market.
Ooh, man.
We got some downgrades of 5 below. Retail tariff is a first order effect.
I think 5 below is now 10 below. And no one's going to be wanting to spend $9 for that stuff that's sold there. 50 to 60% of their business is sourced from China. Shark Ninja is now like the shark at the end of, well, let's just say the R she blows. Shark Ninja.
Shark. Oh yeah, no.
Yeah, because they're almost entirely China. You know, we need a bigger boat for them.
I mean, Carl, I don't know what are the expectations when it comes to the IRA and potential rollbacks of certain provisions in the Inflation Reduction Act, which really in many ways included, obviously, a lot of things in terms of dealing with climate change, but you can see the reaction there. That said, it's interesting, of course, Tesla shares are up sharply. We said that at the top. Elon Musk, certainly a big beneficiary here of his significant support for President-elect Trump. But he still sells EVs, which until recently was not something that was embraced.
You favored American EVs.
Yes.
Unionized. That's out. That's out.
Right.
Remember when the head of UAW
He does make a lot of them in China. They don't get sold here, though.
They're not going to get sold. The tariffs are going to be...
That was the other question among some circles last night. Is this positive or negative for legacy OEMs in this country?
I think it's very negative. But look, in the end, Mary Barr will buy back every share of that stock. Ford has no buyback, and that is a very big disadvantage. David, one of my newfound favorites should not be up today.
Which is?
Because of the CHIPS Act.
Intel?
Yes.
Yeah.
And stock's up very big. And if you can figure out why that's up very big, because they don't do better from protectionism. The CHIPS Act, they want to scale. Johnson wants to scale back the CHIPS Act. They are the CHIPS Act. So that stock being up today is a little fanciful, frankly.
It's a little questionable in your opinion?
Questionable.
Yeah.
Questionable. Not Shark Ninja.
No.
No. Shark Ninja is, well, turtle. What is it, the ninja?
Right, yeah. Well,
Ninja Turtles?
Ninja Turtles.
I mean,
it's a Ninja Turtle.
Shark has to keep moving forward in order to stay alive.
Yes.
I
think what we have here.
Yeah, kind of trout ninja, maybe bass ninja.
So many interesting metrics coming in from exit polling last night. Remarkable, just gives you a sense of how much of a drubbing this was for the Democrats. Our senior Washington correspondent, Eamon Javers, joins us from the NASDAQ to talk about the president-elect's victory. Morning, Eamon.
Good morning to you, Carl. If I could, let me just throw a little bit of cold water on this sort of antitrust M&A boom time that you guys are talking about. One thing to watch for here is who Donald Trump puts in positions of power over antitrust. And the question is, how do the populist conservatives who like a strict antitrust enforcement fit into this administration? Because I'm not sure I see a world where Donald Trump says, you know what, forget it, we're not going to push forward with breaking up Google. We think Amazon is great, we think Apple's great. The tech giants in particular, I think, will still be in the crosshairs, and personnel is policy. So watch for those populist Republicans to try to get their arms around antitrust policy. And what that means is, maybe, hey, these guys are big corporate elites. Let's not let them get bigger and more powerful. Let's push for more breakups. Let's use government strength to get the result that we want for the Republican working class voters who elected us last night. That's one thing to watch for. The other thing I would say to watch for is the future of Jay Powell. We had Scott Bessent on Squawk Box this morning from Key Square Group. He's a key Trump economic advisor. He sort of walked back his idea earlier of having a sort of a shadow Fed chair out there. He said he was slightly misquoted or taken out of context. But then he said, what we should do is nominate a Fed chair early. Jay Powell's term is up in May of 26. So the question is, how early is early? If you nominate someone really early, you're talking effectively about a shadow Fed chair. Donald Trump is somebody who has suggested that he wants the president, that is himself, to have a voice, if not control, over monetary policy in this country. Does Jay Powell have the appetite to fight Donald Trump on that? How would Jay Powell feel about an early nomination of a Fed chair who comes into power with a different directional sense and who's talking to the media and undermines Powell's ability to communicate? All of that, I think, is still TBD, so we've got to watch for a lot of these personnel decisions. That's going to start to shake out in Washington and in Mar-a-Lago over the next coming hours, days, and weeks, guys.
Amy, congratulations on being the first person I absolutely know that hasn't gone to sleep since Monday. I do want to push back a little bit on the M&A world. The people who are in charge right now, antitrust, FTC, they are ideologues. And ideologues are hell-bent against companies that make a lot of money in this case. I think there'll be animus by one-off. I mean, remember the one-off Amazon off the U.S. Postal contract? But the people who will take over the agencies are not ideologues, and they're not necessarily populists. I think they're people who feel like, well, Amazon Prime is a great thing for America because the prices are lower. Alphabet is doing some interesting things. They will be. The first case can still happen, remember, because that was brought by antitrust under Trump.
The Amazon case or the Alphabet case?
Alphabet
The
case.
publishing
But I
case.
just think that in general, I'm going to push back on the animus. When I speak to the people who work at those agencies, they're anti-business. And I know that we can be pro-consumer and therefore be against big companies, but anti-business is the anathema of an Apple. I don't see Apple coming under big fire from anybody in this administration.
Well, I mean, anti-business, and then the populist Republican view is anti-corporate elite, right? Seeing corporate elites as people who don't share our values, who are embracing DEI, who are embracing transgender rights and those sort of things. You've seen this outburst of populist rage against American companies, and you've seen Donald Trump willing to sort of direct his fire, as you say, one-off on individual companies. You saw John Deere in the crosshairs recently, but Google, this Google case is just not going away. And I do think that the Republican populists will make a run at some of these jobs inside this administration. And so we just got to watch. I'm not saying you're totally wrong. I'm not saying you're even mostly wrong. I'm just saying we just got to watch the personnel here and see who gets these jobs. Because this is not
I think there are two
Absolutely.
different things at play here, though. I mean, there's one in terms of, as you point out, sort of the focusing on monopolies and/or just the enormous power of these platforms. To your point, is and whether or not populists will continue to take aim. Another, though, is just broad consolidation from an antitrust point of view that I would argue is going to be far more lax under a coming Trump administration. But you're right, and if J.D. Vance has some input on the administration's appointments, you may well be right in terms of that.
And a lot of it will depend on the public posture of the CEOs toward Donald Trump. Right, Donald Trump will target people he feels are political obstacles or economic obstacles to his agenda. But if CEOs embrace Donald Trump, I think Donald Trump will embrace them right back.
Right, but I would say in a counterpart that David will certainly know, David, in this case, it's not business, it's personal. The opposite of a famous movie that you like to talk about.
I do, yes, and that is true. and that is true. And we made that point as well, Eamon, and you have as well, that it does come down to that. Obviously, we know because we had 4 years of President Trump in terms of the approach to antitrust can be very personal.
I'll tell you one thing, it's going to be so darn exciting you won't believe it, right? Because if it's one off, I remember when Amazon, it was in April, I was on vacation, he said, the post office, blah, 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 and it was actually wrong. But the next thing you know, it was the greatest buying opportunity I've ever seen for Amazon. It was the last one, the last get on board. We were going to have buying opportunities galore because of statements made by the President of the United States.
Kind of puts into context some of the reported moves by executives to get in and start establishing rapport with the president-elect.
Yes, we know people who told newspapers don't take an opinion. Right. We have a lot of people who would not come on our shows because they were afraid. And maybe in retrospect, because it's not business, it's personal, their stance welcome to their shareholders.
Eamon, thanks. We'll talk later in the morning. Of course, the street is gearing up for big gains, huge gains at the open as we look for stocks to open at all-time highs. We'll get to the dollar. Euro's on pace for the worst session since Brexit. Oil and gold down on a strong dollar. We'll get to Bitcoin, some implications for corporate credit if we do get a sweep. More Squawk on the Street continues in a moment.
You got this.
We're going to definitely dive into the effects of crypto on last night's election results. You can see what Coinbase, MicroStrategy, and of course the currencies themselves are doing in the wake of Trump's historic victory. We'll get the opening bell in a few minutes, and don't forget, you can catch us anytime, anywhere. Just listen to and follow the Squawk on the Street Opening Bell podcast.
There's no way the supply just hit an all-time high again.
Let's get to a mad dash. We have an opening bell, of course, 4 minutes from now. We are looking for a sharply higher open across the board. And steel companies also potentially beneficiaries of whatever the trade policy may be under an incoming Trump administration.
Right. I mean, I'm trying to figure out to help people go through this thicket of what really should be up and what shouldn't. And Nucor should be much higher. And the reason is that there has been a level of slothfulness by the administration of trying to stop transshipment Chinese steel into Mexico and then our country to get around. And that's going to be over. And I know from the president's people, that will be over.
That will be over?
Yeah.
They will end that?
They will end that. And they will end that about as fast as you can say North Korean missile and missile headed to North Korea.
Right.
No more North Korea either doing that stuff. No more, the various countries that have alienated us, they do badly at this regime. But that's not a stock. What a stock is Nucor, and this is right that it's up 16 because they're the company that's been most hurt by Mexican steel dumping. It turns out to be Chinese steel. So this president will find out what China's
is also
doing.
up, obviously U.S. Steel as well.
Right.
He's still a question there. So the $55 share all-cash deal will be acquired by Nippon Steel. Now, President-elect Trump has said he would oppose the deal. That said, some of those workers at the Mon Valley may have made it clear to him, maybe not.
But Cleveland Cliffs is going to be back.
Yeah, well, I know. Lorenzo's listening, and I'm sure he's texting already saying, what are you talking about? That deal's dead. Obviously, Cleveland Cliffs also benefiting.
I think Cleveland gets it, but I do think that Nucor is not done going higher up 15. Okay. That's how great this is for Nucor. All right? It's brilliant for Nucor.
Couple of notes this morning looking at the effects, say, of deportation. B of A says they expect it to be a mild, persistent headwind to labor supply and GDP, being offset by deregulation.
I think that's true.
Energy production.
I think that's true. I also think, though, that people are going to begin to talk about agent force and sales force, which is doing the job of individuals. I think they'll start talking about the robots that Tesla's making and how that's going to do the job of the individuals.
That's the other big question. SaaS and IT services, is that part of the government fact that Elon Musk will be sussing out?
I think definitely. By the way, I think that when you look at what Palantir has done, upending the way that contracts are given, upending the way that hardware gets all the contracts, Palantir is a natural buy here, even as it's very overvalued on an earnings per share basis.
Or on a revenue multiple.
But they represent a scheme that I think that Trump would very much endorse. Which is that we got to get out of get big hardware and just spend a fortune.
Every countries around the world will be
Hello.
the continued advance of AI and what that means, and it will be.
Enough of you guys.
Yeah, I mean, you're looking for a pretty big reversal in bond.
That's right. Yeah. So we feel like the yields will come back in quite to.
Look for a little knife. I'll be right back. Over here. It's in my boosh. Bitcoin at 74, almost 75. Donald bounced up after the win. Huge SPX bounce, so I'm going to look at the put here. How much is that? Oh yeah, that's too big. Too big. So look at the puts. Too big. Way too big. SPX, the 6th. Oh God, they're so fucking high. Today's the 6th. Oh, man, they're high. Well, the 5860s, if I get one, put oh God. Not bad. $58.60. I'm getting ready to grab me one here in a second. Right about now. $7.20. $7.20. I've got one. Should have grabbed one more under that. That'd have been it. Drop. Right about now, grab another one. Come back to the 9. Grab another one. There we go. Average is 670. Knife on Meta. NVIDIA up 462. Tesla. They were pumping Intel yesterday. IWM's up today. Coin up 35 bucks. Oh. This ain't good. Drop. I gotta get 670 out of the SPX puts, the 5860s. I'm tempting to grab 2 more, but we'll just give it a little bit of time here. If I grab 2 more, it'll really bring it down. Come on now. No, 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 no. Come on now. Ooh, yeah. Oh, there we go. Finally. We're even. Now we get out even here. Or we see if we get a double bottom today. And I think we're warranted maybe to hit this 21. And then gain respect. Let you get out now and you get out even. I should have bought more. I knew I should have bought it. Damn it. 540, I would be up 200. I'd be up real nice right now. $200. 260. Drop. Anybody take these puts?
Yeah.
Oh, damn it. Always clean? $9.20, yeah. Rake it in. 980, 990. Bringing in the cheese. Goodness, how delicious. Bringing in the cheese. 970. Give it to me. Yeah. Look at that. You know, I have a feeling these things could really pay off today. Not that I'm bearish in the market. I'm just playing. There it is right there. 980, 990. Victory. 1060. Magnificent. Go ahead and get that grade pen out. You might run out of ink today. $10.70, I'll take it. Yeah, man. Get that grade pen out there, brother. Make sure you got plenty of ink. Bobby, are you okay today? I figure he's probably under 27 years of age, probably. He needs a little bit of guidance, but that's why he's sticking in this room. Can you imagine these options? Look at that. $11 a piece. Magnificent, get that grade stick out. You're regretting not buying them? Roaring Shitty, do you know who I am? Do you know who I am? Oh, you're still in them? Whoa, big C. I got an appointment today. Good. I have an appointment today. James, today you get your second shingle shot. Well, she started naming all these other shots off, and I said, I don't want none of them. Just give me the shingle. Are you ready for your other COVID shot? You ready for this? They come up with some other one, too. I said, I ain't taking them damn things. I learned my lesson already. Don't want your damn shots. Do you understand why I said that was way too much of a bounce? I mean, that's the simplest trade you can make right there. I mean, that was like $600. I'm done for the day. 2 contracts. And it could have been a little bit more. Could have been double that. 100%er. 600. Good job, roaring shitty. Oh, wrong password. Here's a mess. Okay, I'll be right back. I got my trade out of the way. That's the good thing. I like breaking that ice. Oh, look at that. It's another Tesla. Well, 1, 2, 3 bottom on Tesla. Tesla 1, 2, 3 bottom.
Diagonal here, where I'm going to go out to the November 15th monthly cycle, 9 days to expiration. I'm going to buy the at the money call, the 170 strike call, and then against it in the near term November 8th weekly options, I'm going to sell the 182.5 strike call. So $12.5 wide bullish call diagonal here. I'm paying roughly about a $5.5 debit for that. He's probably trading closer to $5 at this point. But that debit you pay is going to be your risk on the trade. It's $12.50 wide call diagonal, and you're only paying $5. Why is that? Well, on aggregate, you're buying about a 73% implied volatility in those November 15th 170 strike calls, and then selling about 134% in the near-term November 8th weekly option on aggregate in that option series. So that dispersion between the implied volatilities lowers the price of this call diagonal. You can see here from the risk profile, you want it to go up towards 182.5, but anything maybe above 172, 173 is going to be profitability on this type of position. Taking advantage of those implied volatility levels to lower the price of this bullish strategy, and you'll have that opportunity to roll that short option one time, collecting more credits, potentially increasing potential profitability. But you definitely want this thing to grind higher from these levels. You've got about 9 days in the position.
Okay. All right. Like that. Seems like a decent approach. Got some time.
Yeah.
And capture the earnings plus a little bit. So looking for it to drift higher.
Yeah.
How about for ARM? How do you structure something that doesn't require further valuation? Like, you're going to go against it or what?
No, you're going to take advantage of high implied volatility going into this report.
Okay.
Angelo's price target about $150 over 12 months, right? You got to remember that when they give those price targets, it's over a specific duration. So I looked at something really short term to take advantage of that higher implied volatility. If you think the stock's going to trade within a range, this type of strategy takes advantage of it. I'm selling a short iron condor in the November 8th weekly cycle that expires in just 2 days, really short-term positioning, where I'm going to sell an out-of-the-money put vertical to the downside. I'm going to sell the 132 put, buy the 127.5 strike put, short $5 wide put vertical. And then on the call side, I'm going to sell the 155 strike call, buy the 160 strike call. So a short $5 wide neutral iron condor. I'm collecting roughly about a 210 credit on that. That takes my break even all the way down to just under $130 on the downside and at 157.10 on the upside. So you can see here, I profit in a nice wide range, but I don't want that this stock to move that 1 or 2 standard deviations outside of those short verticals on either side of this one. And implied volatility levels will get crushed post earnings. So if it remains between those two break evens, you're going to profit nicely on this one because implied volatility levels are going to come in. That'll contract the price of this iron condor. And then also, you're getting closer to expiration, so time decay is working in your favor also.
All right, there you go. I like that approach too. So you can basically bet on it, staying within the range.
So Jimmy called a pullback. We got it to pull back. Made a good buck on that there pullback. And I got out of the trade once we hit my moving average. Which is what? That's right. The 21 EMA. Now the 9's not crossing over the 21, so what's it tell you? It means we're still bullish, right? Ooh, this is Horseshack. Jim, you're right, man. Washington was down there at the Bronx, and some guys were trying to pick up on him, and they found out that Trump was elected, so too bad, trannies. The worst day ever for the child molesters out there was today. Yeah, I said it. Boom! I'll be right back. I think we're going to have a great 4 years. Once we stop these wars, the world will excel. See, I see the next 4 years of being visionaries instead of living in the past like we have the last 4 years. We're going to be visionaries. And if you have that kind of outlook, I think that's going to be great for the market. One thing that I've always believed in was the American dream. Even when I was a little kid, I still have, like it was just yesterday, I have dreams of me sitting in the back of my dad's car asking, what's that big black car in front of us? Is that a Cadillac? Yeah, son, that's a Cadillac. I just couldn't take my eyes off of it. So I started selling Kool-Aid and mowing yards. Well, the other kids were out playing baseball and basketball. I was trying to make money to help feed mom and dad.
We'll find out in due time, but the popular vote also in former President, future President Trump's favor by a pretty good percentage as well. Volatility drops out of the market. VIX, though, finding a tiny little bid from the open, not much. We're going to continue to talk about the
China had a pullback.
Policy-wise, Mike Townsend, Schwab policy expert, joins us this morning. And of course, we've still got earnings and stuff to look at on a company-specific news flow basis, like Lyft. We'll trade the ride-hailing business and prepare for the earnings. We're also going to look at the charts. Mr. Rick Ducat joins us for a closer look at the 10-year Bitcoin and the Russell. I got Alex Coffey with me in the studio, host of Next Gen Investing. What do you think of this market, Alex?
Yeah, a couple things. I think one of the big messages from the market, I think, is a takeaway, and it's not unique to the election or anything, but the election, I think, derives more emotion in people, so it's a good use for this particular lesson, which is the market and those who manage large sums of money have a stoic nature to them that is required.
Before
media networks and anything else, we're going to make the calls. The market starts moving and starts pricing things in and increasing probabilities.
Mm-hmm.
The market doesn't wait for certainty. It doesn't wait for you to feel better or get over your celebration. It just keeps going, and it's on to the Fed now. It's priced things in and it moves on. And I think that's the big lesson in something like this is it brings emotions out in everyone. Everyone's got an opinion one way or another. But the market doesn't wait for you. And it's the same for a Fed meeting. It was very evident last week as well. We'd get hit with Microsoft and Meta earnings, and then it was Apple earnings and Amazon earnings. And it just keeps coming. More events, more things that move the market. As far as the reaction here, I'll leave the exact sort of nuanced policy things to your discussion with Mike Townsend. But from a high-level standpoint, one of the things that I believe Trump as a candidate and now as a president-elect is seen as more pro-American business, and so you do see the Russell 2000 outperforming, and that makes a little bit of sense.
Tax cut possibility.
Perhaps, and also tariffs as something that might boost growth, but also boost inflation a little bit as well, and you can see that dramatic move in the bond market.
Mm-hmm.
But you see the banks higher, so how is rates higher on that end, but you're still getting cuts elsewhere? How does this all make sense for the banks? Well, I think a couple things. Kind of seen as a pro-business, less regulation candidate, but also, we know they lend on the long end and they borrow on the short end. So if you're still going to get a cut, from the Fed, but then you have higher long end rates, that should in theory be good for banks.
Yeah.
And you
absolutely.
also you look at
Yield
sort of
curve
these
steepening to the
dynamics.
extreme.
Exactly, it's a situation where, hey, maybe costs remain a little bit elevated, but maybe we grow our way out of some of this too, and that's being seen as a positive take. Now, as far as where things shape up as we go on, I mean, these are dramatic moves. VAR shock risks are real, especially when you see these kind of moves in the bond market. And I think that's why you've already seen the market pull back from highs a little bit, just because big fund managers have rules they got to follow. And when big volatility comes into the market, particularly in things like the bond market, some of those rules are triggered, and de-risking can happen. And so you maybe see that a little bit underway today. But all things considered, this looks to be, and we talked about this a little bit yesterday on the panel, one of those situations where it wasn't a certainty by any stretch, but it was becoming an increasing probability that there was going to be a decisive victory one way or another. Looks like we got that. Market can move on. Dragging this out was the risk, and that didn't look like it's going to happen.
Bingo. So that's number one. VIX comes down. Specific Trump policy-wise will be something that unfolds over time, but I like the way the generalization, I think, matches with what the market is telling us. Deregulatory potential, tax cut potential, things that could be positive for the bottom line, particularly on the bank side, I think is important because you've got the overlap of deregulation potential as well as also the liftoff in rates, which adds on to what's already been happening. If you look at the weekly chart for yields, this week's candle still looks totally in line with the last 7 weeks, basically, since the Fed cut. What I feel like, the other thing you mentioned that I want to explore a little bit more here for a minute is Powell and the Fed. I mean, this to me is like one of the biggest unknowns right now, which is how are they going to handle interaction with the Fed? We know that the Trump team has talked about the dialogue and the willingness they are that they are going to bring to the table to talk about the Fed's policies out in the open, and that we've also heard his team when Vivek was on, who's been promised a role in the administration, an advisor, Vivek Ramaswamy, he told us that the Fed has been part of the problem as they see it for inflation. So, I mean, look, I personally couldn't disagree more with some of those assessments of like what the Fed's role has been in this economy. But regardless of whether or not you think that stock market's generally been favorable to Powell, what's on the table here?
Well, I'm going to leave a lot of the ifs to we'll find out.
Sure.
And there's no answer yet.
But I feel like there are ifs.
We pull up a chart of /DX because this to me is the variable that you can't ignore. And so the Fed has been easing policy, or at least began an easing cycle, perhaps, because of dollar strength. That's what I typically look at this is the linchpin as to how the world's economy chugs around. This is the availability of dollars. This goes to your conversation with Brent Johnson you had on overtime not that long ago. This move is dramatic in the dollar. I know it's 5% or so off the lows, but the dollar doesn't move 5% in a month.
No, this is the biggest overnight move, by the way. Probably the biggest surprise, too.
And this is in the heels of what's an expected cut tomorrow. So you'd expect, hey, cut that should weaken the dollar. Well, it's doing the opposite.
Yeah.
And we know why. It's because there's big long end moves. There's this, pro-growth, move that's happening. But the Fed is going to, if they were already trying to weaken the dollar, and now they have this force to the upside, perhaps tariffs as well, this more isolation, protectionist type of trade strategy, that's going to make the dollar move relative to not having those strategies.
Right.
Not saying, hey, it's going, dramatic. I'm just saying that's upward tailwinds for the dollar.
Yeah.
That actually might increase the likelihood that you see this cutting cycle, remain. I know that seems counterintuitive, but if they were already trying to weaken the dollar and now they have this dramatic upwards force on it,
sure,
they're going to have to work overtime to just do, the same amount of work.
Well, I mean, one could definitely, I think, dispute the characterization of them wanting to dilute the dollar as like a policy initiative. I think.
Okay, here's our flag.
That gets associated
I'll
with
go make my
lower
coffee.
Rates, but their goal is their supposed mandate, right? Employment, inflation. But I'm totally with you on this being a huge move that has
Weakening dollar
information in
versus
it.
other currencies, I should say. Not
Sure.
weakening dollar for goods for Americans.
Sure. Only problem is, as to your point, as they've been cutting, dollar's been going up, yields been going up. Can you imagine then the scenario? This is the type why I would say there's kind of black swan potential in this that I don't think people are appreciating if we're on the Fed tomorrow and Powell is. One, is he going to see his term through all the way, which is potential unknown. Number two is if the incoming administration doesn't like what Powell's done, then what do they do? Is that talk, or do they then start? I mean, they're not going to start hiking rates. Then they start cutting, and then yields blow out even more. Like there's some bizarre possibilities.
Too far
there.
down speculation for me to entertain. we'll find out. You'll have a conversation. Maybe Mike Townsend will have better, ideas. But I don't see it as a black swan because you just described the situation. Black swan inherently is something you don't know that's going to happen. COVID coming out of nowhere is more of a black swan.
Yeah.
So, maybe it's a risk you can clearly see, perhaps. And this kind of goes again to your conversation with Brent Johnson. He talked about these scenarios where, equity markets swell, gold swells, the dollar swells, but it was going to be met with dramatic volatility at times. And because of a situation where if there is a more protectionist, more tariff-driven policy, that can add to that dollar shortage dynamic, that can add to those dramatic volatility.
The reflexivity of it.
We've seen this a little bit, when you go back to 2018, 2019, when the original U.S.-China trade war that kind of Trump and Xi Jinping were having, you saw those big moves depending on what was happening, what wasn't happening.
Yeah, absolutely. Well said. In terms of, I know that we're kind of thinking speculatively about what could happen relative to the Fed, but the point is the dollar move here, I think for a lot of people, not according to my framework, not according to what we've talked about, but a lot of people are going to be the most surprised, I think, by the dollar rally today.
Maybe not surprised, but maybe most.
All the gold bugs, all the coiners, that whole group.
Bitcoin's still doing great too.
For sure.
Gold is not. So that's an interesting thing to watch because gold's coming off of highs. But this is the last thing I'll say. Take notice of that dollar move, no doubt. But the more things change, Oliver, oftentimes the more they stay the same as well. So you can see the path to dramatic change. But we got to see some of this stuff actually happen before you can really sweat it.
That's kind of what I hope, frankly, with the Powell stuff, is that it's mostly been like, bark and not as much bite. Because I think if you were to then suddenly talk about removing Powell, that is going to introduce uncertainty the market would not like. Now, am I throwing stuff out there that is
kind of look at today? Okay, we've waited all year for this. We've waited for what? A couple of years for this. Well, actually, they've been campaigning for a couple of years. We've seen a lot of weird shit happen. That's just the way I think, my philosophy. So yesterday I said I wasn't feeling too bearish at all, but I also said that I didn't quite feel comfortable of picking who was going to be president for the first time in my life. Because I really, there'd been so much in the media about how bad and how evil and how much garbage we are, how deplorable we are. Because we don't want to jump off the same bridge as other people want to jump off of. I always stayed out of trouble because I always, all but one time, because I didn't jump, I jumped off the bridge with the other guys and ended up getting put on probation for 2 years for stealing hubcaps. So I knew back then that I made a big mistake. And I had to suffer for 2 years being put on probation because of it. But during that period, I had to think to myself, okay, am I going to keep hanging around the same crowd and jump off the same bridge, or am I going to do something with myself? So I end up just moving, getting out of here, and moving to Memphis. And starting a new life. And I've done that 2 or 3 different times. But I never was one to jump off the same bridge other people would jump off of. I'd always have to wait, measure it, think about it overnight, and then decide if I wanted to go ahead and jump off or not. And that's the same thing with this presidency. I didn't want to be on the same bridge with the other people because it just wasn't my standing. So now we got to complicate now. So now we got to kind of dig through all the rigmarole and hear what we've heard for the past 6 months, a year about tariffs this, tariffs that. I said it doesn't matter. It ain't going to matter. We've had the same tariffs in play that we had, when Trump left. Nothing's changed. So I think a lot of that is just a bunch of rhetoric. Because the market will adapt, however, it doesn't matter who's in there. In my opinion. So we broke the 1, 2, 3. Now we're bullish. So sell, big pop in the market. I guess the market appreciated it. And again, from what I hear, the information I get, the fat cats were wrong again. We got a double top on Baba. China now bounced back to it's got a double top on K-Web from pre-market open. SPX is starting to double top. I don't think we're going to have much of a breakout. We'll consolidate this big probably the rest of the week. Because the market was wrong, in my opinion. At least what they've been saying in here. That's why I like listening to Schwab. They keep a lot of politics out of it.
And I'm just not sure outside of brand new partnerships. And I know they made some announcements this morning that's not really,
I mean, if I was listening to CNBC today, listen to me here for the next 2 minutes. We'll see what they get on here. They're sob storying. My God. We were wrong again. Pot stocks sold off. What's Tilray at? 156. I mean, Tilray is at a good price. Let me look at Tilray. I might want to buy me just 300 shares for now. Let's get started with it. Oh, yeah. I mean, this looks real good. Shares of cannabis stocks are trading lower after cannabis legislation incentive did not pass in Florida. I thought it was okay. Reports Florida reject cannabis legalization. Wow. Florida rejects it. Now I know they're medical. Well, that's old. That's old news. No, it ain't. That was yesterday. Florida cannabis legislation did not secure 60% of the vote. Boy, I'd like to buy it right here, but I don't know. I think it'd be a good hold for...
Download the app.
Shares of Tesla, one of the best performers of the morning, soaring today following the president-elect's victory last night. Joining us to talk about what it means for Tesla, for big tech, for Elon Musk, let's bring in Dan Ives, Wedbush Securities Analyst, of course, a buy rating on Tesla, and a recent target at least of 300. Dan, good morning. Does that
Dan
change that
Ives.
number?
Look, I mean, I think it's a strategic bet that Musk made that ultimately could pay dividends for Tesla in a huge way for the coming years. I think $40 to $50 per share it adds just for beginners, not just because of what could happen from a tax credit perspective. I think leveling playing field, you take out the Detroit automakers, and then that's really going to give them an advantage from a cost, scale, and scope perspective. I think the big thing here, Trump could ultimately fast-track autonomous, FSD. And our whole view, as we've talked about in the show, $1 trillion of valuation just on AI alone. This is going to unlock it. That's a key.
Makes a lot of sense. Is there no scenario in which relations with China take a big hit and Musk is asked to pick a side? Is it a sense?
Yeah, and I think that, so on the other side especially, it's not just for Tesla, also Apple as well. For Musk, I think there's a comfort in him being in this situation that he could almost be a pseudo sort of...
Kamala lost popular vote. Democrats always use that. Well, we won the popular vote. To me, I can't stand her as a woman. But that's me. I don't like you, Kamala. Spy hit the 200 SMA as resistance. La 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 la. Whoops. I'm getting ready to watch this market again. Okay, we're retesting right now to see if we want to stay bullish. What was I going to do? I was going to check something. Okay, well, let's see what else is next.
Snap. I mean, I really don't know anything more than you know, which is that there's a law right now that says that come January, either they find a U.S. owner for it or it has to come out of the United States. To your point, that's a little bit up to the Chinese government.
Get some charts. Look at the Russell, the 10-year and biggest movers this morning.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So, what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab. Schwab, a modern approach to wealth management.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge
Who's
tools,
that?
curated education and insights,
Well, that
and
VSAT.
trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade.
Apple had a nice little pop
with Schwab.
today. Apple. God, damn, another $7.
Time. I got Mr. Rick Ducat here with me as we look at some
Super
of the big
Micron.
ones. So Russell, 10-year, Bitcoin. Rick, let's start with the small caps. I already like where this chart has gone.
Yeah, I mean, it's a breakout. You know, it's pretty obvious here. You don't have to be a technician to see that. But, you know, to look at the chart anyway, the Russell has been notable because of how range-bound it has been over long periods of time over the past 5 years here. But you can see that the trend, at least from starting back here, gradually making this series of higher lows. The trend accelerated here with our white trend line. And we kind of formed this ascending triangle type shape depending on how you looked at it. You know, probably this light green line was your upper boundary for the most part here. We did have a test to the upside yesterday. That's right around where we stopped. Then a big push up today. And notice as well that today's opening was the previous high point around that area. So it's you know, that's why we keep track of these notable high and low points. They can provide us with some information about you know, where you might expect to see price action. RSI, no surprise, very big push to the upside, entering the overbought area, typically regarded as a sign of strength in a trending market. So where do we go from here? I mean, you know, we've got
not only the election, we've got the Fed. You know, interest rates are a big factor for Russell stocks for the most part here. So there's another very large catalyst today already. So consider that. Consider as well that the Russell has a very lengthy move to the upside. What are we up now? Over 4.75%. We are also pretty much right on our +1 standard deviation channel, which is +1 standard deviation from our blue linear regression line, our line of best fit. It comes in near 2371. Additional push to the upside, probably around 2,500 for the +2 channel. To the downside, our horizontal levels we mentioned, green lines right here. And then if we do really start to fade, we've got a big confluence right here. Our light blue dashed line here, our blue solid line, which is our linear regression line. And you can see also our 21-day EMA, all around 22.40 or so.
Okay, pretty nice breakout. Gap has reemerged here, but it's still, you know, I guess connected to this over here. So, you know, a support, I guess you would probably think, even if we close that gap. Pretty good looking chart. I mean, even if it does give back the gains and it slips back into kind of the uptrend, you know, part of this, it's hard to, you'd have to be really bold and have a lot of conviction that, you know, something's gonna reverse to like buy downside. You know, I can see if you're bearish on it, then you want to sell upside, maybe. But like the chart's got so much support, it seems like, and in the past those spikes in momentum and RSI did have a little follow through, at least for several days. Let's look.
Selling upside works great until it doesn't, just like a reminder.
For sure.
And then you're blown out if you're not being careful. So I just wanted to mention that.
For sure, yeah. No, I'm just thinking like of the options to the ways to try and fade the move. It just like, it's, you know, buying downside on a chart that's got so much different types of upward momentum. All right, let's talk bonds. What's trend, what's not. You know, when you look at this, it looks a lot less pronounced. It looks like more trend continuation.
Yeah, but a very large candle forming today here, so a big move to the upside. Where are we at now? 3.7% or so to the upside, and we crossed above some interesting areas as well. I mean, for starters, the big picture is here. Downward trend line beginning with these highs, blue trend line connecting the subsequent highs. That's about where we kind of hit a stumbling block over the past couple days, but it's looking like we are clearing it pretty handily here. Now you could see as well, we had this very steep trend line here with this yellow, light yellow line here. We kind of have broken that. We kind of made our way back above it. Maybe this white trend line would make more sense to keep an eye on going forward here. But you know, you could keep both of them on your chart just to kind of, you know, keep the ideas open for potential areas of interest here. We also crossed above these previous highs and our volume profile point of control, our thick red line here. We've got some very notable volume nodes here, some obvious areas that actually happen to line up pretty decently with notable high points as well. Take a look at our red line, 4.476. A couple of highs here, and about where we're topping out today so far. That could change, but for now it's seeming like we have held the line at that area. Beyond that, the next set of highs is our pink line, 4.632. To the downside, and you know, we are still very geared toward the upside here. Note as well that even though our green trend line on the RSI was broken, we are in the overbought area, kind of been bouncing back and forth around that area many times recently here. But anyway, if we were to break to the downside, green line, old support, volume profile point of control, then our light green line, which was often a stopping point for price, notable highs and lows coming in around that area near 4.18.
Like that this candle really challenges and kind of breaks us through the longer term downtrend. I mean, really puts a lot on the table for bonds. Pretty juicy stuff.
Maybe if you draw it along the high right here, maybe we're kind of like right on the money. It's subjective. You know, candles kind of depend on the person doing it, but I would say probably most people would do it more toward both the close and to connect more points. Sure. You know what I mean? So that's probably a better trend line.
No, that's the way I think about it. I think it's just a unique thing to have here, and I'm glad you've got that, because in this sort of, you know, section here, it looks like just continuation of trend, but then with a longer perspective, you know, a pretty clear big move here. So good context. All right, last one, the coins, BTC. How are we looking?
Bitcoin here, and you know, big day for Bitcoin. Interesting price action here today. Another huge green candle. I mean, that's kind of the theme for all these you know, things that had this huge catalyst happen last night, or today, rather, I guess you could say. So high point, kind of the two series of highs here were based on you know, high closing prices and high intraday prices. So between like 72,430 to 74,415, those were our green and red lines respectively. That's kind of the area of potential resistance. That's about where in the past when we've reached those levels, it's been tough to overcome them. Today though, we have made you know, a good intraday high beyond our previous highs. We touched the top of our channel. I drew this channel here, you know, trend line going across the lows, duplicate it, put it across the highs. Happened to pretty match up pretty well with where we have topped out so far today, but the move could continue. RSI was interesting, had kind of a ceiling here around the 65 level, 64, 65. We did break above it recently, very brief entry into that overbought area, but now we have recovered. We held the line at our green trend line. We are above the 50 midline. We are breaking above our resistance area here. So once again, if we were to keep moving upward, standard deviation channel here, we've got this first boundary that our high of today that lines up with our upper channel boundary. Plus one channel, 82,081, I should say, to be more clear. And then down here, if we do break back into our old resistance zone, linear regression line, yearly linear regression line, 71,222.
All right. You know, Bitcoin, if we go back to your previous chart real quick, I mean, you know, this is interesting because of all the charts we looked at, it's the only one that's not overbought.
True, yeah, but it is breaking above a resistance area. You can use support and resistance on the RSI and trend lines too, similar to how it works with price. So even though we did have kind of that upside test and subsequent reversal, I think it's still interesting that we are managing to clear this repeated ceiling once again.
Correct me if I'm wrong, though, when you've got a previous high and a new high, and this RSI was above where we are, I mean, I guess you could still call it a
we could come back to the 200 on the QQQ.
Times it was at 70.
Maybe be a buy
higher.
signal on
It's
these
just interesting because
indices.
it's such a high momentum asset and is the one that oftentimes lends itself to getting highly open.
This QQQ right here, this could drop down to the 200 and then bounce back up. Right now you're bearish because you're under the 63. And here you're at support on the SPX. So we'll know something here. We're at a yin yang on the SPY. So we're at a support on the SPY. $587.15. And same thing right here. You got a nice little support right there on the IWM also. So everything's at a support or a resistance level. 234.60. So if we fail these, I think if we fail these, we could have a pretty good little drop. That's the IWM, the QQQ, the SPY, and the SPX. Nailed Mira. Called it out the other day.
that Tesla is somewhat of the anomaly, but I do think there's the entire alternative energy space that is reeling right now. Now, what we've known is that, the benchmark Invesco Solar ETF was down nearly, over 10% this morning. Again, a lot of these names, First Solar down, Sunrun down, SunNova, just a few that are selling off substantially on the session here. Now, what we also have seen is some of these inverter manufacturers like Enphase and SolarEdge also substantially lower. Trump's campaign platform does call for the termination of IRA, which he refers to as now the overall Green New Deal. So the IRA is one of what we know is Joe Biden's signature achievements. The law was passed back in 2022 without any Republican support. So there's the thinking that now we could see some reversal, or at least
We had a bunch of rain the other night,
space.
but I was
I have
sleeping.
to say, Oliver, we've been looking at the solar stocks as like the winning Harris trade, questioning that because frankly, these names have underperformed for the majority of the Biden administration's term. I don't think that this is linked, frankly, to the U.S. president at all. I think it's linked much closer to the demand we see out of key countries like Germany, Europe. I think that that's why we've seen weakness. I think that late in the game, this became somehow a political play that it shouldn't have been. But unfortunately, today you can't argue with the numbers. We're selling off.
Yeah, this latest blow seems clearly a sentiment, a trade. But to your point, this is now a 5-year running bear market, 4-year running basically.
I know it's a
the
reoccurring
COVID high.
issue in them
The
spots.
last administration, despite being very favorable to green energy, clean energy, etc., through the Inflation Reduction Act and the attempt to kind of build up supply for green energy technology, wasn't met by the demand. So, now if the demand side is lessened, I can kind of get the logic for how it could get worse. But to your point, this has been just an oversupply without enough demand. And to your point, the Europe market has been a huge element of the disappointment.
It has. I think that you look at some of the lack of demand out of Germany. You talk about strained economies. It's bad here in the U.S. as far as like cash going around. Obviously not today, but that's been somewhat of the concern, right? That we're heading towards this perhaps more strained economy. It's even worse overseas. So I think to your point, exactly what you just said, we haven't seen this demand. That's the story. I don't think that this is frankly U.S. president related at all when you look at the big picture in solar.
Yeah, I like that. Appreciate that. Kind of the agnostic approach and of supply and demand, one that's been negative for them. Appreciate that. Thank you very much, Jenny Horn. Wow, look at these. Some of these are just getting destroyed. Yikes. Holy smokes. In phase, down 18%. All right, let's chat about the session. A check-in with Caroline Woods and George Tillis, Senior Markets Correspondent here on
Within
Schwab
a week.
Network. Welcome back, Caroline. Good morning, George. GT, get us started here. What do you think? Is there anything fadeable in this, or is this truly like a fresh new wave of American exceptionalism? Dollar going wild, seemingly says we took a big step forward relative to the rest of the world overnight.
Well, obviously there's a positive reaction in the markets, and then of course industrial groups are in favor.
Yesterday I noticed it was worse.
Obviously are moving higher because they're highly regulated. Long-term rates, OJ, the 10-year is now encroaching on 4.5%. Long bonds are selling off still. The dollar is rising. The gold trade is fading. This is all to be expected because we do have clarity. There was a lot of confusion moving into the election. I didn't look at volatility, but volatility is obviously down. It's down to 16 on the VIX, or close to 16. So obviously now we can say that the volatility index being inflated over the last month was really election-based. And now I think we're back to normalized look at earnings for companies, the economy on a macro front, and then we got to fast forward to tomorrow's Fed announcement.
You tell him, George.
We talked a little bit about that this morning, Caroline. I think that does carry some extra weight here with what's happening in bonds, what's happening in the market too. Frankly, is suggesting there's like this big kind of pro-cyclical event happening. I don't know if that's going to get in the way of Powell's decision. Market's still looking for a cut, but it certainly has gotten a little bit murkier.
Yeah, it's certainly going to be interesting what Powell has to say, not just in terms of the path of interest rates, but also this tick higher in rates that we've seen or in yields that we've seen. I do think that if you take a look, you were talking about this American exceptionalism in terms of the stock market. There are some other areas that aren't experiencing
that exceptionalism outside of the clean energy solar stocks that Jenny mentioned. And linked to rates is home builders. Take a look at some of these home builders. Toll Brothers, the outperformer so far this year, down 5%. D.R. Horton down 5.5%. Lennar down 6%. KB Home down 4%. This tick higher that we're seeing in rates certainly not helping home builders, but also keep in mind, because it doesn't help housing affordability, but they've also had to offer a lot of incentives to try to offset those higher rates, which has weighed on gross margins. So certainly not helping in that department either. So we'll see what the Fed has to say about that. These were also largely seen as part of the Harris trade. We know she was trying to promote home ownership if elected. There was that proposal of providing up to $25,000 in a down payment assistance if she was elected, so it seems like that could be weighing on shares as well. Also not participating though, if you take a look, pharma stocks, Pfizer, Moderna, AstraZeneca, all seeing steep losses. I think there's some concern if Robert F. Kennedy does get a position, what that could mean for vaccines. Pot stocks selling off in a huge way today. You mentioned the solar stocks. Discretionary overall is higher, but take a look at Nike and Lululemon selling off today. Obviously close ties to China, so that could be weighing depending on what happens with our relationship with China and those tariffs that Trump has talked about. There's a whole lot that's working. If you take a look at what's leading the S&P 500 higher, Capital One, Discover, Synchrony, the banks are flying higher. Energy, industrials, discretionary for the most part, tech. But there are some notable losers to, I think, focus on here as well.
Yeah, great point. Really good comprehensive analysis. Good eyes on a few of those too, with some of the connections of the advisors in Trump's circle now, and how that'll affect some of these other trades, healthcare, etc. Look, this is kind of what Mike Townsend was saying. They've said they promised so much on day one, and sort of in general, the markets thinks, George, there's a lot of thematic shift potential here. Does anything stand out to you, GT, as being overextended? Like, if you had to pick something to fade here, what looks the most outrageous?
Well, I mean, individual stocks. I think
just
stocks
thematically.
like First Solar being down so much is a little bit exaggerated. Contingent upon a lot of the utility contracts they have going into next year. That's just one example. Steel stocks are higher with the expectations of things like tariffs. Maybe some of the financials are a little extended based upon deregulation, but also, you got to keep in mind interest rates at the low end of the curve, the short end of the curve are going to fall and the long end is rising, so that's benefiting them as well.
All right. Yeah, banks looking great right now. Moving some of these is incredible. Synchrony, Capital One. Thanks, George. Thanks, Caroline. Appreciate the thoughts, guys. Good look here at some of the other side of the equation, a few of the down movers as well in the healthcare space and solar and energy. Nicole Penelides coming to you next from New York for Trading 360. Have a great day. I will see you at 2 p.m. So what can you watch at the Schwab Network? Let's break that down for you. Every day from our studios here in Chicago and on the floor of the NYSE, we deliver more than 8 hours live programming. We kick off every day bright and early at 8 a.m. Eastern with our Futures Show, breaking down commodity markets, futures, and technical trends. At 9 a.m., I'm in the studio hosting our 2-hour opening bell show, Morning Trade Live. It sets the blueprint for traders for the day. We invite top analysts and investors to determine what's driving the early action, how to interpret the news, what's on the agenda for the session. Hey, Nicole, tell them about our shows at the NYSE.
Thanks, Oliver. Welcome, everyone, to our beautiful NYSE studio. We are here on the New York Stock Exchange floor, broadcasting live each day. I host the Watch List, which provides investors a fun midday update on the major news stories and themes. Best part of being down here is we are right in the center of the action. The energy is palpable. The sights are unmistakable. It's back to Chicago now. Jenny Horn.
Thanks, Nicole. Hi, everyone. I'm Jenny Horn, the host of Next Gen Investing. We all know how many new investors are beginning their trading journey and are eager to participate in the markets. And that's what I cover alongside Alex Coffey from 1 to 2 p.m. every day. We watch the hottest names, trending sectors, and under-the-radar stocks. Oliver, back to you.
For our active traders at launch, Fast Market steps up the engagement to a deep dive into volatility, options dynamics, trading trends with former floor pros Tom White and Kevin Hinks. At 3 p.m., I'm here to guide you through the closing bell. We construct the best narrative explaining the day's action, which trends held or broke, and prepare for tomorrow's earnings and other market-moving events. Spend some time with the Schwab Network. I promise you haven't seen anything like it.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location.
No, yeah?
Between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Okay.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So, what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Schwab Network's like no other financial media you've launched because it's all markets, all the time. It's 100% finance. We look at everything as traders and investors, and everything we say, everything we do is through that lens. There's no ulterior motive, and there's no subjectivity. There's no random guesswork about what we think. We are following the numbers all the time, relentlessly. We have the best CEO interviews, hands down. They're longer, more thorough, and tailored specifically to our audience. We never take our eye off the ball, which means we're always ahead of our peers.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim. With robust charting and analysis tools, nearly endless customization, and up-to-the-minute news and insights. With Schwab.
Good morning. We are 90 minutes into the trading day. Welcome to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange, where a lot of hustle and bustle today after our presidential election, where President Donald Trump will be our 47th President of the United States of America. That being said, overnight, after yesterday's gains on Wall Street, overnight we watched the Dow jumping 1,300 times.
Yee!
Right now we are up 1257 on the Dow. Mixed as far as some sectors, and we'll be going through that. But the big picture here is you are seeing the S&P higher, the Dow higher. A lot to discuss throughout this hour. In our 360 Spotlight, we'll dive in.
Let's get to talking, baby.
All of that and what stock moves have occurred this morning. And today's disruptor is for solar, the solar space. Well, that's been under some pressure now.
Uh-oh.
360 round, we'll take a look at the earnings from Supermicro. Here's a look at the numbers as we speak. So it's a winning week now, a winning month, a winning 6 months, and a winning 1 year. Worth noting the gains that we have seen and new highs. So the NDX is at a new high right now. The NASDAQ 100, we're seeing that at a new high, gaining 1.7%. Looking at the Dow Jones Industrial Average.
Now it's back under 5.
Over 43,000 now, gaining almost 3%, and the S&P 500 new high there, 5907, and that's up 1.7%. It's worth noting the Russell, which was up over 5% overnight, also has been impressive for investors in small caps, and that too is at a new high. We're looking at oil at $72.45 the barrel. Gold is down $63. The 10-year
Somebody sold a
bond
bunch of shares there.
at 445, and the VIX takes a real breather, going down to 1659. And that is the big picture. Here are some of the leaders, if you want to see on the S&P 500, names like Nucor and Discover, Trimble, Steel Dynamics, Keith Corp, and Synchrony Financial. Those are some of the leaders there. And on the NDX, take a look there at the NASDAQ. We're seeing, by the way, financials, energy, and industrials. Tesla, you've had Dan Ives out overnight. He did say $40 to $50 gains for Tesla. That's been a leader right now, 12.5%. Global Foundries, Old Dominion, Intuit, Baker Hughes, and Barker Hughes, and CSX. Gotta double check on that. Anyhow, so it is Baker Hughes, right? But why does it say BK? I gotta look that up. Or leave that alone. Okay, Jenny Horn, markets correspondent here on Schwab Network, taking a look at another really important point, and that was, if you were watching overnight, which I was, I did not sleep. I was watching every single move in the markets and the developments, and Bitcoin, new high for Bitcoin. Watching crypto, and many of the folks who supported Bitcoin felt that a President Trump administration would be more friendly to crypto. And let's speak with Jenny Horn now for a look there. Good morning, Jenny.
Good morning, Nicole. And what a historic day for Bitcoin. Yes, I was also following very closely. This was actually, I think, the most I was tuned into the crypto market after hours than I've ever been, because that was one of the trades to watch. I would argue it was like basically crypto and Tesla maybe were the trades that I was expecting to see some volatility after hours, and that would be correct. But thankfully to the upside, as we did see the largest cryptocurrency, that being Bitcoin, did pass 75,000 in early trading, now hanging out still above that level, or now, right even at 75, and as I'm speaking, we're seeing some volatility, but that did then hit a high not seen since March, and so I think the surge is definitely linked to some relief here. Crypto-related stocks also did surge on the session. MicroStrategy, Coinbase, Mara, all were names that have added significant gains on the session. Cryptocurrencies other than Bitcoin are also racking up some pretty substantial gains, as Ethereum also did spike, as well as Dogecoin, which is that so-called meme token that has been, of course, backed by Elon Musk. But price surges really started as soon as it became clear that Trump would be winning the election. On Wednesday, we did see AP did call Wisconsin for the Republican candidate shortly after around 5:30 a.m. Eastern time. So for that reason, the defeat seemed clear at that point. Both candidates have, I will say, embraced crypto during this election cycle. Harris did call blockchain one of the overall industries of the future and pledged to support Bitcoin and other tokens as part of the economic plan. But most
Rivian does look good.
said that Trump was the favorite. I mean, having once trashed crypto as being based on thin air, he has since completely changed his tone, made a U-turn, and has pledged to set up now this strategic Bitcoin reserve, and as well as replace the SEC chair, who's widely been seen as now one of these crypto maybe conservatives. So I'll be interested to see if he actually does replace the SEC chair, Gary Gensler, but we'll obviously have to see what happens, because now guess is as good as anybody's. But strength today in the space overall, hugely benefiting from the Trump victory for the White House.
Yeah, Coinbase, 21% move there. Folks have been waiting for that one for some time too. Thank you so much, Jenny Horn. A great summation of the crypto space and Bitcoin at all-time highs. A good way to kick it off here in our next conversation. Jenny Horn, thank you. Let's get some insights in the news shaping the markets. For that, we welcome in Peter Tuchman, Senior Equity Floor Broker here at Trade Moss. Good morning to you.
Good morning to you.
The floor doing a lot of trading. I mean, with the moves, you had an update yesterday. You had big moves this morning. How does trading feel today?
You know what? The enthusiasm and the excitement in the morning was palpable. You know, I have not seen that for the longest time. People, look, there's a lot of the floor is a very Republican place. Okay, so most of the people here were big Trump supporters. So there was that, but also the whole enthusiasm in the market. You know, we have to think back to Trump's first win at 3:30 in the morning that time. Back then, we were down 1,000 and we ended up opening up 1,000. So there was an intra-morning reversal. This was a straight across the board rally that started, some people say it started a few weeks ago, that the rally up into the election was a Trump rally. I don't know really about that. But the enthusiasm around this morning, it's across the board. It's fairly...
But it's palpable. It's interesting. You know, you felt the hustle and bustle. You were running to the posts. I mean, 100%. Give us some color. Was it louder than usual?
It was. Look,
there were a lot of photographers here on the floor. I saw that.
There were. So you had every possible news agency was on the floor. People were running around. We had excitement on all the different at all the different posts because stocks were opening, gapping up. We saw Palantir. Stock is up from $30, $40, $50, $60. It's spectacular. Obviously, you saw AMD, you saw Tesla. Tesla is off to the races. So you're seeing stocks that closed yesterday at record highs or 52-week highs. Once again, gapped up even more today.
Let's talk more about Tesla. I mean, we work with Dan Ives. You work with Dan Ives. Look, last night I was watching him, and he was saying, with this, it'll be less regulation for full self-driving and autonomous vehicles, and he felt that Elon Musk could bring some calm and some liaisons with China. He seemed really positive. He was talking about $30 to $40 gains. We're already seeing at least some of that today on Tesla.
We are. So look, there's a number of things that are going to affect the stock.
I'm sorry, $40 to $50.
Correct. So $40 to $50 in Tesla seems reasonable, around the fact that the autonomous car story has not gotten the traction that they wanted it across the board. If you remember 6-8 weeks ago, that story came out and the stock really got hurt pretty bad. And it wasn't until the earnings that we saw the stock go down. But look, the fact that Mr. Trump and Mr. Musk are sort of forging a major relationship is going to be a big deal. He's obviously going to be an advisor, and I think he's probably going to get what he wants around the company. Right? That's one thing. But you're seeing it across the board. You're going to see it. Look, I had spoken to Dan a few days ago, and his fear was that the wild card with Mr. Trump around tariffs, around China, and that effect on the tech sector may be questionable. But when you spoke to Dan at 3-4 in the morning last night, he felt that Mr. Trump was going to be flexible when it came to that, because he understood that that was a big part of the markets. He's going to surround himself by smart people. And we're going to see that he's going to do what's right, it appears.
Right.
He's going to do what's right for the economy, do what's right for the markets. He's a big market guy. We saw that the last time he was in office.
Here's another thing, M&A activity. You know, Lena Khan, you know, a lot of things that are jumping now.
He's a big market guy.
Food stocks, there are different retail. There were blocked merger requests mergers and acquisitions that did not happen. Maybe now we'll have more M&A activity. Will that help the market?
Yes.
Everything, look, the bottom line is markets can deal with anything except unknowns, anxiety, and think about it. This election's been festering for more than a year. And the fact that it's over now, irrespective of where Mr. Trump's going to put his energy, the fact that the unknowns are now knowns. Are there some more unknowns around Mr. Trump and his policies? Absolutely. But the bottom line is the election's over. He is our next president for the next 4 years, and I think he's probably going to do what's good for the market. Look, I mean, everybody's got their opinion about him. Are there a couple of wild cards that could be questionable around? Look, we know he's going to lower taxes, and we know he's going to raise tariffs. The tariff story with China is questionable at best. So, look,
exactly.
There's just irrational enthusiasm that the election is over. Hopefully, some of the polarity is going to just, be put on pause. What were you going to say?
Today? Do you sell everything
Look,
today?
that is a
Do
great
you sell
question. Is this
everything today?
You know
With
what?
the highs?
No, I don't. I really don't. I mean, I thought that the market would be a short on the opening, and it's holding quite well. We it's amazing. Yesterday's close was a record high.
Yeah.
Today we are now gapped up huge once again, and the market is not pulling back. So look, eventually we are going to hit up against some technical resistance.
Yeah.
It's going to we're going to watch this story unfold. Think about it. There's a little bit of a historic tidbit. 8 out of 8 election cycles that we've had after the election, there's a 2-week period where the markets sell off and pull back until November 21st, and then we've got a 6-week rally into the end of the year. That's happened 8 election cycles out of 8, apparently. I saw that yesterday, and it seemed like a fascinating story, and let's see if that unfolds the same way. Look, Santa Claus. Yes. No, I'm just going to say that we have a Federal Reserve meeting tomorrow. We didn't even discuss that. They are going to cut rates at least once. Are we going to get 2 cuts? Maybe, right? So, and we have we have Thanksgiving.
And
we
is
have
Jay
Black
Powell
Monday,
going to be the head of the Fed for a while?
I don't know about that,
look,
but
here's the thing too. When you talk about maybe it's a rational knee-jerk reaction today, Leon Cooperman, billionaire investor who has slowed down some of investing, he was concerned about the market and in fact said he thought next year would be a down year.
you know what? Look, Leon is a great investor. He was actually a big supporter of Trump.
Right.
I don't really know. I don't feel that. I can't really.
Today, I'll tell you.
No, I don't. Look, I can't predict 2025. At the end of the day, I'd like to look at a little microcosm. I am always a
long-term bull.
And look, at the end of the day, it's not even the market tells me about the bullishness. It's not me predicting anything.
Right.
I mean, look, the bear has peeked his head out only 5 times this year.
Right.
In April, in July, in August 5th, the first week of September, and October 5th. That's really been the only significant pullbacks we've seen, and they've all been rebuffed by much stronger rallies. We were trading at record highs even before today, right? We had stocks that were trading across the board, and the market was at 5,900 S&P, 43,000 on the Dow, and now we just feel like it's going higher. We've got Christmas coming, we've got Thanksgiving, retail, right? These are times where the market tends to shine.
Okay. Peter Tuchman, great to see
Thanks,
you.
guys. Happy trading. Good luck.
That was good color from the floor about the excitement and just the action that we saw today. It was palpable and some new highs too. Thank you, Peter.
My pleasure.
More to come here on Trading 360. It's the big 3. 3 stocks, 3 charts, 3 trades. Rick Ducat goes to the technicals. Don Coffin takes us to the trades for regional banks, the ETF, Alphabet, Google, and iShares Silver ETF. Taking a look at that here on Schwab Network. We'll be right back.
Yeah, we're back at the 200 EMA. SPY is back at the 200 EMA. Yeah, it is right now. Electric Vehicle Industry Group says companies ready to work with Trump. I'm gonna go get me some food, then I'll be back. Won't take long. But I think that's what I'm going to do.
He's Alex Coffey. I'm Jenny Horn. Join us for next show.
Hi, Jenny.
1 p.m. Eastern, only.
I love
Schwab
you.
Network.
No matter how wrong you were about Elon, I still love you.
Welcome back to Trading 360. I'm Nicole Pedalidi. It's time for the Big Three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts here to take us through the trades. Don Coffin, co-founder, Theo Trade. Good morning to you both. Don, I'm sure you were watching much of the night, watching the action, and as someone who often trades on the bearish side of things, maybe this is a great setup for you as stocks are hitting new highs. Tell me a little bit about your big picture.
Yeah, one of the things is, look, we here at Theo Trade, we were pricing this in for the last 2 weeks. We actually saw the movement inside of the dollar, a significant move inside of the dollar to the upside, which was largely pricing in a Trump victory. Obviously, some of the price action of the bonds also pricing in a Trump victory. So there really weren't any huge surprises. I mean, in today's marketplace, looking right now, I think the only thing that's a little bit euphoric is probably some of the financials. But yeah, you know, overall, I think you make a great point. Some of that euphoria may wear off, and that's exactly some of the trades we're going to discuss today.
Yeah, and that's what Peter Tuchman, too, was saying. He said, look, you know, we're seeing new highs across the board, and in other presidential elections, when you see a surge and then you see a pullback for a couple of weeks. So what are you looking at here first? First, the regional banks ETF.
Yeah, the regional banks ETF. So, you know, I'm waking up and I'm looking at this in the middle of the night. I'm actually looking at KRE kind of reopen in the middle of the night and thinking to myself, I'm like, wow, this is quite the euphoric move, because the regional banks, I mean, we're not too far removed from this particular ETF being in full-blown crisis mode. Like, regional banks were getting annihilated, right? You go 2 years back, they're getting hammered, and a large portion of that had to do with sell-side activity specific in the bond market. So, well, what are we seeing today? We're seeing heavy sell-side activity in the bond market. And I'm going to tell you right now, if that is bond vigilantes, and if they're coming in and continue to sell those bonds, I think you're going to see a wild sell-off inside of KRE. And as such, I'm actually going to put on a bearish position. I'm going to use this huge bid to the upside, put on a bearish position. I'm going to go out to the January 17th expiration. I'm going to be buying the 61 puts, selling the 56 puts. So doing a nice $5 wide put spread here for about a $1.15 debit, although the KRE has exploded to the upside. Look, I'd rather be in this thing and be early than miss the move. Again, sell-side activity in the bonds, though, really generates the opportunity in my mind for a short inside of the regional bank ETF.
Nice little breakout today.
Right, understood. Okay, look, financials
KRE.
are doing well today. Yields are higher. But let's see what Rick Ducat has to say about the charts, please, Rick.
Yeah, a very big breakout in this regional banking ETF here. As we look at the chart, you know, we can see that it was enjoying a decent uptrend for much of the year here. Not really any fireworks or anything necessarily, but we had some trouble once we got to this area between these two green lines here, between about 59.60 to 60.60, about a $1 range. We topped out there a few times, and then today, ultimately, we had our big breakout here. The point that we have stopped so far today is pretty interesting. 2 standard deviation channels. Anyone who watches my segment knows that that's what I try to use when a stock is making new highs, that we don't have any prior price action to go off of here. So we're 2 standard deviations above our blue linear regression line, our line of best fit. If we were to start looking for a place for a potential resistance in the near term, you know, 65.72, that's where this study comes in. That's about where we've topped out so far. We've had a very large rally, 11% so far. So, you know, perhaps it's a bit of a favorable opportunity if you have the risk tolerance for that here. RSI pushing into the overbought area, a sign of strength here. If we were to keep going upward, red line, +3 channel, 70.18. To the downside, our green area, our area of support, marking our old highs, 59.60 to 60.60. And just for perspective to Don's trades, I believe 61 is right about here, 56 is right about here. So looking for a break below the +1 channel, going all the way back down to our white trend line there for that particular trade.
Yeah, understood. All right, Don, final thoughts there?
Yeah, you know, although the marketplace is actually through, which has just been, you know, the big elephant in the room, again, as I said, we're seeing a little bit of euphoria. Some of the exact same problems are going to face us right now. And I think that the bond market, you know, overall is what trade needs to focus on, less about the S&Ps. If those bonds continue to see sell-side activity, it's over for the S&Ps here in the near term.
Okay, up next, Alphabet, which is up 3.2%. There's, a lot of folks talking about a big tech boost under a Trump administration. What say you, and what are you watching?
Big
with this
tech
trade,
boost.
Which is off its highs, but 1 year up 35%.
It's kind of ironic because, as you mentioned, boost, and there's going to be less regulation, except Google. Okay, Google's already in the crosshairs, obviously, of the Department of Justice and an antitrust suit, and I think there's actually going to be more of that. But moreover, when I actually look at this, I think it's a good fade on the 175 level. That is just this bounce. That 175 level looks a little bit prohibitive, and again, we're going to be looking at that here momentarily inside some of the price action of it. But I am also going to take a bearish position in here that Google is not going to be the object of affection, of course, of the incoming administration, as we all know. As such, I'm going to go out to the December 20th expiration. I'm going to make this short, make it sweet. Buy the 175 puts, sell the 170 puts. Again, I'm actually trading in Google L. Again, it's Google L. 175, 170 put spread done for $1.90 debit. It's just what we term an in-out spread. One strike in the money, one strike out of the money. Looking for a quick pullback off that 175 level.
Yeah, Wisdom Tree actually was saying that a Republican one was likely to lift the Magnificent Seven stocks. I know that you talked about how he feels about Google, but that it would lift the Magnificent Seven stocks if it were Republican victory. A Democratic sweep would be better for bonds, according to Wisdom Tree. So we did get the Republican win, and we are seeing some of these stocks doing higher. Let's see what Rick Ducat has to say.
Okay, so when we look at this one, we had this big spike up recently on earnings here, but it didn't really last. We kind of retreated back to 175 or so, which is this red line. That's the line Don was talking about as well, the price area in question. That's about where we are right now. We are above that area for the time being here, but, the day is young. We had a nice gap up today. We're up about 3.1%. So we can also see that our big red candle from the other day topped out at the gap that we formed back there. So we did manage to fill the gap before the move kind of evaporated, but now we gapped up again here. So once again, to just give you some idea of Don's strikes here, 175, basically right about where we are right now, almost exactly, yeah. And then 170 basically would be right there. So looking pretty much just to close the gap from today for that trade here. And there's a significant source of potential support just below our green line where we topped out multiple times here, and near about 168.50, RSI breaking above the red longer term downward sloping trend line. However, kind of a problem here, a little bit of bearish divergence. We're not making a better high close on the RSI, even though price is making a higher close. You see our red
SPX says it's going up.
Very modest higher close, but still that would be what we would want to see. So if we were to move to the upside here, 181, that would be our next potential stopping point right there. Kind of lines up with our trend line as well. From there, the highs would be the next stop potentially to the downside, 168.50, our green line. Then we've got a confluence just below it, yellow 21-day EMA, orange 63-day EMA, and our old downward sloping blue trend line, all around like 166 or so.
Okay. Last but not least, we take a look here at silver. I mean, gold is down $75. What is it about SLV that jumps out at you, Don?
Yeah, so once again, this is similar to the other trades, where the other trades I was actually kind of fading some of the upward momentum. Here, I'm taking the exact opposite. This is a significant down move in the metals. But, the problems of the world are not, abating literally overnight. We still are going to have inflationary pressures. In fact, if you take a look, the bond market is probably distinguishing just that. Again, inflation's not over. Some of the debt fears are not over. I also see $28 being support specifically inside of SLV. And I think it's actually a decent buy at this particular point in time. So in SLV, which of course is the silver ETF, I'm going out to the January 17th expiration. I'm going to be buying the 30 call, selling the 34 call. This is done for about a 65-cent debit. So it's a bullish position using today's pullback. The other aspect that really plays heavily into this particular trade is look at the strength in the US dollar. Even though there can be some continuation to the upside in the US dollar, it is magnificent versus the euro today and other currencies around the world. Strength in the dollar, though, kind of exports inflation. You still got inflationary fears, and you should have them. You still have debt fears, and that's why I'm going to be long silver here into the new year.
All right, we'll give Rick Ducat the look at the technicals. Rick.
This is one of those charts where the gaps and horizontal lines are really important here, because you can see we had our red line that marks the top of our price action, topped out in a similar place further down the road. That was the opening after our gap up. That's about where we were hitting the lows then.
So we got a 1, 2, 3.
See that we are below our 63-day EMA. We're kind of in the thick.
We got a 1, 2, 3 resistance coming up on the SPY. Support stay bullish 587.72. And I'm going to run it up to the store and grab some hamburger and come back. That'd be your support level 587.73 to stay bullish. And then come up and have a 1, 2, 3 by the end of the day. Unless it does it now. And they can do it now and get it over with. We have an inverse head and shoulders on the bottom out of a snake. Jimmy called that snake. Breakout, pull back, inverse head and shoulders, boom. And I called it the 200. And then we pulled back, and now I'm saying 1, 2, 3. And then a pull back to the 200. The market's going to accept Trump like they did before. We've already been here before, and the market did very well till COVID came. And then the government shutdowns and all the rhetoric, and I don't like being, my speech earlier, I don't like being piled up with a bunch of other idiots. I'm not going to jump off the same bridge unless there's water down there to hold at least 10 feet of water. So I'm going to run and get my hamburger. Resistance to break, Jimmy said it, 588.71. Is Yoko here today? Come on, you piece of crap.
That folks were hoping to have protection for U.S. companies, and some actually like the tariffs, while others are worried it could boost inflation.
Yeah, I mean, the whole campaign Donald Trump fought was on voters' concerns about the cost of living, the cost of goods and services. At the same time, he's pushing a tariff plan that is almost very likely to spark retaliation from other countries. And it's not just tariffs, by the way. I mean, there's actions that he's going to be looking at on taxes, for example, that could respond to what's happening in Europe. That's going to be a big debate that's probably going to happen early next year, just given the fact that Congress has to renew those next year. And so I think you can see those two big issues, taxes and tariffs, take up a lot of time in the first part of Trump's presidency.
And also, so the markets are at new highs, and folks always like to make money on 401ks and IRAs. Do you see more of that? Excuse me.
I think that the American people and investors like certainty. And we saw these numbers in the market start to improve a bit as it became more clear that Republicans may take victories. I think the post-election day stock rally probably just reflects the fact that folks are happy it's over. They know it. They can start planning for what happens next year as Washington faces some of these big debates.
And last but not least, as we talk about the makeup of the Senate and the House, the Senate has been counted and is Republican, the House still counting. And we talk about some of these policies. Some people like a lame duck session where you have 1 and 1, or some folks would hope that they both go Republican so you can move forward with some of the policies. Thoughts there?
Yeah, I mean, I think the American people like Washington to do things, and they like to see Washington doing things, and that happens with unified control of Washington. The problem with unified control of Washington is the American people get mad by the midterm elections and you lose something. The United States Senate is going Republican now. It might be Republican for a while, just given how the map is shaking out. And so, voters, as they cast their ballots this year, those generally align with the top of the ticket. I think next year, the American people are going to realize that the House is the big check on this Republican dominance of the Senate and the White House.
All right. It's great to see you, Eli Yoakley, Morning Consult. Thank you. Coming up next, the disruptors will focus on the solar space, which is falling this morning. A look here after a presidential win for President Trump. What does it mean for solar, renewable energy? We'll be right back.
Pow pow! Yeah!
cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street.
Market's going.
Monday through Friday, 3 p.m. Eastern. Available anytime, anywhere.
1, 2, 3 at the top of the tree. Okay.
Kim?
Spy. Well, the spy walked the line. When it hit the 1, 2, 3, we're about ready to break resistance. Oh Lordy, let it be. Let's count to 1, 2, 3. 1, 2, 3. 1, 2, 3. Well, we just broke resistance. We got 2 more to go. One's around 589 and a little bit more to go. 1, 2, 3. 1, 2, 3. Well, fat cats are at lunch. Jim's going out to have a steak, but he decided to go to the superstore, grab some hamburger, and come back and bake a cake. 1, 2, 3. Well, we're retesting that resistance line on the 9 EMA. It's about time. We want to come on up and break this stack. We got the 200 SMA we might get back. 1, 2, 3. Well, we were wrong about old Tesla. We thought the run was overdone. So we all called back and woke up the next morning after Trump won, and we discovered that Elon did it again. China congratulates Trump on being re-elected as President of the United States. The progressive liberals up on Wall Street don't know what to say. They wanted Kamala to win so things would go their way. So now they got to backtrack and they got to switch things around. They got to start taking them Trump trades and stop being a clown. 1, 2, 3. Whoa! George.
Downside for solar today. Tell us more.
Well, obviously there's concerns about, the federal government's application of a lot of funds for solar markets, including residential and commercial utility grade markets. But one of the things that's been going on, we talked about it too, Nicole, over the past year or so, or actually past couple of years, is we're seeing this divergence of utility grade and solar farm stocks like First Solar from the residential market. And the residential market for solar has really been decimated because existing home sales have been relatively flat not down on multi-decade lows. But First Solar is obviously
George, you're such a poet when you talk your solar stocks. You look so sexy with your gray mustache and your white-haired beard. Hello, I'm George. I'm the man of wisdom. George, 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 oh George, oh George, oh George, oh George, George, oh George. Oh George, oh George, we're glad you're home. Give us some advice on a few picks. George, 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 oh George, we love you, George, 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 George. So we had our tribute to George. Where's that mic at?
In-platform chat. Trade brilliantly with Schwab.
Download the Schwab
Okay.
app and join us to follow all the market trends.
Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Believe me, when it comes to investing,
So this is my game plan.
Carl's way.
Schwab, you're looking kind of old there. If we don't break the 1, 2, 3, we'll come back and try to find support at the pivot point, which needs to be rose a little bit right here. We're putting it above the 50 for now. And if that doesn't hold, then we have a solid buy down here at the 1, 2, 3, 4. As it starts to come back down before lunch comes in. And I'm going to go get my hamburger. Got a doctor's appointment at 3, so I got to get out of here early. Kind of stunned today in a way. I didn't know about the politics and Trump being reelected. I didn't think it would be that easy. Oh, I forgot I was in that trade. I'm in Hillary. Shit. TORY, I got 600 shares. And I'll add more if I want to. This is for a long. I'm not even going to look at it.
To the downside. Ed Butowski made the point of Ernst & Young, the accounting, the auditor that they had that stepped away, which is highly unusual. Do you recommend folks step out here and sort of take what they can get and salvage, or wait it out?
Yeah, so the reason I'm neutral on the name is simply because I think in terms of what's going on the accounting side, it's something of a black box. So you just don't know when they're going to resolve their issues. Again, having said that, we have a template, so we have some idea of what the downside is. And regardless of what's going on in business fundamentals, remember last time this happened, their business didn't fall off a cliff. It basically sat stagnant for 3 years. But again, the stock with somewhat similar earnings power traded down to the high single digits. And so I think that's your risk. And until we see them come out, well, either get delisted, so let's call that a worst case scenario, or until they come out and say, you know, our issues are resolved, we're filing our 10K, then I think you have room for further downside.
A special committee has now recommended some remedial measures for the company to strengthen the internal governance and oversight functions. That should bring at least a little bit of confidence for folks. And you made it pretty clear, you're not really interested in this name at this point because there are still so many concerns. I would like to hear about your big picture on the market, Ed, as we're hitting new highs across the board. Where you think this market and economy could be headed with a Trump administration, and potentially, I saw the Wall Street Journal say something like it looks like the House and the Senate go to the Republicans. Some thoughts?
No.
Yeah, I truly believe, you know, and I've said this before on your show, that we're going to see lower interest rates as we get towards the end of the year, and then into next year we're going to see lower interest rates, which are going to stimulate any type of dividend-paying companies. So normally you would say that growth companies would do well during that time, but I also believe dividend-paying companies like utilities are going to continue to outperform. But you also have to remember that the PE ratio on the S&P, if you take out the Magnificent Seven, you're still talking about a 20% overvaluation based on expected growth. So we're going to have to get the growth part fixed pretty quickly.
Yeah.
But I do look for very positive things happening in the stock market.
Yeah. And when we think about the servers and other competitors, Matthew, do you have names in the group that you believe in at this point that you recommend?
I mean, certainly, if you look at the server side of things, to some extent, I would expect Dell, Gigabyte in Taiwan, to maybe HPE to be beneficiaries of Supermicro stumbles, just because they are the alternatives, and I believe that some customers are at least thinking about what to do if they're large Supermicro customers.
Yeah, understand. Dell today up 1.9% and HPE up 5.3%. Matthew Bryson, Wedbush Securities, Ed Batowski, Chapwood Investments. Thank you both. I'm Nicole Petalides. The Dow right now up 1,347 points. Record highs across the board. The elections have been finished. Trump to be president.
So what can you watch at the Schwab Network? Let's break that down for you. Every day from our studios here in Chicago and on the floor of the NYSE, we deliver more than 8 hours live programming. We kick off every day bright and early at 8 a.m. Eastern with our Futures Show, breaking down commodity markets, futures, and technical trends. At 9 a.m., I'm in the studio hosting our 2-hour opening bell show, Morning Trade Live. It sets the blueprint for traders for the day. We invite top analysts and investors to determine what's driving the early action, how to interpret the news, what's on the agenda for the session. Hey, Nicole, tell them about our shows at the NYSE.
Thanks, Oliver. Welcome, everyone, to our beautiful NYSE studio. We are here on the New York Stock Exchange floor, broadcasting live each day. I host the Watch List, which provides investors a fun midday update on the major news stories and themes. Best part of being down here
So
is we
they're saying their trading floor,
of the action.
I find it hard to believe, but
The sites
are conservative? They're market makers?
now, Jenny Horn.
Thanks, Nicole. Hi, everyone. I'm Jenny Horn, the host of Next Gen Investing. We all know how many new investors are beginning their trading journey and are eager to participate in the markets. And that's what I cover alongside Alex Coffey from 1 to 2 p.m. every day. We watch the hottest names, trending sectors, and under-the-radar stocks. Oliver, back to you.
For our active traders at launch, Fast Market steps up the engagement to a deep dive into volatility, options dynamics, and trading trends with former floor pros Tom White and Kevin Hinks. At 3 p.m., I'm here to guide you through the closing bell. We construct the best narrative explaining the day's action, which trends held or broke, and prepare for tomorrow's earnings and other market-moving events. Spend some time with the Schwab Network. I promise you haven't seen anything like it.
I don't think I have.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited easy-on fee rebates for cash withdrawals worldwide.
I ain't left yet.
Overdraft fees and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds.
So double top resistance, we're going to, before I leave here,
bonds, money market funds, and more. Get more with Schwab. That
double top resistance for right now, it's going to be 589. Let me see here. $589.23. Your second resistance is going to be right here, $588.99, and then that first one's going to be right there, which we'll just extend that out to the left. $588.77. And now she's pulling back. And I'm going to get my errand out of the way before fat cats get back. Though I do want to trade.
Up over 2%. Dow Jones Industrial Average up 1,350 points, or just over 3%. NASDAQ 100 up 2.2%. And the small caps leading to the upside. Is this the breakout to all-time highs coming for the Russell 2000 and small caps? We'll wait and see. It's up nearly 5% on the session. To help me break down the market action, let's bring in my co-host, and that's Kevin Hinks. Kevin, give me your take here on the market rally and, maybe the expectations, because the optimism continues to surge here after the Trump win, Republicans taking the Senate and potentially even the House.
Yeah, I think what's really surprised me so far, Tom, is we're a couple hours into the trading day and there's been virtually no back off in futures. And a lot of the names that are up and staying up.
Yay!
We're going to talk about Tesla. It's up $35 as we get to the 11 o'clock hour in Chicago. And a lot of it, Tom, the sentiment has changed, right? You mentioned Google Alphabet. Think of the group of stocks under regulatory pressure right now. And think about that easing. Look at financials and bank consolidation that could happen with overall a more pro-business government and less regulation. I mean, when you unleash the U.S. economy, it's a pretty spectacular thing to watch happen. And we'll see when the sentiment numbers start coming in. And like I said, I'll say again, like I said this morning with you, Tom, the polling got it wrong. The financial and betting sites got it right. And now we see the next level and the next level, and the stories keep evolving, as you know. But all that said, Tom, we've got a 10-year yield sitting at 4.46, and we've got a Fed meeting tomorrow where they're expected to lower rates. How do you balance those two?
Yeah, that's, I think, a big concern right now because, should the Fed cut it all? I mean, still basically nearly 100% chance, according to the CME FedWatch tool, that they're going to, cut rates by another 25 basis points. But the 10-year yield now up over 80 basis points from those lows that we had right before the Fed meeting in September where they cut 50 basis points. But it's not pressuring stocks. We'll continue to watch that story, but let's expand this conversation. Bring in our next guest. That's going to be Alex.
I'll be back in 45 minutes or less
on the network. Alex, I've heard Kevin's take. Give me your take here on the overall risk-on sentiment that we're seeing today.
Well, first off, I think that this was not likely outcome, but it was probable outcome. This was one of the more probable outcomes.
Why was it probable? What was it? Because a lot of the polls had it, a 50-50 race.
Here's the thing. The ones that were more accurate in 2020 had this. Basically, Atlas Intel is a polling firm out of Brazil. They were the most accurate in 2020. Looks like they're going to be one of the most accurate again. They kind of had this, nailed across the board. It was always going to be close, but things were shifting. But it was more of you compare like polls to like polls, and there was a consistent 4 or 5 point shift from those who were Biden voters to those who potentially were going to vote Trump this time, and it looked like that came to fruition, all things considered. But beyond that, I think just more looking at how the market was performing, you didn't see volatility really upticking into the event. And so when I say likely probable outcomes, these states tend to fall in the same way. The demographic differences between a Wisconsin and a Michigan and a Pennsylvania aren't that different. That's why those states have voted the same the last, I don't know how many elections. And so if you win one of them, you kind of win all of them. And so it looks like a much bigger win than maybe the actual amount of votes separates the two candidates as you add them all up. That said, with it being kind of a decisive win relative to how it was in 2020, the fact that the Senate is in control of the Republicans, and it looks like based off decision desk projections, about 80% likelihood that the House will stay with Republicans. They might gain a couple seats somewhere around maybe a 5 seat edge. It gives that party the basically the power to do some of these things they talk about. So what are some of the broad things? Look, I'm not a policy expert, but broadly, I think the Trump policy is less foreign intervention, so geopolitics risk perhaps coming down. You see that maybe reflected in gold, but more protectionist strategy when it comes to trade, which is more tariff heavy. We saw that in 2018, 2019. That's going to spike the dollar. You're seeing that today. Right. It also might spike prices, but it might spur growth, and that's why you see yields moving really, really rapidly. The big thing, and I think Kevin hit on this, and I think it was really astute, and I agree, is with the big move in yields, I'm surprised we haven't seen a little bit of a VAR shock, that there hasn't been really any let up in the buying, which again, this makes me think that I think a lot of people with money at stake who are required to be stoic, doesn't matter what they think one way or another, in this business are turning the page, and we're somewhat prepared for this.
Yep, dollar higher, yields higher, not having a negative impact on equity markets. But Kev, I've got the heat map ready to go here because it kind of tells you the story about what's working today and what maybe is lagging today. You're seeing tech up, you see financials up pretty solidly, communication services besides Meta platforms. Donald Trump, I'm not sure if he's a fan of Meta platforms. That's not doing well. But then you look at consumer staples lagging, healthcare is lagging a little bit. Real estate's lagging because those interest rates are going up. Your thoughts here, Kev?
Yeah, you look at this, the visual, the visualized tab. I love to look at it. It gives you such a great picture and a breakdown by sector, and you see consumer staples a little weak, healthcare a little weak. Yeah, the Magnificent Seven all higher except Meta. It seems like Boeing having a rough day. Of course, breaking my heart. Boeing's having a rough day today. But, utilities and real estate, not real shocking there. But I'm watching, it's 8 sectors of the S&P 500 higher and 3 lower. What's lower? Consumer staples, utilities, real estate, Tom. And the information technology having a big day, up 2%. Communication services up 1.5%. Those are the leaders in this market. Take Meta out of there, but the rest of those are all melting higher. So listen, I think we're in a world where you can expect maybe a little less regulation, a little less a little more business friendly, a little more look on what the fundamental drivers of the economy are. The one thing that does surprise me, I'm surprised crude oil is not lower than it is. That's the one that doesn't line up with Trump's views on energy versus, crude oil being almost $72 and basically unchanged on the day after being down. There's always a head scratcher, Tom, and today it's crude oil.
Yep, and crude was, Kevin, we were on the Future Show earlier today, crude was below $70 a barrel earlier, now just below $72 a barrel. The energy sector within the S&P 500 actually up 3.2% in today's session, so a lot of those big Exxons, Chevrons, Occidental are doing well today. But you made a good point. The sectors that are getting hurt in the S&P 500 are all interest rate sensitive. That's real estate, that's utilities, and consumer staples here, Alex.
Also risk off in a couple of those too, in the case of staples and utilities, I'd argue.
Yep, exactly. And with yields going up, maybe utilities aren't as attractive. Same with real estate also. But that fall in gold, nearly 2.7% here today, Alex. That's been one of the standouts. It's still up nearly 30% so far this year. Gold's had a good run. Do you expect maybe some people buying the dip in there, because it doesn't seem like the gold bugs are getting pushed to the side, but just maybe this outcome has them worried a little bit?
Gold serves a role in portfolios. It's almost an insurance policy in some ways, and I don't want to make overarching statements, but I always kind of imagine gold as like the break glass, if necessary kind of a situation. Like, it's when everything else is no longer needed, gold has always been there, kind of an asset, and so it can have its own kind of mind at times. But two things really influence it. It's kind of the general strength of the currency it's priced in, which today the dollar has strength, that's going to work against it. And the other is the fear around kind of really existential things, and usually that's geopolitics. And so the fact that you can make the argument that in this kind of changing of the guard, there's going to be, perhaps, less foreign intervention, less geopolitics risk. I don't know if that's the case or not, but that might be the perception today. You might see some of that geopolitical risk being priced out alongside the dollar strength. So will there be a dip? I mean, there's still tailwinds to gold, I think, which is, inflation starting to tick back up. But at the same time, if you do have a tremendous amount of dollar strength, that can work it against it too.
Yep, and one of the other areas, Kevin, within the market that's actually leading to the upside, up 5% now, is the Russell 2000. You take a look at the small caps, getting led. Remember, financials are a big component within the Russell 2000. 40% of their companies in that index don't make money, or they're not profitable at this point, but you've seen that resurgence. We're not to all-time highs. The other three major indices hit all-time highs today. But what's your take here, Kevin? Is this the start of maybe some more support here for the small caps, or is this maybe getting a little too far, too fast here?
Yeah, this conversation is a little tricky. If you look at the Russell, and it's really, everything except real estate is really quite strong in the Russell, but financials are really strong. Why? You can make a case, Tom, that, obviously the financials in the S&P are strong. You can make a case that with less regulation, there could be a lot of consolidation in some of the regional banks, and some of those might be in play like that. So the whole pie might be getting a little more pricier. But yeah, it's hard to say. I don't consider myself an expert on the Russell 2000. I know it's a large sample size with a lot of companies that are very small and are not profitable. But these regional banks, that's a little different story. And I think consolidation might have something to do with some of the strength there. But that said, take out real estate, every sector in the Russell is pretty strong.
Yeah.
Yeah, if I could build on that too. I mean, first off, to Kevin's point, smaller than, let's say, NVIDIA, but these are still billion-dollar companies in many cases. So they're still tremendously large relative to a small business. But with the kind of understanding, even if it's a broad brush being painted, Trump, relative to the Harris campaign, was seen as a more protectionist, America First kind of a campaign and policy stance. Yeah. And so companies that are more domestically focused, like the Russell 2000, are poised to perhaps benefit in that environment. That's going to be the read-through. You saw it in 2016, and you're seeing it now. Now, I don't know if it lasts all the rest of the year, if it's just a one-day pop. I mean, we heard so much about this small cap summer. I joked, is it now the small cap winter? We'll find out. But the Russell 2000 has lagged for a long time. Now, a lot of that has to do, to Kevin's point, with the quality of the companies that make up the index. There is a lot of froth there with unprofitable growth companies. But if you're into an environment that is a little bit more growth favorable, and also one that is a little bit more domestically focused, perhaps this is an index where some of that risk might be taken.
And it's pretty amazing that it's up 5%, with the fact that yields are rising, because that's been that inverse correlation lately where yields rise and the Russell immediately starts to fall because of the financing that they have and the costs associated.
It always depends, why are yields going higher? So today it seems it's a growth reason, and other times it's been an inflation fear. Inflation fear, bad for Russell.
Yep. And Kevin, the solar stocks, green energy stocks doing poorly today. First Solar down 10%, and some of the others in that space are doing poorly. But when you look at the other side of it, the housing market, because rates are going higher, home builder stocks are down. Home Depot, Lowe's getting hit, but they should be getting hit with interest rates where they are. We haven't seen these levels since July.
Yeah, and the solar energy, I get it, right?
Yeah.
There may be less government handouts to the solar industry, but you know what's kind of interesting, Tom? On the flip side of that, Constellation Energy is up today, because maybe where we step away from solar and wind, maybe we less regulatory pressure. Remember, that stock sold off because of regulatory pressures on another nuclear company. Maybe that falls into that basket of companies that might have less regulation. So yeah, solar and wind down, nuclear up, Tom.
Yep, definitely a little bit of divergence there from the overall market, but the 30-year mortgage rate did hit over 7.1% today. So that's up from, we were down near 6.1, 6.2 about a month and a half ago. So we've seen a real spike in there. We got to take a quick break here, guys. When we come back, we're going to talk about another big winner here in the markets today. That's going to be Tesla, surging on the back of the Trump win. What type of role will Elon Musk play in the administration, and how is it going to affect his company moving forward? Tesla, we're talking that when we come back.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So, what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Welcome back to Fast Market here on the Schwab Network. We're talking Tesla, big winner today, up 14%. To help us break this down, let's bring in Caroline Wood, senior markets correspondent here. It seems, Caroline, that the beneficiary of a Trump win is definitely Elon Musk, and he's been on, the back of Trump during this whole campaign, and he's paying dividends for shareholders today, huh?
Yeah, it certainly is, and likely for Musk as well. So Trump, of course, the winner, and Elon Musk and Tesla also another big winner today. If you take a look, shares of Tesla up 14% right now, leading the NASDAQ higher. It's the best performer of the Mag 7. Wedbush's Dan Ives called it. He said Musk's big bet on Trump would be a home run for Tesla, and that's exactly what we're seeing with this double-digit surge. In fact, he thinks that this Trump win could add $40 to $50 per share to Tesla stock, making it exceed $1 trillion in market cap. And take a look, today it's adding $35 alone. Trump overall, though, he thinks will be a negative for the EV industry. Keep in mind, Trump has been critical of EVs, openly critical, saying they're too expensive, they have limited range, they'll destroy jobs, they'll all be made in China. So, there's that component. And many, including Dan Ives, are expecting Trump to actually pull those rebates and tax incentives that are attached to EVs once he gets in office. That's a headwind for all EV makers, including Tesla, but it might mean less competition from some of the newer EV companies that really require those tax credits. Ives thinks that Tesla has the scale to be profitable without the tax credits, saying Tesla has a clear competitive advantage in a non-EV subsidy environment. Also, we know that Trump has talked about more and higher tariffs on China. That could further push those Chinese EV makers away from any access to the United States. So if you take a look at shares of some of the US listed Chinese EV makers, those are lower today. And then also take a look at Rivian and Lucid, absolutely selling off today, down 10%, 8% respectively. Also, Dan Ives points out that Trump could accelerate some of the FSD and autonomous initiatives for Tesla, so really kind of fast track that, which would be a positive for Tesla. He looks at it as a tailwind for the cybercab as well, because Trump as president, could kind of ease up the regulatory environment as Tesla launches that. They will need regulatory approval, so that could be bullish for Tesla as well. And then, of course, if Trump's tax plans are implemented, with them having the Republicans having the Senate and potentially the House, that could be, a real possibility. Corporate tax rates could be cut to 15% from 21%, which would likely give Tesla and other manufacturers a boost as well. And then, of course, there's SpaceX to think about and the government contracts there. So, Musk was tweeting earlier today, America is a nation of builders. Soon you will be free to build. So not sure if that has to do with SpaceX or what, but there's a lot of reasons that Tesla shares are running higher today. I will say other analysts have pointed out that GM and Ford, kind of the more legacy U.S. automakers, would be big winners under a Trump presidency as well. Bank of America had said Ford and GM would be the main beneficiaries, saying the current environmental regime would pressure the core business of legacy to decarbonize by the end of the decade while shifting quickly to an EV portfolio. If you take a look, Ford is higher today. Shares are up about 4%. GM and Stellantis essentially flat, so not getting a big boost like we're seeing with Tesla.
Caroline, sentiment is a powerful thing, as you know, and nothing has fundamentally changed in Tesla's business model other than an unfavorable administration switching over to a favorable administration for Elon Musk. And we're going to talk about what his role is going to be, what he's going to do, how he's going to divide his time. But more than anything else, this is a change in sentiment towards someone, you're right. A Trump administration may lessen the pace at which EVs are accelerated and adopted, but I'm sure, here's one thing we know for sure, Caroline, if there's an EV summit at the White House, we're pretty sure Elon Musk will be invited to this one.
Right, a very different story with President Biden right now. Of course, largely due to Biden's support of unions and not necessarily recognizing Elon Musk, which has
certainly been punishing, I think, for the Democratic Party as we've seen this play out. I think it's still unclear in terms of that position that Elon Musk could have at the White House. Of course, Trump has talked about this government efficiency commission. Musk actually kind of initially came up with that idea to find ways to basically reduce government waste and create more efficiencies. It's unclear if he would actually be able to serve in that role given his, private business interests. Could be conflicts of interest there and such. I don't think that this relationship is over. Trump and Elon Musk both seem very fond of each other and really have been in each other's camps for the past few months, so that's likely to continue. We'll have to see how that actually plays out. I do think one thing to think about that could be interesting, though, is if those China tensions do ratchet up, as former President Trump, almost soon to be President Trump, has really talked about with these much higher tariffs. Will Elon Musk be forced to choose a side? Because we know he's very reliant on China as well. So I don't have an answer to that, but it's certainly something that we'll have to keep an eye on, because it's not just Elon Musk, it's also Tim Cook of Apple. A lot of these big tech companies are reliant on China, and if those tensions ratchet up, it should be interesting how that all plays out. So TBD.
Yep, and his role in the administration moving forward. Efficiency's coming across the board there in Washington, D.C., I'm guessing at this point. All right, great stuff. Thanks to Caroline Woods, senior markets correspondent here, breaking down the Tesla news and the rally here. Alex, let's bring you back in here to this discussion because the stock is hitting highs that we haven't seen for over a year.
Of a breakout.
Yeah, a little bit of a breakout. But, your thoughts here, because if you look at the earnings report, last earnings, it wasn't great, but, the stock popped a little bit. But this is all about the future and what Elon Musk is going to bring to the table, whether it's a cyber cab, whether it's humanoid robots. That's, I think.
Yeah, I think that's the long-term investor story for sure. And you definitely feel, if you're a Tesla investor today, that perhaps a risk is lifted off the table. To Caroline and Kevin's point, maybe some of these things will actually push back on Tesla and EVs broadly, but might impact some of the rivals more under a Trump administration. I actually heard Elon talking about tariffs, I believe it was in the last couple of days, on the spaces that he put on. Basically said, look, I'm not against tariffs, but you can't just turn them on overnight. You got to give these companies a chance to, kind of onshore some of those things and have a plan to get those to work. So if he has Trump's ear for that, that could also stabilize some of that rockiness around trade wars. We know that one of Trump's kind of negotiation strategies is to be a little bit more of a hardball negotiator. So we'll see. A lot of that speculation. I think when it comes to trading this name, though, it's much simpler in terms of right now. It's a momentum move. This is a big-time jump in the stock. It's up 14%. It's gone through the election. It's gone through deliveries. It's gone through earnings. It's gone through the AI event. Now there's not really a lot on the calendar other than, I guess, the Fed and other macro things to really dictate the direction. So if you feel this move is now the kind of inertia to the upside here, break out above 270 after not being able to, maybe this thing can make a run towards 300 over the next couple trading sessions in next week. And if you think that, I got a strategy that is 2-to-1 in terms of its risk reward that would benefit from that happening.
Yep. Let's break this one down because it's interesting. Because it's short-term positioning, but it's definitely bullish. But you've got a decent risk reward set up on it.
Yeah, it's intentionally positive asymmetry here because if you're playing the momentum, you want risk definition. And you kind of know that, hey, if this does turn, it can turn rapidly. I don't necessarily want to risk a ton, but if it's right, maybe I can have some positive asymmetry and make a sizable return on that risk. And so it's the 292.5, 300 call vertical for next week. It's all out of the money. It's inherently lower probability for that reason. The break even is 295. But Tom, you're risking 250 with a chance to make 500. It's Tesla. It's up $35 today. Yeah, this is a big move today, but it's not unthinkable to say that this stock could easily be $13 higher over the next week. And so it becomes somewhat binary, like you're in a situation where it makes the 500 or it's a full loser. And so you got some time, to perhaps make adjustments as necessary. But it does seem, one of those situations where if the momentum continues, not a lot of resistance overhead until about 300.
All right, let's break this one down. No 15th monthly cycle. So just 9 days to expiration. Buy the 292.5 strike call, sell the 300, $7.50 wide bullish call vertical. You're only paying $250 debit. There's your risk, $250. Break even $295 to the upside. Kev, when you look at this, the risk-reward setup is pretty good on this one. And as Alex mentioned, you only need a 13-point move to the upside here. I think the key that I looked at on this spread, Kev, because it's both out of the money, so you definitely need a move, is the fact that you're offsetting some of the risks on this spread by selling the 300 strike call against your long 295. That's over $6 in option premium on just the 300 call with 9 days left. So taking a bullish stance while reducing maybe your risk and exposure on this bullish play might be the way to do it.
Yeah, it's a 3-to-1 winner if you're right. And Tesla does move towards 300, which, like Alex mentioned, this stock can move. It already has moved, and once it moves, it goes for a while. You know, it can run for days. So, and it can go down for days as well. Make sure we understand that and balance the risk. But a bullish play where if you're right, and remember, the 292 is about $5 out of the money, so you need, you know, another $7 rally in this name. But if it starts moving towards $300, you've got a multiple percentage winner here, Tom.
Yep, and you have that flexibility because you're buying that vertical, that, hey, if it rallies up to 300 over the next couple days in the end of the week or early next week ahead of expiration, starts expanding in price, it gives you that opportunity to get out of it if the market's open ahead of time too. So a little bit of flexibility as far as trade management goes, because we know things can chop around. So you have that in your pocket also. All right, good discussion there on Tesla. Thanks to Alex Coffey, senior equity contributor here on the network, helping us break down markets and the EV maker. But coming up after the break, we're going to be joined by Megan Brantley from Likefolio for a discussion on sentiment data and Alphabet. Giant stock is up about 3% today on optimism of a potential breakup that may be off the table with the new administration. Stick around, Fast Market coming right back.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl?
Schwab. Schwab, a modern approach to wealth management.
Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in our next guest. It's going to be Megan Brantley. She's the VP of Research at Likefolio. Welcome back to the show, Megan.
Thanks for having me, guys.
All right, so we're talking Google Alphabet. Now, I kind of wanted to pivot to this name today just because I think it's getting a nice pop here. The previous administration kind of coming down hard on a lot of the big tech companies, especially Google Alphabet here. But when you guys look at the data, the earnings were pretty good. It's been underperforming. It's the lowest valuation out of the Mag 7. I mean, do you guys have good data on Google Alphabet where it's maybe not losing market share and advertising dollars?
You know, so we have a bit of a mixed bag whenever we look at Google, both in terms of what's driving its growth, and also whenever we dive into those ad dollars, you know, which sectors are performing well, which sectors aren't performing well. And so I think we'll start with the best news for Google, at least in our data, is we see it making continued traction when it comes to its cloud business. Whenever we look at Google versus Amazon versus Microsoft, we have the highest growth rates from Google's cloud when it comes to digital traffic and consumer interest. We have those figures up by about 13% year over year last month. So I think that this is a good sign for Google moving ahead, that it's taking a larger chunk of this overall cloud market that we do see continuing to rise across the board. Now, I think whenever you look at advertising, that's where things get a little bit trickier, because we do see a lot of strength, particularly in its YouTube banner, and we saw that whenever Google or whenever Alphabet reported earnings just last week. But we're starting to see some underperformance when it comes to search and just its traditional, you know, Google Ads platform. And I think that a lot of this is an indicative of a slowdown in growth for us. So we're starting to see growth slow there. We're starting to see ad dollars flow into second tier platforms, whether you look at names like a Reddit, whether you look at names like Snapchat, or even if you look at streaming names and streaming platforms like a Trade Desk or like a Netflix. And so I think that this for us, particularly today, this move could be a little bit of a buy the rumor, sell the news, and there certainly is a lot of investor optimism heading in with the new administration that's set to take office. But for us, when we look at this, I would say our data tilts a bit bullish because of the cloud overperformance that we're noting, but we are a little bit cautious just because we are seeing rising competition in the search for ad dollars.
Yeah, Megan, Google Cloud growing by 35% a year. And, you know, it's easy to take for granted Google Alphabet, right? Because their name, Google, is kind of a verb. It's got its own, we know what it means to Google something. It's so incredibly used that sometimes it almost gets taken for granted. It's the cheapest valuation of the Magnificent Seven, despite being in all the key areas. Is it in cloud? Yes, it is. One of the faster growing areas of cloud. Is it in full self-driving? Waymo is now worth $45 billion. Go out to the West Coast, the Waymo cars are everywhere. YouTube, ad dollars, they're on the cusp of that. All these things that they're doing, all of their businesses, their main businesses, puts them right in the epicenter of all the things that are moving in this economy. And oh, by the way, they've got a pristine, massive balance sheet with $110 billion in cash. So they've got flexibility as well, Megan. But why does this name, in your opinion, and in Lightfolio's data, why does it get a bad name? Why is it taken for granted?
I think that for us, when we look at this, at least from the consumer perspective, we do see some early signs of shifts in consumer behavior for how they are seeking out and finding new information, which is the bread and butter, which is the Google, the verb, like you talked about. While its YouTube banner is doing tremendously, while its cloud banner is doing tremendously, we see signs that especially younger consumers are going and maybe they're searching for information on social media. Maybe they're using ChatGPT to find information, and this weakens its overall ad prospects. And so I think that this is something that Google or Alphabet needs to address for sure. But I would say that of all of the areas that we have insight into, in terms of the consumer's mind and the consumer's behavior, that's the first sign of a bit of a shift that we see, especially in where consumers are turning to, which platforms they feel like they can trust. We're starting to see a little bit of that shake out in a negative way for Google. So not major flashing warning signs. I'm not coming on here saying, we're very bearish Google, but those are the areas of weakness that we see emerging in the overall Alphabet narrative.
Megan, when you guys look at some of your data, whether it's YouTube doing pretty well, some of the other segments are still doing well. Search, they still have 90% of the market share in there. Bing's not making any inroads. ChatGPT, who knows if that'll, change the course of search at this point. But when you look at this company, and Kevin mentioned a bunch of the fundamentals, a solid balance sheet and stuff, do you guys have still a decent score on this? I mean, the stock's up 25% this year, so it's had a good run, but it's lagging some of its peers.
I would say that we would be cautiously bullish, mostly on that cloud strength, but also noting that it is getting a bit of a boost today. And, especially if this runs up a bit higher, we'd start to go into neutral territory. This looks to be, for us, priced about right, maybe a little bit more room from upside from here, just in the very near term.
All right, great breakdown of the data and the information. Appreciate it, Megan.
Thanks, guys.
All right, that's Megan Brantley, VP of Research at Lightfolio, breaking down Google parent Alphabet here. Kev, and one of the things we didn't bring up with them, but maybe it's more of the political side is, the Department of Justice kind of going after them. They're supposed to have a ruling by November 20th or 22nd this month that, they might request that they break them up. Does the new administration kind of push back against that at this point? Because, the Lena Khan, she's going to be out, according to the Trump administration. Is that going to come into play here?
That's exactly right, Tom, and I think that's a key reason why you see today's price action. It's outperforming the S&P 500. Right. S&P 500 up 2%, Google up, Alphabet up more than 3%. So I think this falls into one of those buckets of regulation pressures being lifted on this name. And I'm sure they can navigate this. Is that adding some of this? I think it may be, right? I think there's a group of stocks that are under the scrutiny of regulation whose life might get a little bit less pressure here. So the trade I looked at, Tom, the paper money trade, is just something that plays. I mean, the stock's already moved nicely on the upside. This just plays for the next $5 move, which is I bought the 2-week November 29th to November 15th 180 call calendar, and it's trading at $1.25. It can double or so in terms of that. You can extend duration on this trade and really chip away at that net debit, which isn't that big anyway, Tom. But this is a relatively passive long delta. It's only got about 10.5 long deltas, something like that. That's theoretical on the Thinkorswim platform. So this is a moderately bullish play, not a diagonal. It's a calendar spread where you're buying time 2 weeks, but the same strike price.
Yeah, let's break this one down that Kevin brought as an example trade here. Going out to that November 29th weekly cycle here. You've got 23 days to expiration on that. You buy the 180 call, and then in the near term, November 15th monthly options that expire in 9 days. You sell that same 180 strike call. 2-week wide call calendar to the upside.
Yeah, we did.
At or near that 180 strike is where you want the stock to go, but you can see here from the risk profile, you've got break evens down near about 186 or up near 186 on the upside, maybe 185 on the upside, all the way down to near 176, 175 to the downside to remain potentially profitable on this trade. You're paying $1.25 debit for this 2-week wide calendar. That's your risk, $125 per spread, with the expectation that, hey, if it's in that range, I can remain profitable. And as Kevin mentioned, as you get closer to expiration over the next 9 days, where time decay reduces the option premium in your short November 15th 180 strike call, you can buy that back, roll it to the next weekly cycle, creating credits and potentially increasing your potential profitability on that trade also. So there's a way to manage this trade as you get closer to expiration, or if it just goes up towards 180, time decay is going to work in your favor, and that can expand the price of this calendar also, where it might give you that opportunity to get out if the market's open. So good look at a 2-week wide call calendar where, hey, you just want it to kind of grind a little bit higher here over the next 3 weeks. So good look at the Google call calendar. All right, Kev, let's take a quick break. When we come back, we're going to talk ARM Holdings. The chip designer it reports earnings after the close today. Expectations pretty high. This stock's up nearly 90% so far in 2024. We're talking ARM Holdings when we come back.
Watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network. Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamble On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Before we bring in George Tillis to discuss ARM Holdings, let's check in on the equity markets, which are near session highs here. The benchmark S&P 500 up over 2% in today's session. The Dow Jones Industrial Average up 1,358 points, or 3.25%. NASDAQ up 2.2%, and the small caps continuing to lead to the upside, up 5.1% as a push into small caps continues. You see the heat map here. Got some weakness in Meta Platforms, the other Mag 7 names all doing pretty well today. You see Eli Lilly and some of the healthcare stocks, that sector within the S&P 500 just actually went negative, but again, consumer staples on the right there under some pressure also. Those interest rate sensitive utilities and real estate's also under pressure. So it's not a broad-based rally, but the big names like Nvidia, Tesla, Visa, MasterCard, Google, Alphabet, Apple, and the banks. Oh, you got to mention the banks in there, all pushing equities up to record levels. All right, now that we've had a look at the markets, let's bring in our next guest. He's going to be George Tillis, senior markets contributor here on the network. George, we're talking ARM Holdings. The stock's had a great run. The chip designer. Expectations are pretty high for this one going into their earnings, right?
They are. In fact, I mean, obviously the stock is higher. If you look year to date, it's up, I think, like 90%. So it's had a remarkable move. It's pulled back since its last earnings going back about 3 months or so ago. But I think a few things with ARM that you have to consider, some goods and also some balanced bads. But I mean, first off, one of the things about ARM Technologies, it's basically a fabless, a fabrication-free licensing technology company in the semiconductor realm, which includes, you know, the whole ecosystem of mobile market semiconductors, technologies for PC semiconductors and so forth. But they've actually been growing quite a bit when it comes to the CPU markets. Now, they don't manufacture like Intel, but their licensing technology is becoming more embedded in the CPU markets. And in fact, if you look at Intel and AMD, which we've publicly talked about, at least we've talked about AMD, those two stocks have actually struggled since around February. It could be a part of it, could be twofold. One, China has been encroaching on developing the CPU market for their own in-house technology-based companies. And two, ARM Holdings has actually been increasing their market share in the CPU PC markets, to which point now they have about 12% market share. Intel still leads with 68%, but then second best is AMD with about 17%. So we are seeing them grow in that area, but at the same time, the mobile smart markets or mobile technology markets have been relatively weak. Qualcomm, for instance, got a price downgrade, not a rating downgrade the other day, based upon some softening demand expectations in the mobile markets. The other thing about ARM is there's a lot of heightened expectations based on the iPhone recycle market or the super cycle that's coming about. So these are some things you have to consider with the name. Now, if you look at the overall expectations for earnings, they're expected to be down, from last year at 25 cents a share versus last year's 36 cents. And also sequentially, down from 40 cents last quarter. So compared to last year, it's down 30% in terms of estimates. And sales are expected to be just slightly higher by about 3 million from 806 million last year to 809 million, give or take a few $100,000 for this quarter, which is again less than 0.3% increase. So, I think if you consider the estimates for growth in ARM, 22% is the earnings growth estimate. But the kicker is, if you look at, since we're in fiscal 25 for this name, if you look at the earnings estimates for the full year at $1.56, it's trading around $90, 90 times forward earnings. So the PEG ratio, or PE to growth, I talk about a lot, is over 3 times on this name, and even next year, trading around 68 times. So, this is going to be an interesting one because there are good things going on, like I said, with their technologies becoming more ubiquitous in the CPU markets. Qualcomm has a license agreement with Microsoft that's due for renewal. Perhaps Microsoft chooses ARM technologies instead. That's something to keep in mind. But I think the mobile interface markets might be an area of sluggishness for this name.
George, you just hit on a lot of the things I was thinking when you look at this company, and it's an ADR. Remember, they've only IPO'd a small portion of this, and it is not cheap in terms of valuation. I have the forward PEG ratio about 3.5 times. I've got the forward P about 97. Both those are more expensive than NVIDIA. So when you look at apples and apples versus oranges, with everything going on, and isn't maybe NVIDIA just a better do? Now, don't get me wrong. Their ARM-based CPUs and GPUs are extremely popular, and the demand for them keeps growing out into the future. But in terms of valuation, we say on this show all the time, no matter what the stock is, sometimes I want to be long and sometimes I want to be short. Is this a buy here at these valuation levels?
Well, see, that's the thing. This is the challenge, and I can't say if it's a buy or not. I'm not going to, but at the end of the day, the valuation relative to other semiconductor companies, even relative to mainstay competitors like AMD. AMD is trading around 45 times earnings, much in line with NVIDIA. NVIDIA is growing, like 8 to 10 times faster in terms of earnings than AMD. And ARM Holdings, is growing slightly faster than AMD, but its valuation is really at 2 times what AMD is. So I think ARM Holdings is interesting because, you look at Qualcomm, and one of the things that's been happening, and I did mention this when we do talk about Qualcomm, is their Snapdragon processors actually have 2 functions. They process mobile telecom and of course mobile internet, but also a CPU. They're a dual phase chip. ARM's Technologies does the same thing, and Microsoft, which their Surface tablets, they're very popular, actually use Qualcomm, and they're up for renewal in terms of that agreement in the next year. So there's a potential for ARM to continue to grow its market share in the CPU space, while we've talked about this in this last year, and it hasn't manifested yet, but the CPU markets may start to see an uptick in the refresh cycle, and I think ARM will participate in that. So I think the challenge still is evaluation, which again may be a contra to price movement higher, but at the same time, the catalyst I see is growing market share and potentially now ARM encroaching a little bit more on Qualcomm's market share, while at the same time they're actually building out more of a CPU market competing with Intel and AMD. And we know Intel is also down significantly and is trading at high valuations.
I'm looking to cancel that key Qualcomm chip design license. They gave them 60-day notice a couple weeks ago on that. What comes to it? Is it a negotiating tactic, or is it maybe a cutoff there for Qualcomm? So we'll continue to watch it. Qualcomm reports after the close today also. All right, great breakdown for us. Appreciate it. That's George Tellis, Senior Markets correspondent here on the network, breaking that down. Kevin, the option market's pricing in about a plus or minus 10% move in the stock, over $14.70 either way for this one. So it has that potential to move. but I start looking at vol dispersions here to kind of give me an idea about the strategy. Now, I'm going to look at a bullish strategy, but just like we talked about yesterday in Super Micro, if you're more bearish on a name, you can do the same strategy, but just do it on the put side. I'm looking at a call diagonal here, Kev, and this is really short-term positioning, just an earnings type play. If you think this stock is going to rally maybe that 1 standard deviation or more, or maybe not, or just rally, but not maybe that 1 standard deviation, this takes advantage of a move higher. So going out to the November 15th monthly cycle, so 9 days to expiration, buy the 141 strike call. That's in the money by $2.50. So got that higher delta on that call, 9 days to expiration. And then in the near term, November 8th weekly options, sell the 152.5 strike call. So basically $11.50 wide call diagonal to the upside. You're paying roughly about a $5.60 debit on that that spread, Kevin, and it's like I said, $11.50 wide. You're paying $5.60, so you're basically paying less than half the width of this call diagonal.
So I think we're at the last time we're going to be up here, if it wants to stay up here. The SPY. Now, you listen to the gibberish today, everybody's going to adapt, like I said, to whoever become president in their own certain way. So we're going to be fine. Got another flag on SPY. Apple's up $1. Coin's up 52. CCL's up $1.65. CLSK's up nice. CLSK. All them Trump trades.
We all know how many new investors are beginning their trading journey and are eager to participate in the markets. And that's what I cover alongside Alex Coffey from 1 to 2 p.m. every day. We watch the hottest names, trending sectors, and under-the-radar stocks. Oliver, back to you.
For our active traders at lunch, Fast Market steps up the engagement to a deep dive into volatility, options dynamics, and trading trends with former floor pros Tom White and Kevin Hinks. At 3 p.m., I'm here to guide you through the closing bell. We construct the best narrative explaining the day's action, which trends held or broke, and prepare for tomorrow's earnings and other market-moving events. Spend some time with the Schwab Network. I promise you haven't seen anything like it.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Get ready to squeeze.
Welcome to Next Gen Investing. I am Jenny Horn alongside my co-host Alex Coffey, and it is November 6th. We made it. I know there's some mixed opinions about if we made it or not.
Alex Coffey.
We, of course, have our president named for the 47th now term in the United States, Donald Trump. I'm at least excited, Alex, that we have a result. I mean, that is not necessarily, I'd say, 100%, but it basically right now is, according to AP, various sources. I'm just excited to talk stocks because I really have been, I think we all have been too caught up in the election right now. It's nice to talk about the numbers. Obviously, we're working today. Can't argue with the price here.
Yeah, a couple things. Two main messages that I would have at this point, and it's not political or not, but first is the market doesn't wait for you. So if you're celebrating, if you're sad, whatever it may be, somewhere in between, the market's moved on. It's looking to the Fed, it's looking to earnings.
Winning!
And moves happened. You saw the market move well before races were called, and it doesn't mean that the market knows, but it starts pricing in probabilities. It starts moving as if things are going to happen because they become more likely to happen. And as those likelihoods increase and become more probable than not, you start to see things get priced in more and more. The second thing is, I'm not going to say that this was known ahead of time that this could happen, but the possibilities and the likelihoods were always there. It's why you don't see major shock in the market. It's why you see a dramatic repricing of volatility to the downside. Depending on what you were looking at ahead of time, you could have came to this conclusion. Doesn't mean it was going to always happen this way, but I think if you're waking up today and you're absolutely shocked by what you're seeing, perhaps you have to consider, am I looking at things that are going to the conclusions that are right? If you're investing money, or if you're forecasting sports games, or if you're forecasting elections, the information you use to make that assessment is going to help you be right or wrong. And if you're not inputting, good information, you're not going to get to the right outcomes. And when it comes to investing money, that's the game, right? If you have bad information, there's people out there with a lot of good information. They're gonna run circles around you.
I could not agree more, and I think the importance of remaining, I'd say, somewhat, you try your best, obviously, but more politically neutral, I'd say, especially when you're looking to invest, because you have to consider perhaps perspectives and options and also future, expectations that maybe don't align with your own personal beliefs, which I think is the risk of trading the volatility of an election.
Yeah, there's a stoicism that this business requires, and it's not unique to it, but it's so prevalent. And sometimes it's going to force you to do things, and
My thesis is somewhat like his. The market will work around it. Will work with it. And I already talked about it. It doesn't matter who's president. It doesn't matter who's the boss.
Husker fan, betting with the heart just does not work.
I was going to say, coming off that Bears loss last weekend, I could speak to that all too well. But we'll step away from some of the political conversation. We will be talking the equity names.
Yeah, baby.
Natural right now, tied to a Donald Trump victory. So we'll kick things off here with up vote and down vote. We'll
We'll be charting and trading those upvoted names. We'll actually step away from some of the politics with FOMO. We're talking Qualcomm, which does have earnings due out today after the closing bell. We'll then dive into the solar stock seen as perhaps the Harris trade, which is losing today. I mean, no surprise there. We'll talk more about why the solar stocks were linked to a Harris hopeful presidency and why we're seeing some weakness today. And we'll close things out with the regional banks, which I will say are actually quite interesting on the back of, again, a Trump presidency. For example, Huntington is rallying 12.19%. Wish it was 19, but it's seeing a substantial move to the upside today. So we'll dive into those names for under 30, Alex.
Yeah, there's a lot to explore today, and and then the Fed. We get the Fed tomorrow. So again, this is my big point, and I can't underemphasize this. Is the market isn't going to wait for you. We saw this last week. You had Meta, you had Microsoft, and then it was like, oh my gosh, big moves. And then you had Apple, Amazon, and you had jobs data. It just keeps coming and coming and coming in terms of things that influence the market. The lulls in the market, the vacuums of data feel weird because they're so few and far between. We knew these were going to be busy weeks. They continue to be busy weeks. Let's do upvote, downvote, not endorsements, not recommendations, of course. First one is Tesla. And, who would have thought that this would be, in some ways, a proxy, at least in the short term, for the election's outcome. But here we are. We talked about the impacts of this a little bit yesterday, setting things up. Sometimes it might not necessarily be, what this will ultimately mean for the company from a positive standpoint, but perhaps to, Elon Musk was perhaps making some enemies of the other side as well, and some of those risks might be off the table too.
Yeah, so the market was pricing in, for example, in Tesla here, in $13 move in either direction. We're obviously well outside of that, but we were bracing for volatility. I think because I've seen this name run up, I'm also, honestly a fan of Elon Musk, that I was bracing for some degree of doubt. I was bracing for the unwind of Tesla, and I just was dreading that. So to see actually shares rallying today, I think is encouraging. We're up obviously 14%. And naturally, I do think that the future of EVs right now remains pretty up for question. This is actually seen as not really the winning trade when it comes to a Trump presidency because of the EVs right now, which he claims could actually cost a lot of these automobiles, factories, jobs, and also he's relatively anti-regulation, which a lot of these various vehicle companies are requiring that right now. So he has said that he wants to focus more on the traditional legacy auto names, but obviously when it comes to Tesla, it's a different story. It's an outlier right now in the old EV versus combustion vehicle space. To me, it's because of Elon Musk. Elon Musk has become, frankly, a proxy to Donald Trump. So Dan Ives had a lot of good things to say regarding this overall environment, and Wedbush did mention that a Trump presidency, they believe, will overall be a negative for the EV industry as likely these rebates and tax incentives get pulled. However, for Tesla, they still see this as a potential positive given some caveats. So I think that's the best way to put it. This was, Dan Ives called it a bulls and Tesla's dream environment. So all things considered, you can see the sigh of relief today. Tesla shares were up 14.5%.
I like that framing that you just used there, which is sigh of relief, more so than this is going to be some huge, robust win for Tesla. Mm-hmm. I don't know what the impact long term will be. I'll say people like Dan Ives who are in the numbers, might have a little bit more know-how with some of that. But short term, there's no doubt that there's a sigh of relief and a huge jump in the shares today. And so with that, there's momentum and there's reaction, and again, there's emotion. So in an emotional time, the more you can kind of stay stoic and just react to what you see, and perhaps forecast what you haven't seen yet successfully, will give you a chance to succeed. But really nice day for Tesla shareholders today, no doubt, as it finally broke through that 270 ceiling, ironically, and it moves towards perhaps the next big line in the sand, which looks like 300, which was a high some point last year. But let's talk Coinbase. This was my proxy last night in financial markets. You saw big moves in the yields. You saw big moves in stocks, of course. But Bitcoin seemed so binary to these results. And Bitcoin started moving a lot earlier than some of those races started getting called. This is to my point. The market's not waiting for it. You saw Bitcoin cross 75,000 and some change in the active month futures. Doesn't surprise me then Coinbase, whose whole business revolves around these products, is having a nice day too.
I know Coinbase has tried to say that they're not in step with Bitcoin and that they're generating revenue from their own components. That's sure, but this was, seen as, again, another proxy, I think, especially given the fact that Donald Trump has said he's going to now overthrow the SEC chair, Gary Gensler, who's largely been seen as more of that crypto hawk. So I think for that reason, there was a hope for a Trump victory, which we got the sigh of relief again you're seeing today. I will say that both candidates have embraced crypto in this election cycle. Harris did call blockchain one of the industries of the future and pledged to support Bitcoin and other tokens as part of her economic plan. But again, I think it all had to do with the SEC chair, and that's really what it came down to. Now, we did see that in July at an RNC conference, RNC, Trump did say that he was set to set up this Bitcoin strategic reserve and, again, replace the SEC chair. However, the price of Bitcoin has been swinging wildly into this print anyway, so I do think
The
that
5925
SPX. You have to consider we've been all over the place in Coinbase. So there is that, I think risk when you look at this name on a day-to-day basis, regardless of who's in the White House.
There was, although there was some softening of the language, I think, from the Harris camp around it, there was this feeling amongst this community, and I'll be honest, I'm not a part of the digital asset community.
Me either.
I find it interesting, I think, some of the things they talk about and the things that they look for.
Woo! NVIDIA new highs.
Tie things together, you'll make sense, it resonates, but I'm not sure I'm all the way there yet in terms of a believer in Bitcoin, etc. But
Rodney.
5,000 and some change, you can't ignore it. But no doubt about it, what we've seen in the history of Bitcoin is excitement to the upside drives activity. And if you're Coinbase, whose business is providing access to trading this particular asset, you're going to enjoy more activity, more volatility, and more excitement around the product that really is the bellwether for your particular industry. So not at all surprised to see a really, really nice response in Coinbase today. One that only seems to be getting better as the day rolls on to just under $250 a share. Really, really nice comeback over the last month. 50% rally over the last 21 trading days.
Yay.
That is monstrous. And we're not talking about some micro-cap Russell 2000 stock. This is Coinbase, one of the biggest players in a burgeoning, growing industry. All right, let's move to Meta. This is, of course, another name that is no stranger to volatility and no stranger when it comes to
stranger to the game.
Big, mega cap company. Disappointed on earnings in terms of the reaction, but this has been such a huge winner over the last few years after that pivot to the year of efficiency. A little bit of a pullback here. I know there's election tie-in, but is there?
So, okay, it's interesting because of our Mag 7 names, obviously 6 are rallying today. I think that the connection to mega cap, maybe not Meta today, is the fact that there's the hope that we'll see a less regulatory environment. Just to illustrate the environment we've seen, in 2023, FTC did sue Amazon, and then the Justice Department did sue Apple in March of this year for their alleged monopolization. A judge then in August did respond to the DOJ suing Alphabet and, of course, Google, also maintaining a monopoly over its search and general text advertising. The DOJ has also suggested a breakup of Alphabet in particular. So for this reason, there's the thinking that once we see a new, obviously now administration take over, that a lot of these regulators, a lot of these governing bodies will exit their positions and we'll see less regulation on big tech. That would also benefit a name like Meta, no doubt about it. But there is also the thinking that then TikTok, its future is up for debate. I was actually reading, this is obviously just one source, so one perspective, but a Wired article that talked to actually a dozen employees at TikTok and its parent company, ByteDance, that said they actually believe, given Donald Trump's lack of interest really in the TikTok debate, they think the future is fine as far as their app is concerned, which is then why I'm not really sure. Maybe that's why Meta's lower, is that there's the thinking that he doesn't really regard himself with TikTok. So TikTok will stay. That's maybe not good news for Meta. That's as far as I can understand into the selling today in Meta.
Pretty big range today, so I don't want to discount this as nothing, but we're talking about a 1.5% decline on a really big company that has recently lost some of its upside momentum on that disappointing earnings. I think the idea that a TikTok might not get banned kind of can resonate with me. But I think the one thing that seems to have bipartisan support, if anything, is that big tech is just kind of in the crosshairs for so many legislatures and constituencies. So I don't know that I'm all in on in terms of deregulating big tech or not in terms of a Trump presidency, but I will be open to any and all ideas as to what the future might bring. One thing though, because I know this is not one that we're going to highlight in the next segment, just wanted to bring my armchair technicals. It does seem to be the 21-day EMA, which is what I use for a 1 month, is around 572 and some change, has been exactly where this stock has ran out of steam the last 2 sessions. And it looks like today it caught a bid around the 3-month EMA. So it looks like in that envelope of those 2 different moving averages between about 555 and a little bit over 572 seems to be a near-term technical range to maybe have on your radar.
Yeah, and I think that that's also a good call and also illustrating some of the weakness we've seen in Meta. It's not just today, and I think today is just a volatile day. Sometimes you don't necessarily even have to read too much into a move to the downside. Our last name today, though, is Moderna, which is somewhat apart from the course, but I do think could be affected by this Trump trade we're seeing today, especially considering Moderna does fall into the camp of these healthcare stocks that does make vaccines. And as we know, RFK, who's on Trump's ticket, has been notoriously outspoken against some of these governing bodies as well as Fauci. And so for that reason, I think we're seeing companies with a natural tie to vaccines today trade to the downside. I also think it's worth noting Moderna does have earnings on the horizon here Thursday, so we'll be watching to see how this company is planning to hit its financial goals, how it can reignite the growth story. Frankly, the story of Moderna was so beneficial by the COVID vaccines that now we need to diversify the pipeline here, because I think that Street is getting tired of losing money. We're expecting another losing quarter and not a lot of growth prospects, especially under this new administration for vaccines.
Well, and let's be completely honest, too, when we're talking Moderna, we're talking about one vaccine, and that's all this company's ever been. Well, it isn't 2020 anymore. It's not 21 or 22 anymore. The kind of appetite and desire for this, the same way that there was 3 or 4 years ago, just isn't there. And so it was already declining. You can't put this just on Trump winning or RFK being associated with the campaign. And this stock doesn't even look like it really has had much of an uptick since May. So pretty dramatic decline in this stock as it works towards multi-year lows. So something to think about, no doubt, and we're going to watch how the market kind of digests and sorts through these things as time goes on. So one of those ones that it has your attention. But we got earnings this afternoon, and it's just as possible that the market's front-running disappointing earnings as it is anything else.
It sure is, and obviously I feel like tomorrow is going to be an entirely new trading session, so I mean we could see the nature of volatility change just based on from today to tomorrow, so I don't necessarily see this move to the downside as purely associated with the political nature of this environment, but again, we'll have to see where we open tomorrow. But we'll leave it there. We'll be diving more into our upvoted names. Today we're talking Tesla as well as Coinbase. Stick around, Next Gen Investing will be right back.
Gamma on, traders. Subscribe to Schwab Network's YouTube channel for brand new limited series taking options trading to the next level. Gamma on, coming soon. Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Okie
Trading with
dokie.
Schwab is now powered by
New high.
giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Welcome back to Next Gen Investing. It's now time to dive into the charts, and joining me today is our chart master, as always, Rick Ducat. So Rick, we'll start off with Tesla. I believe this is now where we're three-peating on Tesla 3 days in a row in different segments of our show, because it is frankly that important, especially making a monster move, almost up 15% here in real time. So walk us through the chart, because I'm sure this is always an interesting one, because we move, and we move with velocity when it comes to Tesla.
Yeah, so we had a pretty persistent ceiling here. You can see our light green line that we had starting all the way back here, and more recently there, although we did make a close above that level, near about 265 or so. Excuse me. Since then, we backed off, found a little bit of support at our yellow 21-day EMA. Before that, we had the rather unusual situation of an island-type reversal where we have a gap down, sideways consolidation that found some support at our purple 252-day EMA. Then earnings provided us with another gap up. So that's kind of the island reversal. It's kind of an uncommon chart pattern. Heavy volume recently, once again approaching a volume
59.25s or 420.
Right now, there's still several hours left in the trading day. So it seems almost certain that will happen. Volume spikes show conviction on the part of traders. So if you have a big move on low volume, it's kind of less, it's more suspicious, I guess I would say, than a big move on heavy volume here. So
really?
That's where we're at right now. Still kind of within the general boundaries of this channel that we have set up here. The surpassing easily the old high there near 273.54, near the highs of the day still.
So when we look at momentum, I have to imagine momentum is seeing at least some strength today, maybe an uptick, but obviously we could also be seeing a diversion. So I'm curious how momentum is faring on a day when we're making such a monster move to the upside.
To be sure, a large move to the upside on the RSI. And it took out something, kind of important here. We had this, downward sloping, very shallow sloping red trend line here. We are breaking above the red trend line.
Bullish divergence.
Stopped a little bit short of that overbought area. It wouldn't take too much for us to get to that point, though, so be on the lookout. If the bulls can kind of push this thing over the edge as we head into the close, that would be another bullish signal here. But for now,
exactly, brother.
Levels, not quite at overbought yet, but kind of just, matching up with the recent price action here. I guess I would say that we just kind of barely squeaked above the previous highs on the RSI. I wasn't really expecting that personally. I thought it would be a bigger move beyond those previous highs, but it is above them nonetheless.
Yeah, and so obviously testing now this sort of new range here for Tesla bulls. So now when we watch, obviously this is the importance of looking at standard deviations, because we're at this range that hasn't been seen in quite some time. How do you think about now going forward looking at various price?
Yeah, standard deviation channels are what I typically use when something's making significant new highs or lows. And what this is we take our linear regression line, our blue line there, our line of best fit, standard deviations to the upside, number one, number two. So we are above the 2 standard deviation in orange there. It comes in at 280.85. We did have a big dip below it, but we are holding on above it for now. The next area, if we do pass up our channel here, maybe around 295 325 or so based on current price trajectory. The +3 channel comes in near 312, so that's one area to keep in mind here. Not saying it's going to get there or anything like that, just based on the math, that's where the third standard deviation from that linear regression line comes in here. To the downside, the old highs, green line, 273.54. Then our light green line, our repeated ceiling that we had trouble breaking above for much of the year, 265.
Okay, so a lot to look at here, especially given the nice upward momentum we've seen, snapping its 6-day losing streak yesterday and today, pacing for a second, obviously very nice session for Tesla shares. So with this in mind, Alex, walk us through your thinking trading this name for example purposes.
Yeah, so I think it's really difficult to trade names that are making massive moves like this very quickly, and it's obviously a volatile name, and it's in response to news that is somewhat adjacent to the company, but not specifically to it. And so for those who saw Fast Market, a little deja vu, it's going to be the exact same example trade that we looked at there, but it's a way to participate if you think this move is sort of that breakout technical move, and it's going to go from that former resistance of around 270 perhaps to a next test of around 300 where this stock peaked out last year in the early parts of the year. And so it's next week's 292.5, 300 call vertical. It's a debit spread, and it's structured in a way that the risk is going to be $250, but the max reward potential is twice that at $500. So it has positive asymmetry if you do get this continued move higher. And in the event that it doesn't, it always, of course, has risk, but that risk is half the reward potential. So you need a move. We need to get to 295 at least by the end of the next week, theoretically, to break even. And, of course, through 300, it can expand to as much as a $500 profit. Anything below 292.5 through the end of next week, Jenny, is, of course, a max loser. So it can actually go 1% or 2 higher and still be a losing trade. And I think that's important to clarify.
I do also think that's an important distinction here, especially when looking at Tesla and obviously some of the volatility that follows with a name that is very much closely correlated to the political nature of this current market. But now to shift gears and look at Coinbase, another name that is not also far from that path I just described. But Coinbase, I think, now signing some big relief today that we are going to see, hopefully, an administration favorable to crypto. So, Rick, walk us through this chart, because this one actually makes Tesla look calm.
Yeah, exactly, an even bigger move. Once again, though, we broke above some important points, but we haven't quite reached a critical threshold that I think quite yet here. So to explain that, you can see that since we hit these 52-week highs here near 283, that was kind of the high point that we saw back in, around February or so. We connected to our next high close here. That's about where we are ending up so far today. So we've touched on this trend line here. We've topped out around 249.73 or so around 250. But we haven't quite made it above that area just yet. Kind of curious action with our trend line here. We had this steeper blue trend line here. We had a resounding breakdown after earnings that took us all the way to our purple 252-day EMA. And then in the following days, we retested this rather shallow sloping white trend line once again. So we managed to cross above our moving averages on the back of this move. We are once again above our blue trend line. This red line right here, 235, kind of a repeated stopping point for price. One area I had my eye on, we are clearing pretty handily. But once again, a repeated ceiling, just like Tesla right here. Repeatedly stopping at about 264. So that's really the final test, I think, for this name.
Okay, so yeah, I hope that we continue to see this momentum. As we know, I feel like we started last year, actually. It was like around this time we started to see this pick up into crypto, and then we saw the fall. So now I'm hoping for the momentum to continue here as we go into the new year. But what are you seeing as far as RSI in Coinbase?
One thing I forgot to mention too, volume spikes. Once again, a volume spike today on the move. And then when we do look at momentum here, we can see that momentum, there's no real great clear trend line to draw recently. I mean, we did have kind of this downward slope right here that we have broken. The upward slope doesn't fit super cleanly here, but we do have this green line to consider at least because of the sharpness of this move that we've got today.
Bubby's here.
So it wouldn't really make too much of a difference here. But we are making a high above our previous high on the RSI right here. Once again, I would have thought it would have been a little more of a breakout from beyond that previous high here, but still a significant breakout in terms of price, as well as the RSI behaving mostly how you would want it to. So it's hard to find too much wrong with this move so far.
lot wrong with this move, especially if you were one that was long time invested in this Coinbase name, and I think it has been hoping for this upside and finally maybe a cleared hurdle as far as the bulls are concerned. But as far as now price levels that we're watching, what are you keeping on your radar? Again, obviously the importance of standard deviations here.
Yeah, and like I said, I would be really curious to see if we can have a convincing close above this longer-term trend line starting with those yearly highs. It looks like we're kind of poking our head above that area right now, so maybe this move could continue. I mean, it's already at a pretty breakneck pace here, so maybe not too much gas left in the tank for today, but you never know. I mean, the high points, the runaway, highs can really, get out of control sometimes, much more so than when something is making significant lows. When we're at the lows, people are like, oh, there's some value here. When it's the highs and everything keeps exploding, it's anyone's guess. So beyond that, if we were to keep moving upward, 264, repeated high point, like I mentioned earlier, right here in our pink line. Then we also have our +1 standard deviation channel, our white line there. So between like 264 to 270 with the resistance zone, based on those two ideas there. To the downside, we've got our linear regression line, our volume profile point of control between like 220.
The 59.25s.
So that would be a supportive area that many traders
I just watched it. I didn't trade it. I feel stupid.
That would be like where we opened up. So that would be a low point to watch.
$4, and it even went down below 4. I'm sitting here watching this, saying, "Oh, yeah, should I buy it?" We had 3 black crows. It was at 360. And then all of a sudden, boom! 8 minutes later, it's at 520. Yep, I said it. I said it out loud so everybody can hear it. Yeah, I was really perplexed yesterday as I went to go vote. I took a big toke, a little bit of my smoke. As I walked through the door, the church was open wide. There was little green arrows running side by side. So I walked into the gym, and they were in all shapes and sizes. All different colors, which really was enticing. Short ones, fat ones, little ones, big ones, white ones, yellow ones, black ones, red ones. As they stood in line, nobody would look at each other. But down from a distance, I saw me a brother. So I looked him in the eye and I gave him a wink. And I said, I hope you are voting for my favorite president, Mr. Trump. What do you think? So he walked up and he pinched me on the ass and he said, yes, brother. Thank you very much.
With Schwab Investing
New high.
it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab Investing Themes. 40 customizable themes, up to 25 stocks in just a few.
I was saying poetry.
Get each and every angle, the whole picture, everything.
I was being a poet. Oh, you're just kidding. Oh man, you know how to get under my skin too now. That's when I started noticing a friendship starts to weaken a little bit. That's the first warning sign. Ain't that right, Randy? Randy's going to act like he's not even listening. Well, you know what? I think everybody could really be thrown off if all of a sudden we get a little sell-off in here. Big knives. Yes, I was. I was definitely showing off my poetic skills. That's what got me so many women when I was young. It's not how I hung, it's how I sung. Whoa! That was a little bit too much information, Jimmy. Please. Well, my investment, I'm up. I'm up $3 on my investment of Hillary. Should buy another 600 shares or another 1,400 here. I'll end up with 2,000. When it's all said and done, I'll be selling some of my Hillary. There's a lot of bad stuff going on with Hillary right now. Okay. Should I sell it and wait? I mean, if I just bounced up 10 cents, that'll be $60. POTR. Oh yeah, IWM. Are we in the now? You got a little sidetracked, didn't you, Jimmy? Yeah, I did. IWM's what I was wanting to look at.
I'll leave it there, and great preview and breakdown as always. Caroline Woods, senior markets correspondent for the network. And so now we trade this name, Alex said. I do think that obviously getting it an overall tech lift today, but it's not been, I mean, the same AI player as a lot of its peers.
Yeah, it's had a nice 12-month time frame, but not a nice 6-month time frame. It's actually down about 4% over the last 6 months, and so looking to change that medium-term trajectory with positivity if they're able to deliver that. I looked at a bullish strategy as it is FOMO after all, and a little bit of upside here today into the report. I talked about the fact that this
FOMO after all.
Adjusted EPS basis.
What?
At any point, unless you go all the way back to 2014. And so if you think that they're going to have positive numbers again, and then it's going to break that 7 out of 10 negative streak here, perhaps you are optimistic. I looked at a call diagonal spread. Buying the November 15th 180 call, selling this Friday's November 8th 192.5 call. The whole package for a $3 debit means you have $300 in risk, and it looks like
QCOM's had a good day,
but it's tilted on its axis in order to reduce and remove that upside risk. So increases that margin for error, but it also increases the risk associated with the trade. A little bit bigger debit with these ones, but you don't risk money in one direction. So still would like to see a move towards that 192.5 short strike, bullish strategy, and one that's looking for Qualcomm to pop post earnings. If that doesn't happen, risk defined, limited to 300.
Yeah, and I think the importance of being risk defined here is also key, because we again could see some pullback obviously for the rest of this week, because there's still a whole Fed meetings ahead. So lots of news still to get through. We'll leave it there for FOMO, but coming back to talk an area of weakness today, and that is the solar space, which was seen as perhaps a winning trade if Harris took over in office. So we'll discuss some of the fallout with solar today, coming up next.
Do do do.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, any device for free. Schwab Network.
Welcome back to Next
Gen Investing. I'd now like to welcome in Jeff Pierce, the Senior Manager of Derivatives Trading for Charles Schwab, to talk, unfortunately, the one area of the market that is not doing so hot today, Jeff, and that is solar stocks. I know that was seen as a perhaps winner of the Harris trade. I really, frankly,
I don't know. I'll have to look it up.
Because look at the last several years, they were not beneficial or benefiting from the Biden administration. I couldn't have imagined that would be the same for, or I could imagine that would be the same for Kamala, but I do think that more of the story is ties to Europe. So walk me through your thinking here, because I have a hard time even saying that this is like the anti-Trump trade, because I don't really frankly think it is.
Yeah, I mean, it's a good point. I mean, we've seen the Inflation Reduction Act and what that was supposed to do for these companies. That doesn't necessarily materialize, at least in the fluctuations within the stock. Now, we see today that, companies are down big time. Sunrun is down 28%, First Solar down around 11%, Enphase down 17%, while Solar Edge is down about 20%. And a lot of this reaction is coming from the win from Donald Trump, as well as control of the Senate and lead the House, potential lead the House, sparking concern that these green energy policies are going to get pulled back, specifically that Inflation Reduction Act. Part of the campaign from Trump's platform was to include a repeal or reduction of these energy tax credits. Those tax credits, including initiatives where you get a 30% credit just to install solar, that was really the hope there, was that was going to spur growth in renewables, and subsequently we were going to see revenues, jump for these companies. Now the big concern is that consumers are going to face higher prices for solar, which is bad news after we've come off inflation and a high interest rate environment.
You think so, buddy?
Pressure on demand. And you have to remember, this industry is heavily driven by how affordable it is to the consumer, right? Somebody can want to have solar panels, but really it has to be done at the right price. And secondary to that is the question around tariffs and how importing the components that are necessary for these products, how that's going to be hurt by supply chain issues and elevated costs, even though
others trying. It sounds like an analogy for the country writ large right now. Stephen, thanks so much. We appreciate your time today. Kelly. Stephen Cahill from Wells Fargo. Coming up, we'll check on a name bucking the trend today. The worst performer on the S&P is Supermicro. The shares down 22% to be at their lowest level since May of last year. The server maker sinking after announcing preliminary and unaudited weak first quarter results and lowering its sales guidance.
Not good.
Out to say they don't know when they'll file annual results, warned they could miss an SEC deadline back in August, but are working to, quote, become current again with its financial reporting. Remember, the company has until November 16th to get its finances in order or risk being delisted again from the NASDAQ. And they are a big customer of NVIDIA, but NVIDIA shares are rising today. We're back after this on the exchange.
This is interesting. What just happened here? Okay. Oh. Better net. Man, what I'd run on the SPY. SPY's actually got a new high, but it doesn't. We're double topping, triple topping, or however topping.
NBC.
We've got some more breaking news on the race for the White House. Vice President Harris has called President-elect Trump to congratulate him on his win. That's according to a senior U.S. aide. And she will deliver her concession speech today at 4 p.m. Eastern
She's probably
at
relieved.
the alma mater of Howard University in Washington, D.C. You can see the electoral count there, 291 for Trump, 223 for Harris. Coming up, the so-called Trump trade surging today. DJT, Bitcoin, Tesla, it's all higher with Tesla hitting a 52-week high as well.
God.
But just how long can the rallies last and for how much more can they rise? We'll get a technical take on that next.
That's kind of ugly. Yeah, that ain't right.
Good. Welcome back with major indices hitting record highs. Let's dig in further on the Trump trade. Our next guest expects this rally to continue through year end. Joining us with the charts is Ari Wald. He's Oppenheimer's head of technical analysis. And Ari, this is a moment when a lot of people are going to say I missed out, or it's too late, or I'm going to buy in and it's going to go the other way. So I'm glad you're here. And what do you see? What jumps out to you?
Yeah.
Well, I'm reminded of market watcher Paul Montgomery's line, which is that he said the most bullish thing the market can do is go up. I mean, let's take notes here, Kelly. We got new highs, cap-weighted S&P, equal-weighted S&P, NASDAQ 100, Russell Microcaps, Russell 2000 Small Caps. We got risk-on leadership in the financial sector and the industrial sector as well. We got credit spreads reaching new, its narrowest spreads of the cycle. We got interest rates moving higher, and seasonally strong tailwinds coming behind us in November, December of an election year, typically where you see a year-end rally. From my view, these are the conditions that are consistent with an upcycle that should extend into 2025. Stick with the market, buy pullbacks, the bull cycle's intact here.
It's obvious that the Russells are playing more catch-up than, for instance, the Dow or even the NASDAQ. What does that tell you? Or do you worry about it? I mean, do you stick with things broadly, or do you go for the places where there's the most momentum, like the regional banks, like Bitcoin, like the small caps? I mean, I just, it's, I guess it's the cynic or the pessimist in me that is afraid that you look at some of these moves and you jump in and they're just pulling forward a lot of future gains.
There is some of that, and that's why we have to stick with our methodology. We have to stick with our discipline. We are momentum investors that are overlaying technical analysis on top of our process. And so as far as the areas that exhibit strong momentum, again, in thinking about these Trump trades, U.S. over world makes a lot of sense to us. These world markets hitting new multi-decade relative lows for the at the sector level. I think it's sticking with financials, industrial.
Yeah.
These have been sectors that have been overweight in our work for the entire year, just given the broadness of strength in capital markets and infrastructure on the industrial side as well. Conversely, I suppose small caps we're using more as a market signal. I still prefer the relative strength in large and mid-cap stocks, but the fact that small caps are working, I think just continues to give us conviction that the trades that we do like should continue to work. Because if there is going to be a rollover, it probably does happen in that small cap index first.
And the momentum going into year end, the last several years, I would ask traders about this and say, well, when everyone, 2022 is a different story. It was a weak market in October, and it got, did it get weaker? I mean, but otherwise we've seen such strength. And is there any reason to believe we're not going to have a repeat of that pattern? Of strength in a rally, in a run, kind of right into the end of the year.
I think it's set up that way because here's how you have to think about it, Kelly. There's what the roadmap, kind of historically speaking, what has happened. Typically, there's strength not only in Q4, especially in an election year, and then what is happening now. You can't just go based on seasonals and historical patterns alone. But when what is happening in the market right here, right now, is confirming that roadmap, it does add to our conviction here. So. Again, we had a downtick in October, markets down 1%, again, historically consistent with that roadmap. Now they're starting to break higher into the seasonal strong patch. I think the setup is there as we move into the third year of this full cycle, which in our view is really just starting to attain some of those average thresholds. I would argue that we haven't reached overvalued levels just yet either.
Three charts in particular, you see kind of bullish technical calls, if I'm correct, on Bitcoin, which you kind of flecked at, on Tesla, and also on the 10-year. So when you say bullish on the 10-year, does that mean you think yields keep rising?
10-year we could speak about probably less bullish on that market in particular in terms of interest rates. I think the rates are being supported by pricing and economic growth. Next resistance at that 4.5% with some bigger long-term resistance at 4.7%. I don't think rates hit a new high this cycle. I still think that Fed policy and just this later stage cycle could limit that upside, but they're well bid as it is. Where we're seeing meaningful upside,
SPY showing some weakness.
Bitcoin and Tesla. Again, it's about looking at that strength, moving through resistance levels. Bitcoin just getting above year-to-date levels as well as 21 peak. Same action in Tesla too.
All right, Bitcoin 100K or no?
It'll get there. Through time, it should get there.
Ari, thanks so much. Ari Wald from Oppenheimer. That does it for the exchange. I'll see you on Power Lunch with Tyler right after the break. Don't go anywhere.
I'll be here. Waiting. The breakout. Now SPY's pulling back to the 63. We might find some support here. Watch my trade, and I'm right back. Okay.
Good afternoon, everybody, and welcome to Power Lunch. Alongside Kelly Evans, I'm Tyler Matheson, and we have, yes, a huge, and I do mean huge, rally on Wall Street following Donald Trump's election victory. All three averages at record highs. Over the next hour, we will look at stocks and sectors making big moves and asking whether this is a one-day rally or if there is more to come. This seems to me to be a factor of two things. Number one, the idea that the Trump administration will be business-friendly, be regulatory, and number two, the relief that people feel that there was a resolution.
There is an outcome.
Yeah.
The certainty. This is the kind of uncertainty they didn't want. Usually they like that. Dow's up 1,500 points at this hour. It's outperforming the S&P, the NASDAQ. The Russells were up about 4 or 5% last check. Incredible. We'll continue to run through some of the biggest movers, including crypto, with Bitcoin soaring to a new record and getting back up to 75 and then some this afternoon. So it's picking up some more momentum. We'll talk about what exactly the crypto community is looking for or thinks will happen under President Trump.
And we have a Fed decision just to make it even richer this week coming tomorrow as yields have soared since the last meeting, which was a 50 basis point cut. We start with the huge rally on Wall Street, the major averages all hitting records after Donald Trump is elected president now for a second time. Is this just a one-day rally or sustainable for the long run? Marianne Bartels is chief investment strategist at Sanctuary Wealth, and Bob Pisani is our senior markets correspondent. Marianne, how do you answer that question? Is this a short-term reaction or something that might be more enduring?
I think this is something more enduring. We think the market was actually positioned to rally. We were getting buy signals prior to the election, and we've really been looking for the market to trade up near 6,000 by the end of the year. In fact,
you didn't email me, man, baby.
A 6,000 target in the first quarter of this year. I'm really liking the action that I'm seeing and the breakouts that I'm seeing. I think this is setting up a market that will do very well in 2025. And I think, extended tax cuts can help hit the bottom line of corporate earnings. And I think that's another reason why you're actually seeing the markets rally so strongly, that this is going to be a positive impact on earnings.
What do high and rising bond yields tell you, Marianne, and what do they portend, if anything, for equities?
So I know that, Trump being elected is an inflation trade. We're getting the backup in yields. But I also think that's part of having a stronger economy. But when I really look at yields, I think they're rallying within a downtrend. So I think they can rally, particularly the 2-year. I do think we can get a little bit higher. And I think we can rally into the end of the year. In fact, seasonally, we tend to see rates rise as we go into the end of the year as businesses need capital. But as we go into next year, I actually think we're going to actually see interest rates come down. And that will be another reason why equities can rally and why PE multiples might actually expand.
Bob, let me turn to you to maybe kind of highlight some of the notable movers. We've talked a lot about what's breaking out today, but obviously clean energy and other areas are under a significant amount of pressure as well.
Yeah, this is kind of like the ultimate stock market fireworks display here. I mean, look what you have here. You have promises of lower taxes. You have promises of less regulation. You have the Fed cutting rates. You've got a strong economy, and you've got earnings that are already strong going into this. My heavens, you can't write a better scenario for the stock market.
And we got Trump as president.
The question for me as the stocks guy is, can this translate into real earnings growth on top of what we already are seeing? In the case of banks, I think the answer is yes. Here, we've got higher rates, generally good for banks. We have less regulation promises out there. We have some merger deals like Capital One Discover that might go through. So yes, in the case of banks, I think it can help earnings. Can it help elsewhere? Well, we've got tariff promises out there that potentially could help things like the steel industry, and we're seeing steel stocks respond. So yes, there are areas where earnings growth definitely can occur as a result of this agenda. But Tyler brought up a great point. This higher rates thing is a problem. There's something that doesn't gel here with tax cuts and promises to fix the deficit. With what we have 50% of the spending is on Medicare, Social Security, and defense. Something doesn't quite gel in that story, and I think that's what we're going to be examining. Tyler's got the right point here.
Marianne, let me turn to the question of Bitcoin, which is up heavily today, or strongly, I should say, for 75,000. Where do you see it going, and what's the propellant?
So it's really hard to put a valuation on Bitcoin. So we really rely on the technicals.
Spy dropping.
And we've had a significant breakout in Bitcoin, and I think it's targeting in the near term up towards 100,000. And what a lot of people may not be aware of is that Bitcoin has actually been the best performing asset class. It broke out in the first quarter of this year and consolidated, and only recently broke out again. I think you're going to be hearing a lot about crypto and a lot about Bitcoin in the coming weeks, months, and quarters.
Marianne, on that point, I had some friends texting me last night and saying, I shouldn't have sold my Dogecoin and I shouldn't have sold my Bitcoin, but they think, fundamentally, it's that you described it as an asset class. They still worry or think about it as more of just sort of a silly, kind of empty, or perhaps even shady kind of thing. So how do you and maybe we're past that point, but these are people who now wish they had held on to it, but we're just kind of looking for the fundamental justification to do so.
Well, Callie, I would first tell them it's not too late. They can get back in. Can't do, shoulda, coulda.
George, getting on CNBC.
Bitcoin itself is really being treated as a currency, as an asset, a store of value. All the other cryptos really are, most of them are a form of technology. They're really not a currency. And I think, if we can get some clarity and regulation, and importantly, some education around what crypto is, you're going to see investors much more comfortable adding a portion of the crypto market to their portfolio. But this is really a demographic move. If you talk to young investors, they already have significant exposure to the crypto market. But if you talk to the baby boomers, many of them don't even have exposure. So I think there's a big demographic divide within this space. But I've been very bullish the space, and I stay very bullish the space.
Bob, is there an M&A boom right over the horizon?
My heavens, you could sure see it today. I mean, look what was going on here in some of these deals. I mentioned Capital One and Discover, but even elsewhere, you've got Nippon Steel and U.S. Steel. They were up today, and that was contested by not only the Biden administration, but even Donald Trump said that he was opposed to it. And U.S. still is up today. Now, again, some of this is on the tariff play here, but yes, absolutely. And Lena Khan is one of the least liked women on Wall Street, people on Wall Street. The other one is Gary Gensler. And Tyler, I think you are going to see there is dozens of lawsuits against the SEC for overreaching on regulations right now. And one way that people are enthusiastic is they're hopeful that the new SEC regime is going to let a lot of this sort of go away by simply not fighting some of these lawsuits. And I think you're going to see a lot of discussion about that in the weeks and months to come.
That would be very interesting to observe, to see what happens there. Marianne Bartels, thank you. Bob Pisani, always great to see you, sir. Pleasure.
And let's turn to the action in the bond markets now. And what an action it is. The 10-year yield nearing 450, about 445. The 30-year was up about 20 basis points last night. And the 10-year is up 80 basis points since the day before the last Fed decision when they delivered that jumbo rate cut. Rick Santelli is talking to traders on the floor. He's here with some more buzz and discussion, Rick.
Yeah, absolutely. You know, as you look at an intraday of 30-year bond yields, which you just were describing how they've soared, we had a terrific bond auction today, primarily because soaring yields are a good concession. Many investors jumped into the fray. Another thing going on today, the distance between U.S. and European rates is widening out. It's over 200 basis points, and that means something for debt and deficits. Let's go talk to Jim. Jim?
What?
I'm sure you saw the results of the auction and you saw a 4-digit increase in the Dow Jones Industrial Average. What are your thoughts today?
Well, we've been talking about the steeper for some time, right? Here it is. And why are those things happening? It's not just Trump. There is structural inflationary pressures at work here, right? We are rebalancing.
What, you don't think your house insurance, your car insurance could be going down anytime soon?
The reality is Trump is selling what the world wants, which is populism. We want a rebalancing of inequality. And if that's going to happen, that's structurally inflationary, right? Tariffs, we may need them, right? Immigration policy, we may need it. But that's inflationary, and that is what the curve steepener is all about. The problem is, once that gets going, once that longer end starts going up, you have bigger structural issues, and inflation it can be really entrenched. It can cause a real spike.
Now, I can't disagree with any of that, but even at a 460-ish 30-year bond yield, do you really think that the market's petrified of a huge bout of inflation? I would have thought we'd get a whole lot more than 18 or 20 basis points for that fear factor, truly.
Yeah, I think people are doubtful of what is coming, right?
How could they be doubtful of what's coming? We're up 1,400 points in the Dow. You know, the only thing that combats debt and deficits? Growth. Growth, growth. And it certainly looks like somebody out there thinks that earnings are going to be better down the road.
Yeah, earnings could be better down the road for a while, right? You run a higher
dollar
policy.
You know, everybody says Trump hates a strong dollar. If you have a strong dollar, what does that do to the price of your imports?
Yeah, I mean, your imports go, cheaper, right?
And we buy a lot of imports. Look at the trade deficits.
We're not importing as much, and we're putting up boundaries so we don't import. If you raise tariffs enough, right, it's going to counterbalance that. At the end of the day, look, we're in a structurally inflationary period. The Fed is stimulating at the same time. That's bullish of assets for the time
being.
Now,
the Fed's balance sheet's roughly $7 trillion, right? Okay. Many think housing's a huge problem, and it is. And how do you make housing less of a problem? You get long-term rates down, right? I don't think that the Fed could do that without using QE.
Right. So QE's coming. You better prepare for it.
A $7 trillion balance sheet, and we are having an economy that's cooking in grease. We have job growth that's still pretty good. If they use it now, we're not in a recession. What happens when things get bad?
They'll keep doing that. And look at what
Wasn't good last week, buddy.
We're going to use QE because we have
We might not be surrounded by water, but we're surrounded by debt, okay? Then I will tell you there is an answer here. I think the Fed should overease. If the Fed overeases, they can make adjustable rate mortgages like 5-year look better, because I don't think that they can do anything with long rates.
In the short term, it'll look good. We'll export inflation. Along the way, we can do that. That is an America First policy at the end of the day. We will run things very hot, though, and at the end of the day...
we're talking about it on this big political day, and I think you're a wonderful guy. You're the smartest volatility guy I've ever talked to. Don't you think when people say America First, that's patriotic versus, people want to make this an evil dynamic? What's wrong with, when people have families, they think of their family first?
No, it's a great question. Look, America First is important, but at the end of the day, if we are going to be the biggest, strongest economy in the world, we also need to be a good steward of the global
Yeah, see, that's where we disagree.
At the end of the day, you need to do both, right? I don't think we have to be, these things don't have to be diametrically opposed. We can meet in the middle.
We could be nicer globally, but I certainly don't want to be overly welcoming it. Look at how China repaid us.
I can agree 100% with that. It needs to be a balanced policy.
I agree, but we have had no balance in the last.
Balanced.
Corner, right? We need to come together and do both. We need to do what's best for America.
All right, you've heard it from the SIBO. We need a kumbaya moment. Chen,
amen.
Let's start it right here. Back to Kelly and Tyler.
Thank you both. Really appreciate it. Another big vote set for tomorrow, the Fed's decision on interest rates. How will the Trump presidency impact its policies going forward? We'll ask a member of our mock Fed panel next. Power Lunch will be right back.
Need to jump in the shower here soon. Get ready to go see Dr.
They said credit losses came in about $500 million or 2/3 of a billion less than what the street anticipated. So that's the positive there. Higher net interest income, lower provisions, encouraging on the rate loss also. And if you look at revenue trends driving favorable earnings, job market's pretty robust, the consumer's still relatively healthy. And then you look at the interest rate market at this point. We've got that steepening there between the 2-10 yield curve, and that's helping a lot of the financials today with the anticipation that they're going to do better under a new administration. Now, we did have early on, the stock was up probably about 9-10%. We saw a big call buyer in here as far as unusual option activity goes. And this was in the November 15th monthly cycle. So just 9 days to expiration, this trader was positioning really short term. They bought 6,000 of the 170 strike calls, paid an average debit, pretty hefty because these were deep in the money calls. They paid $18.40 for 6,000 of those. So that break even of $188.40 over the next week and a half. Stock's already above that break even as the stocks continued to move to the upside. Call volume about 3 times normal daily average volume that we've seen over the last 5 trading sessions. So yeah, this trader had a nice trade here. There was already open interest of about 6,000 on this strike. They're either adding to their position or it's another speculator out there coming in on this strike. But you're buying deep in the money calls. That's why you're paying the hefty option premium. But the stock's already moved above that break even.
Yeah, the reports say what you say about the investor optimism that folks are looking to a more favorable regulatory environment. The financials, names like Capital One, but also Discover and Synchrony taking off today. And maybe we'll see also more mergers and acquisitions that had slowed down or had been blocked or had a lot of hurdles to get through.
Yep.
There you have it. Okay, let's
There you
move
have
on
it.
to Delta, a name you're watching. Not buying into the rally here. That's what that trader says. Let's hear what the idea is.
Yeah, before I get to that Delta trade, Nicole, I kind of wanted to highlight the fact that yesterday on Options Corner, we hit on Synchrony Financial. There was call buyers in there, big, massive call buyers in there. Stocks leading to the upside, up nearly 20%. So that trader did well on that unusual option activity yesterday that we highlighted. But moving over to Delta, the stock's up over 50% so far this year, up another 5-6% today. As travel and experiences, that demand is still there. Now, their last earnings report wasn't the best out of all the airlines that reported, but they have the best balance sheet out of the airlines. The airlines, Delta's CEO said consumers prioritizing premium experiences, business travel continuing to pick up. They repaid nearly $4 billion in debt for the year. They did give Q4 revenue guidance that came in a little bit lighter than expectations, but that didn't stop the rally from taking place. And I mentioned RSIs. You're going to have to start focusing on those on a technical basis. Our stock's overbought. Well, this one is. If you listen to the RSI, it's about 73 level at this point. So anything above the 70 level considered overbought on a technical basis. Can that this strong rally that we've had over the last 2.5, 3 months in the airlines continue? Well, the unusual option activity that I saw, maybe betting against that a little bit, maybe hedging a long stock position, or just speculating that we're going to see gains capped out here because traders sold out in the December monthly cycle, so about a month and a half till expiration. They sold about 6,000 of the December 65 strike calls, collected an average credit of about $1.97. So that break even of just under $67 a share for this trader over the next 44 days, that's about 8% above the current share price in Delta, with call volume about double the normal daily average volume that we've seen over the last week of trading. So this might be somebody that owns the stock, wants to create some yield by selling these out of the money calls with the expectations that, hey, the all-time high is 63, probably won't get breached, so why not sell some option premium up there? Or it might be somebody that's just saying, hey, the airlines have run too far too fast, and maybe they need to consolidate or turn lower.
Yeah, look, and as you talk about consolidation, I mean, first I'll just say what an incredible run for Delta and hitting new highs, an exciting, let's say, 1 month, 23%, 3 months, almost 60%. So an incredible run there pertaining to just mergers and acquisitions. If you checked on Save today, which I'm sure you have, but folks, I mean, you've seen, you know, when you look at these names, this was a name that was originally in a deal, didn't go through, and you can see this name Spirit now up almost 10% today. So some of these are really doing well. And the idea that GDP will improve because people will be feeling better and all through success of businesses and such. We will see. Yep. Microsoft, last but not least, you had one bullish play you found there.
Yeah, you know, this has been one of the underperformers over the last several months here as far as the Mag 7 goes. The stock hit an all-time high of $468 in midsummer. It's only up about 10% this year. And I think a lot of that has to do with maybe slowing growth in their cloud computing business, that Azure pipeline that they have. Now, they still grew at 33% last quarter, so it was a good quarter. But they cut guidance moving forward as far as growth numbers goes. We just had Google Alphabet report also. They had 35% growth in their cloud side of their business. Copilot getting off the ground. They said that it's doing well, but I think the monetization of that moving forward, along with their big, giant investment of nearly $13 billion in OpenAI and ChatGPT, yet to be monetized at this point. But this has been the underperformer here. You see the chart there. Will it take off? Well, I think a trader's betting that it's going to be taking off over the next couple of months here because saw some unusual option activity in here in the February 405 strike calls. So you got about 107 days till expiration in this position, but a trader bought 40,000 of those calls, average debit of $30.60. Now, these are in the money by over $10, so that's why you're paying that hefty option premium, and you have over 3 months until expiration in this position. But this trader bought 40,000 of them, paid just over $30 for them. So the break even for this trader where they start profiting is about $435.60 over the next 107 days. That's about 4.5% above the current share price. So you don't need a massive move to the upside. But they did sell out of some of their long February 390 strike calls also. So repositioning up to the 405 strike calls, but big open interest position in there now.
Yeah, and you know, as you look at Microsoft and a possible boost in big tech with this particular administration and other things that we've spoken about, such as M&A activity, there's things that are happening on the other side. One thing that just crossed the wires was about with Congress, with the House and the Senate really leading with the Republican side, looking at cannabis and legalization, less likely now. And when I pulled up MJ, for example, that's down almost 20%. I hadn't seen that yet today. So it's sector by sector, folks, but the big picture is the major averages are higher, and if you're broadly investing, you're probably making some money today, right? In the 401k or IRAs. Yeah. Tom White, thank you so very much. Good to see you. We'll all rest tonight because everybody was up all night, and then we have the Fed tomorrow. So look, we get a little quick, everybody go to bed early tonight. Coming up, the CFO of Xometry will join us for the watch list. It reported another record quarter. We want to dive in to some of the keys to this company's success, how AI and a power shift in Washington could affect the manufacturing industry. We'll be right back.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. A record day on Wall Street. New president-elect President Trump ready to head into White House and office in the new year. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. We have a few market movers as well. Now, we're talking about a lot of highs, but there are names that are under pressure, such as Supermicro. Those shares have fallen to new lows, new 52-week lows. The company has acknowledged its filing delay may impact the business, lowered its guidance for the quarter. The latest revenue outlook now $1 billion below the previous estimates. The lowered expectations come after this company has had a time of it. The auditor resigned last week, citing a lack of trust in management. Supermicro shares are now down more than 80% since hitting all-time highs in March. Let's take a look at shares of CVS Health, on pace for the biggest one-day gain in more than 16 years after topping revenue expectations and announcing a management shakeup. The stock also getting a boost from Donald Trump's election victory for the quarter. Company reported a 6% revenue growth. CVS also announcing that former United Health executive Steven Nelson will take over its Aetna insurance business. Even with today's gain, shares of CVS Health are still down about 20% on the year. All right, we're looking at shares of Xometry, rallied to an 8-month high. The company reported record revenues and gross profits in the latest quarter. So let's hear more about this. Talk with, right now, Chief Financial Officer of Xometry, James Milne. Thank you so much, James. Apologize for that. It's good to see you. I was reading some of these things on the bottom here about the victories and the new highs, and it's a different environment, as you're moving a company forward. You'll have maybe different things to deal with, but congratulations to you and your team for an incredible quarter. What drove everything?
Great, thank you very much, Nicole. It's great to be with you. Yeah, quarter 3 was another record quarter for Xometry. Revenues of $142 million, grew 19% year over year. This was really driven by growth in our core marketplace business, which grew 24% year over year and saw record gross margins of 33.6%. We also continue on our progress towards adjusted EBITDA profitability, which we now expect to pass in Q4 coming up.
And that investors must really like. I mean, they always look for profitability, right? That's what it's about. Do you feel like you were ahead of the game with that? And can you keep these kinds of numbers going? Because these are some good sizable numbers, with revenue increasing 19%, profit increased 21%, gross profit 34%. I mean, these are some big numbers. So tell me about profitability and what the outlook is.
Absolutely. Yeah, we've seen great consistency. Our teams have been executing really well across our major strategic initiatives. Those include continuing to expand our marketplace menu to have more offerings for our buyers on the marketplace. We're growing internationally really well. We grew 55% year over year in the third quarter, and we continue to deepen our relationships with all of our customers, especially our enterprise customers. That's driven marketplace growth of about 22 to 23% year over year for 24.
It's amazing how you're doing the connection of these enterprise buyers with the suppliers. What kind of demand do you see for when we think about AI too? I mean, when people say, is AI sort of in the 7th inning, or is it very early in the stage? Because I think people are expecting astronomical growth, but maybe it's slower growth or in fits and starts. How does that fit into the picture?
Xometry is a great case study in the application of AI through digitizing manufacturing. We're using machine learning and models that help us with more and more data and a larger and larger supply network, bring optimal pricing to both our customers, our buyers, as well as to our manufacturers. And so you're seeing a real application of AI, machine learning models to a great business opportunity. We think we're still very early. We think there's a lot of growth ahead of us as we continue to grow and expand our marketplace network.
Yeah, and nice to see the margins growing as well. What kind of spending do you think companies, businesses have more clarity on who's going to be in the White House, what kind of taxes they may have to pay, what kind of health care they may, this is what companies have to sort of put on their balance sheet. They need to know what they're up against. What kind of spending do you expect from these businesses? They got to spend to make all these deals really go and happen. I'm sure you're expecting some good things.
Well, we certainly think clarity is good, and I think for the business environment, we're excited about any administration that can invest more in manufacturing, and especially U.S. manufacturing. We like to continue to see investments in reshoring and automation and innovation. We do that ourselves. We provide 250 scholarships in 6 states and the DC for the future leaders of manufacturing. So we're excited about the opportunity to see further investments in industry and manufacturing, which the Xometry marketplace can enable more buyers to connect with more manufacturers and drive more innovation and growth.
Is the Trump administration sort of more manufacturing, build it here, do it here in the States? Could that be helpful to you?
It's great that really both parties support manufacturing here in the US, and so I think that any of those policies or any decisions there that can help, again, continue to invest in our manufacturing, our education, within the talent that we have in manufacturing, and within the technology. For us, manufacturing in the US is about high tech, and high tech is manufacturing. And Xometry as a marketplace wants to really enable buyers to buy more from manufacturers, particularly the smaller and medium-sized manufacturers that are on the Xometry marketplace.
Tell me more about your partnership with Google Cloud.
Yeah, tell us about it.
Is it a one-time deal? What do you expect from that? People love to hear about this.
Yeah, so we've had a partnership with Google AI with Vertex, and that's really been important to us in helping us expand our what we call our marketplace menu. So having more offerings, more processes that we can provide to buyers on the network. What the partnership with Google has done is it's enabled us to unlock our existing data, and in Q3 we were able to announce tube bending and tube cutting as big new opportunities to auto quote, use our AI pricing, and order directly through the Xometry marketplace.
Yeah. I think of Elon Musk on board the Trump team. He's big on saying, there's a lot of builders and exciting things that can happen here in the States. So pushing for that. We're seeing some price targets here that are running the gamut from some of the analysts. I know you can't specifically speak to the stock price, but you've had a nice run. Week to date, right now you're up, 40% almost. Today up 20%. Those are some nice moves. I mean, what are the shareholders?
Yeah, what are them moves?
And you're delivering, and I guess you can keep doing that with these financial results.
Yeah, we think we're still very early in the opportunity here for Xometry to really digitize manufacturing, to bring more simplicity to these complex supply chains, particularly around custom manufacturing. And I think that, that's in the numbers. In another record quarter, as we continue to grow our active buyers, as we continue to grow our supplier network, we now have more than 4,200 manufacturers on our platform, which enables us to provide solutions, supply chain solutions to more and more buyers across more and more industries. So we're excited about the growth that we've delivered here, but we're very excited about the opportunity ahead.
Yeah, absolutely. So this is a big picture here, and some great growth. Headwinds, hurdles, things that you're sort of working on, whether it's a big picture, just all businesses are facing, or is something in your business in particular?
Well, I would say that it has actually been a soft macro environment for industry, for manufacturing, over the last couple of years. And we've been performing, at this level within that environment because we think we provide a really great innovative solution to our buyers and to suppliers. And so, again, we're encouraged by, as we look ahead, if there are ways to continue to inject innovation and investment into the manufacturing environment, we think that's great for our network as well as great for the overall economy.
Okay. James Milne, thank you so much. Great to see you. Always Chief Financial Officer at Xometry. An incredible move on the stock today. Thank you for being with us. Congratulations to you and your team on a successful quarter. Still ahead, we take a closer look at two sectors one guess thinks could do well under a Trump administration, and the reasons that you can consider some of the plays for ExxonMobil, Lockheed Martin, Amazon, Palantir. All of these are higher today. All right, we'll be right back. Markets at records highs.
every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Welcome back to the watch list. I'm Nicole Petalides. All day we've been covering this market rally with the Dow up over 1,400 points. You don't see the Dow up 1,400 points.
No.
Quite a rare day with the election of Donald Trump as our 47th president.
That's right,
of the
baby.
United States of America. That has been decided along with a Congress that looks to be Republican on both Senate and House floors. Much to discuss here as the Dow, the S&P, NASDAQ, and Russell are all at new highs, and Bitcoin too. So what areas should we be watching? What areas could benefit more or most? Andrew Aarons, founder, partner of Synergy Advisory Management Group, is with us. So your thoughts on this market move and the opportunities that lie ahead, Andrew. Good to see you.
Good to see you, Nicole. How are you?
I'll be right back.
Long night last night.
So what do you think? New highs? New highs are coming, or what?
Yeah, I do. I'm a bull. I've been a bull all year, and this may have been unexpected for a lot of people, but the market looks pretty good. I guess the key today, what we hear about Donald Trump is less regulation. You're seeing the financials do well today. You're going to see, in my opinion, some of the oil stocks do really well today. And I continue to think technology stocks will continue. So I'm very optimistic. We're raising our forecasts a little bit here as we go into 2025. And right now, I think it's a good time right in the market. We're in a nice seasonal pattern here beginning in November through May. And I think the market's going to do pretty well as we wrap up this year.
So it's interesting because right now we've had the S&P 500 at new highs. Do you see S&P 6,000 coming soon? We're at 59.21 as we speak.
Yeah, I think the market's going to broaden out quite a bit here. I think we're going to see some of the small and mid-cap stocks start to really rally here. I think there could be some pretty big business incentives, and couple that, like I said, with less regulation. I think some of these small and mid-cap stocks, we'll see some more money flowing into them right now. Let's not also forget that there was a lot of money that's been sitting on the sidelines waiting to see what was going to happen here. And, I think we're going to see that as we go through the end of the year.
And so with that, let's get to some names that you think could work in a portfolio. They could be what? Winners, great winners, ExxonMobil.
Yeah, I looked at, some of the areas, Trump has been talking about, drill, baby, drill. And, ExxonMobil could be a big beneficiary. The stock was up quite a bit in his first presidency, the first year. ExxonMobil was up over 20%. And, I think that Trump may reverse some of the renewable energy subsidies and that were imposed by the Biden administration. So I think that this could be very well for the traditional oil companies out there. And I expect that Exxon should do pretty well towards the end of this year and going into 2025.
Yeah, I mean, you heard in President Trump's speech last night, he actually was talking about oil. He was talking about RFK and how he could go ahead and do a lot of the things that he was looking to do, but stay away from oil. That's going to be liquid gold that we need here at home. So you can see that that was a big interest of the president and surely his future administration. How about a name like Lockheed Martin? He said that he also noted in his speech that he would like to build up the military and not have to use it. That means more of everything, right? More defense.
Right. I mean, that's like I said, Lockheed Martin came to mind. Exxon and Lockheed Martin came to mind immediately when I heard that Trump had won, and I think that that will be a great stock as well. You know, there's quite a bit of money going to be going into the military. He showed it in his first presidency as well, and Lockheed Martin in his first year was up 30% in 2016. So I think that these are great places to go right now. And I think that a lot of these stocks, you know, even though they have done pretty well, haven't fully participated, and I think there's going to be a lot more upside.
And I'll tell you, those names are not soaring one way or another. Many names are up 5, 10, 15%. Lockheed Martin, General Dynamics, Northrop Grumman, you know, they're up, but they're up modestly. I won't put Boeing in the group because Boeing has its own stories of push and pull there. But you are seeing bigger reactions in different sectors. We were talking, for example, about cannabis a moment ago. That's down 20%. So you are seeing like the ones that are really moving in a big way. Definitely energy would go in there and financials. But good up arrows here for defense stocks. Last but not least, Amazon, a nice growth play there. Oh, you also have Palantir. Amazon and Palantir.
Yes, I mean, I've been touting Amazon all year. I continue to think it's going to do well, especially going into the holiday season. I expect Amazon to put up very good numbers. And Palantir is a stock that I've been obviously watching for a while. And I think that you really have to keep your eye on Palantir. I know they came out with great earnings recently, and they do have a high valuation. But, you know, they work with the government and they work with the commercial customers. And I have a feeling that they're going to do very well under the Trump administration.
Yeah, I mean, Palantir did so incredibly well, took off after its quarterly report. Were you impressed at that time?
Yeah, I mean, the report looks good. You know, they have a lot of demand for their product. Again, AI is, you know, in my opinion, still in the early stages, and I think that a lot of these stocks are going to continue to do very well moving forward.
Okay. Andrew Aaron, Synergy Advisory Management Group. Thank you so much, Andrew. Great to see you.
Thanks for having me.
All right. We will bring in our panel to discuss the Fed, the path forward for the Fed, how Donald Trump's election may factor into that. Of course, we have the Fed meeting tomorrow. We'll find out lowering rates again, most likely, right? Another meeting in December. And there are folks who think Jay Powell stays on board and folks who think not necessarily so. We'll be right back.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to the watch list. I'm Nicole Petalides. This trading day continues high arrows across the board. The Dow's up 50, almost 1,500 points. New highs everywhere. Some pressure, but now we made it through the election. You did it. Now we have to give you the Fed meeting tomorrow, 24 hours away from hearing. Tomorrow we'll have a special show, by the way, at 2 p.m. to hear what the Fed has decided. Will they once again cut rates? And what will happen after Trump becomes president? Let's bring in our panel to discuss all of this. So Jason England is with us, Managing Director and Portfolio Manager at Simplify. Christopher Bartow, Investment Analyst, Fort Pitt Capital Group. Thank you both. Jason, what do you make of it? I mean, there are a lot of folks who think that you get a cut tomorrow because that's certainly what Fed funds futures are showing. Maybe a pause in December. But if Jay Powell is cutting, that Trump will leave it alone.
Yeah, I think obviously it's priced in. It's, when we got the strong September numbers when it comes to job inflation, there was that moment of market participants thinking this meeting would be a skip, but I think it's now priced in after we got the weak October jobs report that they're going to definitely cut by 25. I think they'll still do another 25 in December as well. I think they want to get it back down to a less restrictive level, somewhere around 4.5% is what we'd be by the end of the year. And then they kind of look and see next year with the data, and obviously now with the new administration, how they're going to proceed forward and try to get it to a more neutral level. And that's the key question, is where is that new neutral level and how far more do they need to cut to get to it? So I think right now it's a kind of on autopilot from here.
Yeah, and as you noted, core PCE at 2.7, unemployment 4.1%, that there seems to be a decent balance there. Christopher, what do you think?
Yeah, I don't want to, thank you for having me. I don't want to sit here and kind of sound like a yes man and agree with Jason, but I pretty much do agree with Jason for the most part. We do plan on having a 25 basis point cut tomorrow from the Federal Reserve, and they have been on this kind of streamlined path where I think we kind of need to see what the new Republican candidacy is going to implement in terms of their tax cuts, and if they continue with the Tax Cuts and Jobs Act. We have to kind of see how the 10-year reacts, and overnight we kind of saw the 10-year shoot up to around 4.44, and we have to see how these policies end up affecting inflation. So we think that 4.5 by the end of the year on the federal funds rate does sound relatively the most likely scenario. In the next year, it's really going to be dependent on how these policies start to pan out and the implications of them on inflation.
Yeah, understood. And it's not just the tool of cutting rates. There are other tools. They're running off the balance sheet. There are things that I think about the Fed that happen, right? They run off the balance sheet. You have had the government buying treasuries at one point. There's money printing. Jason, where do these things fit in? Because some people talk about them to supply, and do we have sort of too much money around, and that's part of the problem?
Yeah, and I think that's is a good point to bring up about the balance sheet. They've always wanted, Yellen said it back in her term when they were running off the balance sheet the first time around. They wanted it to be like watching paint dry. It's just going to be in the background. But now you have an issue here where it's coming down, and they did reduce it. It's not coming down as much as it was, but still, at what point does the money supply get drawn out of the system? And then if you have this new administration that is inflationary, and I'm not saying it will be, but that's the inference that everybody thinks that it's going to be tariffs and tax cuts, so thus more treasury issuance and deficit spending. And so what does that mean for the money supply? And do you need to see them maybe stop the balance sheet or at least maybe reduce it again and not roll off as much? I know they want to get to a treasury only balance sheet at some point. So does that mean they quit with the runoff in the treasuries and they just let mortgages run? It's a lot of uncertainty heading into next year now that we've got the new administration. At least that uncertainty is behind us. So it is something that will play into the Fed's thinking, is not just the Fed funds rate and how much more to lower that to a more neutral level, but also the balance sheet and how that tool is used going forward. And especially if they get to a point where they need to use QE again, and if there is any kind of shocks down the road, how that is implemented when you have a new administration that seems to be on the surface a little bit against the Fed, or at least that's what we've seen with some of the rhetoric around President Trump.
And look, Christopher, we've had central banks doing a coordinated effort of cutting rates. I mean, we've seen that around the globe. A final quick thought, Christopher?
Yeah, no, I completely agree for the most part. And I think one of the more important things we kind of have to look at is, has policy necessarily been restrictive, looking from a top-down approach? Because earlier this year, the M2 supply of money has been hitting highs, and we also have a little bit of correlation between the equity markets hitting highs and multiples expanding on the back of this artificial intelligence theme. So looking at kind of the last 2 years, 3 years, and this rate hike cycle, has it actually kind of tightened policy? And we could point to a few different areas in terms of consumer spending, which has held up greatly, but we also have to kind of take into account that the top kind of 20% of income earners in the United States also spend about 40% of the consumption and spending. So you kind of have this balance between restrictive policy and rates being where they are.
Jason England at Simplify, Christopher Bartow, Fort Pitt Capital Group, thank you both for being with me here discussing the Fed tomorrow, 2 p.m. We'll have a special edition of the watch list for you. We'll have that breaking news for you in the market reaction live from the New York Stock Exchange. Download our free Schwab Network app. It's available in the Apple App Store. Tune in 24/7, schwabnetwork.com. Record day on Wall Street. I'm Nicole Petalides. Market on close with Oliver Rennick next.
So what can you watch at the Schwab Network? Let's break that down for you. Every day from our studios here in Chicago and on the floor of the NYSE, we deliver more than 8 hours live programming. We kick off every day bright and early at 8 a.m. Eastern with a futures show breaking down commodity markets, futures, and technical trends. At 9 a.m., I'm in the studio hosting our 2-hour open bell show, Morning Trade Live. It sets the blueprint for traders for the day and invite top analysts and investors to determine what's driving early action, how to interpret the news, what's on the agenda for the session. Hey Nicole, tell them about our shows at the NYSE.
Thanks, Oliver. Welcome everyone to our beautiful NYSE studio. We are here on the New York Stock Exchange floor, broadcasting live each day. I host the Watch List, which provides investors a fun midday update on the major news stories and themes. Best part of being down here is we are right in the center of the action. The energy is palpable. The sights are unmistakable. It's back to Chicago now. Jenny Horn.
Thanks, Nicole. Hi, everyone. I'm Jenny Horn, the host of Next Gen Investing. We all know how many new investors are beginning their trading journey and are eager to participate in the markets. And that's what I cover alongside Alex Coffey from 1 to 2 p.m. every day. We watch the hottest names, trending sectors, and under-the-radar stocks. Oliver, back to you.
For our active traders at lunch, Fast Market steps up the engagement to a deep dive into volatility, options dynamics, trading trends with former floor pros Tom White and Kevin Hinks. At 3 p.m., I'm here to guide you through the closing bell. We construct the best narrative explaining the day's action, which trends held or broke, and prepare for tomorrow's earnings and other market-moving events. Spend some time with the Schwab Network. Promise, we haven't seen anything like it.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Market on Close. Hope you're enjoying the election pop. Thanks for tuning in. Got an hour left to see if we can push it any higher. Stocks have been on the run all day. Crypto prices going wild. Equities generally across the board lifting off with extreme conviction. Relief across markets is the baseline. And then on top of that, perhaps a little euphoria, a little speculation, little gambling appetite about what could be coming down the road, as there is quite a bit of movement and quite a bit of technical breakouts and some major sector and thematic moves. Market thinking there could be some major differences in terms of which groups win or lose under Trump the sequel. All right, S&P's right now up 2.5% almost. Great rally, breakout on the chart for the S&P 500, sitting real close to the highs of the day. We'll talk later on about half an hour to check in ahead of the close on where the important gamma levels and the squeeze points are for those following the options flows. Shane Skinner is going to jump on with us as we assess maybe how far this can go and what is going to happen tomorrow too with the Fed. Will that get in the way? Will it add to it? Obviously, anyone who is short is getting blown out hard here today. And those who stuck around long stocks getting paid for it. As we're looking at a new high across the board. Exception is the Russell, but the Russell is at a multi-year high, taking us back to 2021. A big small cap rally is really one of the cornerstones of today's unique moves. Perhaps the most important is just VIX coming down and the dollar going up. Some interesting combos here of some themes. So let's start with the dollar, where I think a lot of stuff kind of funnels its way into. Firstly, though, volatility coming off. That was sort of the baseline for an uncontested election. A big victory by either party at least removed the possibility of political chaos and turmoil. So that was number one, VIX coming down to 16. Then on top of it, you get some of the speculation on what this is going to mean for the economy and specific sectors. But the big picture takeaway is that it'll be pro-growth. That's the message very clearly being espoused by the market here, with bonds down, dollar up, while risk assets are also up. Dollar getting in the way of the commodity trade, and a pretty clear message about the U.S. gaining a further leg up on the rest of the world. Not that it hasn't had one already, but if you think about the dollar trajectory over the last 6 months, a 6-month chart, big dollar slide we had was when it looked like basically the Fed was going to have to sort of follow the course of the rest of the world in easing policy to aid their economies. Keep in mind the rest of the world has been a step ahead, but earlier this year in the summer when it looked like our economy was going to slow down and the Fed was ready to cut, that kind of looked like we were joining the pack a little bit, starting to blend in with the rest of the world. Now the big dollar rise and the rising yields suggest we need to tweak that assessment a bit. And then even though we're expecting to get 25 bips tomorrow from Jerome Powell, I think it's very much now looking at a wide range of potential outcomes for the Fed longer term. We'll talk about that later on in the show, but I do think the dollar move here is really crucial. It comes back also to the conversation that I had with Brent Johnson on the dollar milkshake theory, which is basically anything that favors the U.S. economically will then have a reflexive effect in the currencies, given the rest of the world lives in dollar-denominated debt that just propels the U.S. further. So if you're going to throw tariffs on top of that as well and really flex the American might, which it seems like the market believes Mr. Trump will do, then it makes sense for the dollar then to keep moving higher. So that's a big move on the day that fits with yields. The catch for bonds is that you don't want to get too carried away with saying everything today is just about today. It's really not. The bond move goes back weeks. The dollar move goes back weeks. This is adding on to a trend of already pretty clear American exceptionalism in terms of the economic surprise rate beating the rest of the world. The fact that we did a 50 basis point cut and all our economic data started beating expectations. And the services number that we got yesterday from ISM, that should have been a major bond sell-off on its own. So there is just some continuation, maybe a little makeup too, in the bond market with yield spiking to 4.4. Could have easily been a move that happened yesterday on the ISM services. That's how big of a print that was. So those three things, yields going up and the VIX obviously signal relief. The dollar adds on top of that economic potential, the message there. And then finally, when you look at the financials, that's where you get into some of the more speculative side of policy, maybe on what could happen regulatory-wise, tax-wise. But in the meantime, the regional banks are responding very well to higher yields, and that's making a lot of folks scratch their heads, going, wait a second, I thought these stocks hated higher yields. Well, keep in mind the bond curve looks very different. The bond curve was flattening into the regional bank crisis as we were getting inversion. As the Fed was hiking, we had the ramifications of that were screwing up banks' balance sheets. But it was also those that were generally not diversified and that had major maturity risks. There's still some of that out there for sure, but when the yield curve is in a different shape, it's a bit of a different story if there's going to be growth attached to it. So right now, financials also, I think, are taking a little bit of speculative energy from the possibility of deregulation too. So those things will have to give some time to see what follows in terms of policy. Expect pretty big moves here. Whether or not this launches all of these trades into the stratosphere, into a new trend, is still a pretty arguable concept. So this is going to take time to sift through, but obviously we've got some pretty big things throughout the session here that are fairly novel. I got Jenny Horn here with me to take us through some more of those trades. Compared to this morning, Jenny, I mean, everything looks basically the same. Bonds kind of firmed up a tiny little bit. We lost earlier, you know, it was kind of a broader rally. Staples, real estate down, utilities, but like, you know, healthcare in there as well. For the most part, it seems like everything's pretty bullish, pretty optimistic, same as it was this morning.
Yes, and I feel like we as Americans, why are we so trained to like fear a good thing? Like we can't just celebrate the win today. I mean, we're having a pretty nice session. We're up almost,
totally.
I mean, like we were up some more substantially short earlier, but we're up, I mean, 5.7% in the Russell here. I mean, we're rallying. We can't just embrace a good day because I feel like we're so quick to find some of these holes. Like, sure, Trump might not be a friend to the EV trade. Trump might, roll back some of the I'd say, credits overall for the EV trade, but also change the energy landscape. And it seems like right now we're very quick to find solar to be the loser of like the alternative energy trade, sure. But then also, I think that you look at the market, and I mean, not that money is the only thing that matters, but frankly, M&As, regulations, we have a Mag 7 that's been crippled with regulations. I mean, I know
crippled.
Big part of it. Yeah, and so I feel like this is a hugely good thing. So I'm celebrating the win. More M&A again, I think also could lead to more companies going public again. Like we could see some of this market activity that we've since sort of been on pause about. And I think that is what's so huge, is this was obviously a country seeking change. We got to celebrate the win where it's a win. And also we have a Fed that's right now reducing its rate. So again, another good thing.
Yeah, a lot adding up here for sure. I think it's a very good point, a very astute point on the M&A and the deals stuff, because the antitrust aggression and the kind of like big government interference of M&A. Some of these deals you could totally argue were good for the consumer. Some of them were like laughable that they really cared about stuff like fancy handbag M&A deal. Like who cares about that stuff? So to your point, I actually think that's maybe one of the most important things because there doesn't even have to be any new policy for there to make a difference in terms of M&A, deals, combos, IPOs. All there has to be is just a less onerous version of what's been going on for the last several years here.
And I feel like the market does a good job shaking it off, frankly. But I mean, like, this is to be like dollars just being wasted. I mean, to illustrate, 2023 FTC sued Amazon. Then we saw in March of 24, Justice Department first started going after Apple. Judge in August did respond to these claims that Alphabet, Google was operating a monopoly. The DOJ has, of course, said that they should break up the company, which would be a landmark decision. All this being said, we've been going after the biggest companies in the world. I think Trump being, basically anti-regulation is huge. Then you look at Capital One and that Discover Financial Services merger. Many are saying that is one that we could see the president greenlight. I think it's also interesting that Kroger, I believe, is rallying today on that Albertsons
Totally.
merger.
That's another one, too, where I'm like, why was this such a big deal to begin with? There's a billion different grocery chains.
Right.
You know, and they were trying to spin this whole notion that it was the grocery stores pushing up prices. Like, come on. So there are a few of these that, however, the Capital One deal, maybe, when it gets into some of that consumer finance stuff where there is a lot of, power of the companies, that's where I kind of do. Maybe it is useful to have, a little, scrutiny, but, so many deals were blocked, canceled, and I also, when we talked to the folks at the NASDAQ, their IPO pipeline's been pretty filled, but then kind of stuck coming out of the gate where all the indicators suggest they should have been doing more IPOs. So I think there is that sort of intangible optimism and sentiment that you're totally right on.
And maybe that's why, we heard unbelievably good guidance from most of these banks. Maybe there was a lot of this that was already, frankly, being priced in from banks, where they were imagining a scenario where we would see, more and more of these strong balance sheets translate into growth. But I think that today we're seeing a reflection of a sigh of relief, maybe. I know that we're not going to see the rising tide lift all boats, but I frankly think it's way too quick to say also that, I know that these regulators are already lobbying right now Republicans to keep a lot of these green energy, really revisions that we've seen over the last 4 years to stay into place. I think it's way too quick to say that Trump is going to come in and say, erase everything we've done in that space for the last 4 years. We don't know his actions yet regarding the energy trade. I think it's way too soon to make calls that this is going to be, damaging for the energy space.
Well, the other thing, too, is that despite all the effort made to support green energy businesses by the Biden-Harris administration, the solar stocks have been doing awful. So it's
trust the price. Look at the price of solar stocks.
The flip side to me too is the other side with the crude oil thing, which is okay, we're gonna drill, black gold, all this stuff, and then it's we've already been drilling. We hit all-time highs for drilling under Biden-Harris. So is that gonna change that much? I guess we could go further up in terms of production, sure, but we're already number one. So a lot of these things seem like a little bit of excitement, a little hype, a little speculation, but then there's all.
Oh, there it goes.
Wired, I believe, that said that they believe Trump, or at least believe that
Tilray
Trump's going to be a friend of TikTok, where he's not really concerned with it. So TikTok is staying, and maybe I think this is a reach because
he did all the YouTubers and stuff, and he was hanging out with all the TikTokers.
He's friends with all the TikTokers now. So
they got him elected, babe.
There's this article that says that because of that they're supporting him, he's supporting TikTok, or at least not concerning himself with TikTok, so that's not going away. Maybe that's why Meta's lower. I think it's a reach, but it is kind of compelling to see that as the only red name of our green sea of tech right now.
Yeah.
Buddy.
That's a pretty interesting thought. I did really cozy up to the podcasters and YouTubers.
You did.
So I guess a lot of them do get their TikToks.
Will TikTok go away? That's a question I don't concern myself with too often, but maybe it won't.
Hope we don't have the TikTok administration. All right.
Bobby is still alive.
Thanks, Jenny. Good thoughts. Very lot. tactical thoughts. Appreciate that. Let's talk some specific trade ideas. Joining me, Danny Kirsch, the head of options at Piper Sandler, always armed with good ideas. What's going on, Danny? Did Trump just kill the China trade? Let's start.
Trump just killed the China trade.
Eric, because you
Oh,
talked about
God.
that, didn't it, the last couple times you were on?
Yeah, we got the huge burst higher. We talked about using options to get long. That worked out great. I think China rallied 80% over the course of 6 weeks or 3 weeks, maybe in a shorter period of time. I think from here, we'll see what happens. Again, this was always, China seems to be a place to use options, not to own the stocks, because you get these headlines. There is still a meeting this week where we should get the results of further stimulus on the 8th. So we'll see if China.
Having technical
Does
difficulties.
more to stimulate the economy. The other thing to think about is Elon Musk's role in the cabinet, like what type of impact he'll have on the U.S. relations with China. I know Tesla has a big business in China, so that might soften the blow to some extent. And yes, Chinese stocks are underperforming, but where we're seeing huge underperformance is Europe, which is kind of interesting, and I think that ties in with this huge dollar strength. So if you would have said 3 months ago Trump was going to win in a blowout, I'd expect China to be down 10% plus, and it's down, but it's not massive for the extent of the victory.
Okay, that's an interesting point, and it had been kind of flailing a little bit, the trade already, right? It was already kind of struggling a little bit. China the last few weeks, basically stuck going sideways.
Yeah, absolutely. This is like a trading. The country's almost become like a punter's market, because you just have to wait for stimulus, get a huge boost, and then monetize and move on. And right now, there hasn't been any incremental stimulus that's changed the narrative. And until we get that, it's sort of just dead money. But again, that's why we like owning longer dated calls here, as opposed to trying to be super tactical. And I'd rather own December, January, FXI, K-Web upside at play for maybe some softening around the China rhetoric from the Trump administration, because I think everyone's expecting massive tariffs, no deals, and that's just not necessarily what's going to happen, especially with Musk being having some role in the Trump administration this time, you'd think.
And that's a good point, too. Obviously, we did a lot of business in China over there. And the notion that I think day one, probably the market goes to the extremes, tries to kind of price in some of the more extreme outcomes.
What do you think about that there?
Most extreme moves seem to be in banks, financials, whether it's small banks, big banks. I mean, a monster move for the financials, especially when paired with the bond market. Tell me the logic there, Danny, because you, for those who don't recall, were one of the first to put the short regional bank trade on our map before it happened in 2023. So what do you think about the way regionals are rallying next to yields today?
Yeah, we've been bullish financials for the last 6 months. So Piper Sandler's had a great call as far as continue to stay long. KRE breaking out, I think took out the pre-SVB highs today, and on a relative basis, we like XLF calls compared to KRE because the implied volatility is so much lower. KRE, it's moving a ton. Obviously, I think it's up 10% today. You're getting these huge moves, but that's priced into the option. So from here, we think XLF has more upsides because the options are so much cheaper on a relative basis. So we continue to like XLF upside. We won't be short KRE, but here it just seems like it's less obvious because you could lose on implied volatility coming back down. And this whole story is this deregulation story where I heard the woman before mentioned, yeah, there'll be more deals. That's great for regional banks. The whole banking environment should get a lot easier. It's also good for large banks. Large banks will definitely take part in the M&A, like the M&A party. ECM will pick up. DCM will pick up. There'll be a lot more deals to be had. So I think financials will work from here. And if you look at from November 6th to December 31st, 2016, I get it's a different time. Banks are already at all-time highs. But that being said, XLF rallied 17% over that 6 weeks. XLF is up a little over 5%. I just think there's way more upside into year-end, into next year. And again, the volatility is just very, very reasonable. We looked at like XLF, January 50 calls. I think they're $1.25 now. Stocks 49 and change. Just the break-evens are de minimis. If you get another move like today over the next 3 months, which you'll have earnings, you'll have a few Fed meetings, you'll have this start. You'll have like some clarity around what Trump will do on the policy side. There's just a ton of upside, and you're not paying a lot to get exposure to that upside.
And this time around, is the yield curve more amenable to a functioning regional bank with long-dated maturities on their book? Even though yields are going up nominally on the long end, the fact that it looks like it's more growth-oriented, is that better than what was happening a year and a half ago?
It seems that it's also a steeper yield curve, and I think to some extent they've been wearing, steeper. They've been wearing this risk now for a few years, so it's been, they've sort of been able to wear this hold to maturity risk, de-risk to some extent. There's been mergers, there's been some failures, but from what's left, what's out of the rubble in this dereg market, they should have a lot more profitability going forward, assuming the long end of the curve doesn't blow out. And that's the
It's a deal, man. Stop it.
That's why we're a little hesitant on small caps. The small cap rally today, I think Russell's up 5%. I'm a little skittish there because of this move in rates. Like our strategy team has put out a great chart that just shows, when the 10-year over the last 4 years has gotten over 4.5%, that's when we start to see a little bit of pullback in the S&P. We see a little bit of pullback in S&P, in Russell, and Russell's futures positioning. If you look at like July of this year, July you had that huge Russell rally and that low CPI print. Russell futures were super, super low into that CPI, were super, super negative, the positioning into that CPI print. So clients were very, very short Russell futures. You had that low CPI print, you had this massive squeeze. Now, I don't think people are super, super long Russell, but you can see from this chart, this is just net positioning amongst basically hedge funds in Russell. It's not short. It's not like it was in July.
Yeah.
It's gotten a lot longer. It's a lot. I think people are there, and Russell's been. Yeah, it's not super long, but it's not super short. So I just think if you're betting on a further squeeze, that's over. That's today. And now, if rates continue to move higher, we'll see what the Fed does tomorrow. I actually think the risk is they're too dovish and the long end blows out. But if they sort of stay on message, it should be okay. But if the long end keeps blowing out, I think these small cap stocks could give back some of this huge, huge rally. And what we've seen is like chasing Russell on these big updates hasn't really paid off. It did in 2016, but I think we're in a different environment.
All right,
especially where rates are.
So it sounds like the better way to express the long trade then is through the financials right now versus.
Absolutely.
Okay. Hey, Danny, real quick, since you mentioned the Fed, glad you do. Tomorrow, you've got a chart looking at the average absolute value moves around the FOMC. We're pricing in a, right now, what about average move?
Yeah, like a 90-bit move, which we've moved 2.5% today. I actually think it's pretty cheap relative to how much we're moving today, relative to how much we moved in the past. This is just the historical moves around the S&P. That's a bar chart, the blue, and then the orange line is just the implied move. It's roughly 80 bits for tomorrow. Between any sort of like a continuation of the move today, plus the Fed, I think this is very, very cheap. You'll have, you could do everything pre-Fed, and then you have the post-Fed. we like just owning S&P straddles for tomorrow on potential continuation of more volatility near term.
Okay. 25 still a lock?
Yeah, I mean, they're cutting 25, and then we'll see how dovish they are. I didn't even see, I was looking today, Fed Fund futures didn't really move a ton. Obviously, the long end's been selling off.
Not much.
But Fed Fund futures haven't really moved. And we'll see. I mean, we'll see what happens with Powell. He'll address, obviously, the new president, but I would imagine they'll stick with 25 bits, stick with what they're saying. We don't get a new set of dots, so it shouldn't be too shocking, but who knows? And again, we moved 2.5% today. We're pricing at 80 bits for tomorrow. Just based on that, I think tomorrow options are cheap.
Understood. Thanks, Danny. Great to check in. Good having you today. Appreciate that. Nice assessment of the market. When we come back, we'll dive into some stocks, talk some tech, and some picks. Be right back. Plenty more ahead here.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know, Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Okay.
Accelerate your market knowledge and shift your perspective into full gear. Real-time example trades, a full hour of trading insights. I'm Tom White. I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network. Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
All right, let's talk some investing and some stock picks. Joining me, Reese Williams, the Chief Investment Officer at Wave at Capital Management. Reese, welcome back to the show. Good to have you here this afternoon.
Thanks for having me. I'm looking forward to it.
So how much as investors should we complicate this, trying to figure out all the potential policy and to inform our stock picks, or should we just go back into the stuff that was all working before?
Well, I do think that the safest thing is to stay with the secular winners because, you know, who would have predicted the landslide with Trump? I don't think anybody was out there saying that was going to be possible. I think the market had gotten pretty comfortable that if Harris won, there would be a Republican Senate. If Trump won, there'd be a Democratic House, and there would be a little bit of a checks and balances going on, and nobody would get a lot done. And now we got a situation where Trump can really run the table. So I do think that's what's different. You have, and I think you've been really great on this with your call about shorting bonds. That has been the great trade, and that is frankly the risk to the stock market is if the bonds keep going. I do think if the bonds stabilize here, we're okay. But we're not going to keep going up 2% a day if the bond yields are also rising.
Okay, and Danny was just saying 4.5% on the 10-year sometimes gets to be problematic for equity valuations. How much do you think stocks can stare down the bond sell-off right now without losing their cool?
I think I just don't think it can keep going at this pace. We can obviously go a little bit higher, and predicting the exact point that everybody goes no mas is really hard to know.
Sure.
There's a lot of animal spirits being released right now, but I do think that the bond market can't keep going at this pace. Could it go to 450? Could it go to 475? Maybe. I think 5 would be, kind of a fire alarm.
Well, one thing that you point out, reading your notes, that I think is important, we haven't really talked about yet, is the potential for the regulatory atmosphere to lend itself to more energy production. It seems like mixed messages from his team so far on things like nuclear energy that have been a hot topic lately, but we know that we've got basically techno genius Elon closely connected, so I imagine there's probably going to be an openness to figuring out new ways to power all this stuff.
Yeah, and I think maybe the market's seizing on that because, clearly I think the market likes a bull in the China shop, which is what Elon Musk represents when it comes to going to Washington. But clearly there will be more of a deregulatory aspect of things, and that's going to be good for gas and for pipelines and for nuclear construction, all of which have been slowed down in recent years.
As far as the AI trade, how do you think, because today we got the Russell, we got banks, we got all this stuff, basically the other 493 outside the Mag 7, which a lot of folks have been looking for them to lead for a while. What does that mean in terms of structuring our portfolio if we're in a bunch of big tech? Is there real, massive rotation here?
Well, other than Facebook, all the others are doing okay, and Meta, excuse me. But so I think that there's probably not a massive rotation. But clearly the new punch is coming from some of these smaller cap stocks. But I also agree with your last guess that if bonds go up much more, bond yields go up much more, that's probably not a great recipe for the Russell 2000. So I do think maybe a safer bet is to stay with some of these secular winners, like the Mag 7 represent.
Okay. Right now, looking at Mag 7, NVIDIA obviously been a major leader. How much do you think this can trickle down into the second half of earnings to other tech names? Anything you like outside of the big leaders?
Sure, and unfortunately, I can't mention individual names, especially on the smaller side, because some of them are reporting, new in the near future.
Okay.
But I will say that one thing that is, I think, important is I do think you want to stay with this AI trade. If you look at, who just reported, Palantir, Astera Labs, there was some expectations that they would do pretty well. The stock still leaped higher. If you look, and this is not a comment on the upcoming report, but on the June quarter report, when Axon announced that they had a Gen AI product, that stock leaped higher. Not only was there a Gen AI product, but it was actually selling. So I do think the market is very hungry for evidence that Gen AI is working, and if you are in a company which can demonstrate that, your stock price is responding well.
Yeah. I like that. Any hope for the lagging kind of cyclical tech plays, some of the more personal computing related stuff? Do you think maybe the bottom of the cycle can be in?
I think the bottom is in there. And you look at I think you've got NVIDIA on the screen right now. You look at NVIDIA, that's done super well, but the rest of the semiconductors really haven't. Dell is way off of its highs. HPE is, off of its highs. So this has not been a broad-based semi or tech hardware rally. It's really been very unique to NVIDIA. So I do think that next year there will be some sort of PC refresh, there will be a cell phone refresh, and a lot of that's to take advantage of some of the things you can do with AI. But I don't think it's this quarter's earnings. So if you're expecting big upside to the December quarter or the January quarter, I don't think that's what's going to happen. And I think that's something to caution people with NVIDIA. NVIDIA is ramping a Blackwell chip, which is their new chip. Very exciting what they're doing. But it's hard to manufacture this. It's big. And the question is, can they get as much out the door as they want? So I don't have a great call on the NVIDIA quarter. I think Blackwell is going to be great for next year. But the January quarter guidance, may not be the big upside that maybe some people might be expecting.
All right. Great to catch up, Reese. Thanks for the thoughts. Hitting a lot there with us. Appreciate that.
Thank you very much. And great call on the bonds.
Thank you. Appreciate that. Reese Williams, Chief Investment Officer at Wave Capital Management. All right. Figuring out how tech fits into the portfolio post-election, like the thoughts coming up. Let's look at the options flows. Let's see where the pinch or the pain points are in the market, whether or not we're going to get squeezed even further higher. Be right back.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
Accelerate your market knowledge and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast
I'm
Market.
Kevin Hicks.
Tuesdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Always clean is Jim.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips.
Well,
Schwab investing theme.
I will see you later.
Themes, up to 25 stocks in just a few clicks.
Heading to the doctor.
All right, let's talk about some options and flows, dealer positioning, and more with Shane Skinner, Manager of Trader Services at Charles Schwab. Shane, what's going on the desk today? Is it busy over there?
Very busy. A lot of movement in this market today. Like we kind of said yesterday, the expectation was if the election went smoothly and there wasn't a ton of uncertainty and it was a clear winner early on, ball was ready to get crushed and this market was ready to go higher. And so that's what we saw. The market seemed to be very pleased at the outcome. And so now I guess the big question is going into Fed, does that shift anything? But like we said yesterday, that 16 level on VIX was expected to sort of act as support. Pretty much caught support right around there. So this is pretty textbook, I think, in terms of positioning and then the outcome and the effect that followed, driving this market up into the 5,900 range.
Seeing us break out 59.33 right now on the index. To your point, VIX down at 16.5. Pretty much the 2 points that we expected to connect, basically, right?
Yeah. The expectation was like 5,800 was pretty much a given. If this was going to break to the upside, we were going to see a break there. And then it was sort of, okay, are we going to do 5,850, 5,900?
This was the squeeze, basically. We cleared the first level,
right.
And then the big traders got squeezed, basically. This is, we went to positive gamma, as they say.
Right, absolutely. And another thing too, you basically saw, people buying into a rally. I mean, when you've got positive gamma and then you've got these levels that have been sticking for weeks at a time, and then you finally leading up to the event finishes and goes in a direction in which the market, or it causes market participants to react in a way that involves taking bullish positions, the market then breaks out to the upside. So mainly with SPX right now, what we're looking at is the 5850 level seems like it should serve as support if we reach it by, say, tomorrow or Friday, with 5825 starting to creep up and come into play if we were to break and hold below 5850, but we'd expect that to sort of act as support. Right now, the at the money straddle It's basically positioning us for Friday's expiration at a range of about 58.55 to 59.85, which ironically, in our positioning on options for this Friday, we're sort of again seeing 58.50 is where likely you'll catch support on the downside, and then the top side 59.75 to 5600. It's not that it's not doable, but it's really going to take a lot. And at that point, you're talking about VIX crushing down even past 15, probably down to a 14 or 13 level, with the positioning going on there and sort of the spread out positioning we're seeing in SPX for this Friday right now.
Right, which is what we're looking at right now.
That's the book. Yeah,
that's
right.
The chart we're looking at right now.
And correct. And this is for SPX Friday. And notice there's two blue areas in the middle, 5,800 to 58.25. It really seems like that might serve as a range we like to play in and bounce around here for a bit. But as you see, if you break to the upside past 25, there's really nothing there until you get to about 58.60, right? And so the idea would be 25 breaks and holds. This very well could just rip another 25, and then at that point, maybe 6,000 does act as a magnet or continue to draw the market up towards it. You will notice, though, there's quite a bit of put positioning that exists at 6,000 that doesn't really exist anywhere else on the chart other than down below, right? So to me, seeing a balance there, that might not fully pull us there, that we might catch some resistance at that 59.75 level if that hits. And again, remember, right now that straddle for Friday is pricing in about 58.55 to 59.85. So anything outside that range is technically moving outside of the expected movement as of right now.
Right. It seems like
so it seems to line up clean.
It seems like right now, if we get stuck between 59 and 59.25, that would be a really great way to consolidate here. That's where it seems like most of the positioning is built up, the bulk of it, but not really most. It's just that's where it's the most crowded, because there's some pretty big open interest and notional value, notional gamma way out there at the 6,000 and 58.50. So we should be pretty wary of potentially big moves. That's kind of the point here, is that you've opened up this type of volatility, and it's that box is probably not going to close back immediately unless we start to see 59 to 59.25 really start to build up. You need to have some of that exposure on the tail end start to build up in the middle, basically. Otherwise, we could be at risk of really swinging around here.
Right. If the inside's hollow relative to these outside sort of, I don't want to call them outliers, but they're extremes, right?
The inside's not hollow, but it's not quite as, deep and dense as you would like it to be.
Exactly. And so that's where, if the sort of fulfillment of people putting on and taking off positions results in this inside not creating enough sort of pinning effect, if you will, we could definitely see one of these outer ranges, down 75, up 75 from around where we're at roughly, just because if we get up here and then no one's really doing anything, well, it's not just going to sit here and move sideways, right, for another
Pandora's
2
box
weeks, most likely.
Has been opened.
Right, exactly.
Hey, Shane, love it. You got a Qualcomm look for us real quick, though. Give it to me. We only got like 60 seconds. Take me through the levels that matter for Qualcomm.
Yeah, Qualcomm, main three levels we're focusing on right now. We got a max pain level of 170. Essentially, that's where if you were looking for a vol crush, based on the market's pricing in roughly about a $13.33 move between now and Friday, based on the at-the-money straddle. You're getting a range of about 158 to 185. If you were to stay around 170, that's about dead center of that max pain, or that expected range, right? Downside, max put OIs 140, upside max call open interest 180. We are seeing quite a bit of put-call ratio open interest and volume skewing to favor the call side. Open interest is only 0.51, volume's 0.5. This is, in some instances, bullish. It indicates more calls trading, right, than puts. If, great earnings and demand for the stock occur, 180 is likely your first stop to the upside, and if there's enough momentum, you could very well break through 180 and smash straight to 190. But expect, again, some tightness between about 165 to 175. If this isn't going to break out past about a 5% move, 65 to 75 is where we're looking to hold. And if you're going to get the 10% move, 190 is basically sitting right at about a 10% move above where we're currently trading.
So market maker move, the implied move lining up pretty well with the gamma exposure there. So, all right, if it's good, then you look for 190 basically, and if not, it's stuck in the range it's been in. Thanks, Shane.
Yep.
Good luck. All right, appreciate that. Interesting stuff. All right, Qualcomm earnings coming up. But first, we're going to talk some commodities. Gold, copper, crude, though, has come back. Crude's actually almost flat on the day. Pretty interesting there. Gamma on, traders. Subscribe to Schwab Network's YouTube channel for brand new limited series taking options trading to the next level. Gamma on, coming soon.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Let's go through the commodity trade. Just about as interesting as anything else today. Dan Deming joins us, managing partner, KKM Financial. Many tools in his belt. Dan, we appreciate you, sir. Take me through it from the commodity angle today.
Sure.
The first thing I guess I would say that stands out, crude's back. And since when
Crude's
does
back.
crude buy dip so easy?
Yeah, I know. It's down over 3% earlier in the session, but yeah, it's back, and it's back above 70 and actually slightly higher on the day. I think the reaction was basically that, hey, we're going to kind of start to shut the borders down and kind of, and limit trade and, that kind of sentiment in the market. But I think as cooler heads prevailed, the fact of the matter is that if we continue to increase the production of crude and we continue to export it to other countries, there is going to be some potential for, again, the prices to continue to move higher. Couple that with, I think, Saudi Arabia, didn't they come out? I think they expect global demand to continue to increase here as we move through the rest of this year into early next year. So those are the things I think influencing the market. It's a knee-jerk reaction this morning, Oliver, in the crude space, and now we're seeing some stability coming back and it finding its way back above the break-even point today.
All right. Crude, it's a tricky one. The energy companies had a great day, so the market thinks that they're going to make more money, which right now they already
Especially
operate.
integrators, yeah.
Yeah,
exactly.
exactly. And they already operate pretty efficiently, so if the market thinks they're going to make more money, that's a scale, that's a volume game.
Absolutely.
Which kind of surprising.
Yeah, I agree, Oliver.
Crude bounces back then. Kind of seems like they've got differing messages a little bit. Unless you just, I don't know, I guess kind of assume that like all this chop in crude has like brought us to a true value. Maybe this is just where it belongs. 70
It
bucks.
might be. Yeah, I mean, yeah, and again, this is a level that I think most market participants in this space feel pretty comfortable with. I'm sure some would like to see it a little higher, probably, but nonetheless, this has been the range. And in this range, it doesn't put too much of a tax on the consumer, yet it still has the margins in it to, be profitable for the various upstream and downstream players in the market, I think. And then, and we'll continue to see. We'll see how this unfolds over the next several months as probably some things are going to get renegotiated. So that's going to have an impact on the market. But at this $70 to $75 level, I think that's been a sweet spot, and it appears that the market wants to get back there when we get too far away from that this price range right here.
Okay. All right. I like that. I think that's pretty good for crude. What else is to really say on it? What about copper, Dan? A pretty big hit there.
Big hit. Yeah, big hit after that big run-up at the end of September. We're back to mid-September levels, giving up basically a big chunk of that today, down 5.5%. And that's the China trade, really. I think that's the primary driver. That if we do see a shift in trade policies, how will that impact China moving forward, and also how will that impact just global demand in the space? So again, possible knee-jerk reaction here, Oliver. We're just seeing outliers with gold, silver, coming under some significant pressure again, because the idea is that you saw a buildup with the potential for unrest or a shifting of the guard as far as how is it going to impact the dollar. Now we're seeing the dollar rip higher. Now this is kind of what you would normal correlation with gold and the dollar today to some degree, but longer term, I still think those central banks are buying gold. There's still going to be a demand for gold. It was due for a pullback. It hasn't really given up that much ground after being up over 34% at the end of October. So I think that this is just a natural reaction to the idea that the dollar could be stronger for the next several months, and therefore gold's going to lose a little bit of its tailwind in that type of scenario.
Yeah, I think it's very fair. I mean, it's a big drop for both of these that had these great runs. So I guess they're kind of low on the totem pole for taking profits, kind of low-hanging fruit to some extent. If you were in silver in the last month, then you caught it.
Both of them, yeah.
And gold, anytime in the last 2-3 years. So, all right, love it. Thanks, Dan Damming. Appreciate your thoughts.
You got it, Oliver. Have a good day.
You too. Managing partner, KKM Financial. Let's go to Jenny Horn. I got a developing story. More on the financials. Blackstone, real estate, the deal. Take us through it.
Okay, so I know we were talking about hopefully increased M&A and deals being done. I know this is not a reflection of that environment, but it's definitely helping. I mean, Blackstone has agreed now to buy retail opportunity investments in an all-cash deal valued at around $4 billion. The purchase price is around $17.50 a share. The companies did report this earlier today, but that's more than that's 34% more than what we see of the closing price back on July 29th, which was the day before we heard reports of this deal being had. Retail opportunity investments, though, have climbed pretty substantially on the year. I mean, obviously higher today, ripping now with this news, but had climbed almost 20% through at least Tuesday's close. Retail opportunity investments does have around 93 shopping centers focused in the western U.S. They do also have several grocery stores as part of their portfolio as their anchor tenants, which was roughly 97% leased through the end of at least September. So I do think this is huge. The sector is accelerating as far as its overall fundamentals. That was per the co-head of the Americas division of Blackstone, but they said this benefits From nearly a decade of virtually no new construction, which demand for brick and mortar stores, restaurants, and fitness and other lifestyle overall retailers remains healthy. I think that's the important takeaway. There is still a market for corporate real estate. I know with the overall restructuring of right now, a lot of the office space and various city space, there's that question. But I think this is at least signaling that the real estate market, and as far as like, you know, ownership of stores and these various leases, remains at least strong. And that's why I think this was a successful M&A target.
Okay. It seems like if you're able to get a deal done right now, it's a pretty big deal. I mean, like, not literally, but, you know. So, all right, expect it to close and also show some confidence in some of the commercial real estate stuff, too, which I think is important, maybe in justifying some of the regional bank rally today, too. So I like that. I think it's a pretty good story. Thanks, Jenny. Good stuff, good context. All right, we got a big picture discussion coming up from Schwab team. Into the bell. I'll be right back.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
All right, let's bring in the Schwab team, taking us into the last 7 minutes here. Colin Martin and Kevin Gordon are with me. Colin's director and fixed income strategist at the Schwab Center for Financial Research. Kevin is a senior investment strategist at Charles Schwab. Gentlemen, great to have you here. Congrats on making it through the big day. Still standing. And I don't know, did the market lose its head, Kevin, or is this reasonable?
No, I think it's just a reaction to the surprise of, you know, things having been figured out maybe much sooner than what had been the consensus. You know, I think the consensus is probably somewhere, you know, within a week or 2 weeks time of figuring out who the winner was, especially for the key battleground states. But, you know, clearly that's not the case. So you've kind of unleashed all of that pent up momentum in pretty much, you know, one session. The one thing I would note, what's really interesting, at least from a U.S. equity perspective, is that even though you are seeing pretty significant gains up and down the cap spectrum, definitely stronger down the cap spectrum, breadth is not as remarkable as what you would expect when you've got, you know, more than a 2% day for the S&P, more than a 3% day for the Dow. You're at about, you know, just slightly under 3-to-1 advances relative to decliners for all NYSE stocks. So it's a great day, you know, for the market broadly, of course. And you've got key parts of the market that had been lagging a lot in this bull, but are now really starting to wake up. And I think that's a good thing. But I would say that the breadth profile is not yet as strong. I mean, we had a stronger day yesterday and much more tepid gains. So just one thing to keep in mind when you've got a rally like you do today.
All right. Basically the same question for bonds, Colin. Is this abnormal, market losing its head, or just a continuation of what we've seen for like the last 2 months?
I'd say it's not a continuation. This is a significant shift for us. We're changing our outlook a little bit. We've seen such a move up in treasury yields. If we go back to the past 6 weeks or so, we think a lot of that was justified really just on the economic resilience that we've seen and the idea that the Fed might not cut rates as much as expected. But as we look ahead and what the potential policies could be under a Trump administration, we think that's pulling up yields even more. If you look at the combination of tax cuts, tariffs, and potential immigration policies, we view a lot of those as inflationary. So inflation has been trending lower, although it's been a bit stickier than we'd expected. I think the risk now is that it stays pretty sticky and maybe even reaccelerates a little bit from here. I think it's too early to say. There's a wide range of possibilities what could happen, but I think that's really what's driving the markets right now. And it really comes down to what the Fed reaction function will be. And we've seen those expectations shift even more. If we look ahead to tomorrow, we're not expecting a change there. 25 basis point cut. When I say not expecting a change, relative to what our expectations were already. We are expecting a cut tomorrow, because the data, I think, supports that. But I don't think the Fed's going to adjust policy based on what could be over the next few months. They'll want to see what happens there. But any way you slice it, we'll probably see a pause at some point, potentially as early as December, mainly given the economic resilience that we've seen.
Okay, so just to be clear, Colin, you guys, the view of higher yields is a new thing, right? Because last time we spoke, you guys were looking for yields to stay basically flat. I think Kathy even said that the idea of rates moving up alongside the Trump thing was overstated, which generally I agreed with coming into this, which was that the yield move basically since the Fed day of cut kicked off this whole kind of pro-cyclical theme. So does the view change now because of Trump specifically, or because those themes were already in action?
It's probably a combination of both, but when the facts change, we're going to change our view. And when you look at the results of the election, it was strong support across the curve for the Republican side, and I think that allows a lot of his policies that maybe they wouldn't have gone through if we didn't get such a strong backing in terms of the Senate or the House, which we're still waiting on, but it looks like maybe it could end up being a full sweep there. So our view has changed, where, as you alluded to, we thought the move up in yields recently was a combination of really the strong economic growth and maybe the potential for the Trump victory, but we weren't expecting a really re-acceleration of yields. But now we do think that is a risk. And if we look ahead, is the risk to higher yields or lower yields? We think it is to higher yields. How much and how quickly, I think, is open to debate. But because of that, we are a little bit more cautious about extending duration. Now, we backed off our extending duration call a few months ago, and then just within the past 2 weeks or so, kind of pulled it back forward again because we thought it presented an opportunity for investors to lock in attractive yields. But right now, we're kind of focusing on a benchmark average duration or even a below benchmark average duration.
Okay.
So we don't want investors to be caught off guard with their bond holdings should yields continue to rise, which could pull the prices lower.
Got it. Mr. Gordon, I got two questions I want to ask you, but we're only going to have time for one, so you take whichever one you think is more interesting. I trust you. Because one is I want to ask about just kind of the quality skew, basically. Should investors essentially look at this and go, you know what, the quality factor worked, that's what I should stick with? Or the other question is more kind of the bond question about tomorrow is, what if anything this administration tinkers with the Fed or Powell, how rough would that be for the stock market?
I mean, the first question is a little bit easier to answer in the sense that, I don't think that the quality trade has completely faded away. I think it still makes sense, especially if, to Colin's point about the Fed maybe having to pause or maybe keeping rates more elevated. That's still relatively more restrictive, at least compared to what you would have gotten if the Fed continued to ease and maybe had a little bit of a lower terminal rate. To the second point, I mean, that's the unanswerable question right now. I think from a tariff perspective and from a policy perspective, that has the potential to hamstring the Fed a little bit more, because we know, just based on history, that tariffs are more supply shock driven, or they at least lead to more supply shocks. That is harder inherently, just objectively, for central banks to combat. So if that's the environment that we're going to be in, where more of the policy is driven by tariffs, then it's just harder for central banks to be able to deal with that kind of inflationary impulse that results from it. So I do think down that road, it would probably result in a flipping of the stock bond correlation going back to negative territory, the stock price bond yield correlation in particular going back negative, and then potentially becoming more of a depressant for equities if yields continue to rise.
True, okay. A very good point on the inflation side. I was more thinking what if he starts trying to move Powell around or talk with the Fed, but then that's probably getting in the realm of speculation. Appreciate you guys. Thank you very much. Kevin Gordon, Colin Martin, good stuff. The big picture discussion, taking us right up into the bell here, 20 seconds into the bell. I'm going to come back around to the subject of what could happen if anything changed at the Fed, because I do feel like that's something that went under discussed today. We'll hit that in the risk radar. Right now, we're looking at a closing session with power. The S&P 500 at all-time highs. Incredible. All day, the bids came in. Incredible stuff. So much fear that perhaps this could have turned into something elongated, destructive, and tiresome on the political side. Thankfully, we avoided that with a resounding victory by former President Donald Trump and now President-elect Donald Trump, with an electoral victory surpassing 300. The market let out a giant sigh of relief here. Now, I would wager that probably something similar would have happened, if not identical, on the benchmark level had it been the other way around. As long as there was a big victory here, the market breathes a sigh of relief. Big tech had a really good day here, with the exception of Meta, and actually Apple too slipped a little bit. Maybe the market thinks that Mr. Trump has preferred and best tech friends alongside frenemies. Maybe Tim Cook's a frenemy. Maybe Mark Zuckerberg's coming back into the fold as a friend. But today, Meta was left behind. And an interesting take on why earlier the possibility that maybe this administration would be more relaxed on TikTok. So Meta slipped today, but you know who his BFF is? Of course, Elon Musk's Tesla, up 15%. As Elon Musk now will have a role in the White House, supposedly. All that is to come, though, and will certainly make for a lot of fun. But we do have some live data and some numbers this afternoon. Qualcomm is going ballistic right now. Caroline Woods joins me alongside Scott Durfee. Afternoon, guys. If this session weren't good enough, it looks like it's about to get better. Qualcomm just blasted right to and through the 190 we were looking at on the Gamma segment with Shane. I mean, wow. So let's see if it pins at that 190 right now. But there it is, bing, 190, 191. Big move here. Qualcomm's been stuck in a range for months, and now offering a fresh bullish theme for the aftermarket and semiconductors. Caroline, what do we got?
Well, we have a beat on both the top and bottom line and across the segments as well. If you take a look, fourth quarter revenue, $10.24 billion. That's an increase of 19% year over year. Wall Street was looking for more like a 14% gain with $9.9 billion. So a beat on the top line. Meanwhile, in terms of fourth quarter earnings per share, $2.69. That's up more than 30% from the year ago period. Wall Street was looking for $2.56. So that's on an adjusted level. So actually, oh yeah, 269 versus 256. So I'm right. Beat on the bottom line as well. Sorry, it's been a long day and previous night. And then if you take a look at the segments, QCT, so the chips segment, $8.68 billion, up 18% year over year. That's a beat. Handsets up 12% year over year, in line with the previous quarter. Automotive, a smaller segment, but a way that Qualcomm's been diversifying, up 68% year over year. So not as impressive in terms of the sequential growth. Last quarter, it was something like 87% growth, but still significant growth year over year. And then IoT, kind of the VR and smart home segment, up 18% year over year, $1.68 billion. The automotive segment, they said that was a fifth consecutive record for quarterly revenue. And then on the other side, the licensing side, revenue was $1.52 billion, up 21% year over year. And the expectation was for $1.44 billion. So a beat on every level that I'm seeing here, just in terms of guidance. Q1 revenue between $10.5 and $11.3 billion. Wall Street was looking for around $10.6 billion, so that falls in line there. And then Q1 adjusted EPS between $2.85 and $3.05 per share. Wall Street was looking for $2.86, which is only a penny higher than the low end of that range.
Wow.
So it looks like guidance is impressing as well. So Qualcomm ended today up more than 4%. But now it's up big in after hours, as you said, and now it's, it was up about 20% year to date heading into this report. So actually underperforming the broader sector and market, but looks like it's going to make up for that underperformance tomorrow, as long as the earnings call goes okay.
Yeah, I think the earnings call's probably going to go pretty well. Let's check out that chart, 189.51. We're getting pulled right into that 190 there. Good eyes, Shane. Okay, big buyback on top of it too, Scott Durfee. Everyone loves a good old buyback. $15 billion from Qualcomm.
And that's not an insignificant buyback.
No,
that's
it is
pretty good.
not.
Yeah, that's a pretty good portion of their market cap.
Yeah,
And so
$200 billion
when we
market
see
cap.
Yeah, so when we see these kinds of things begin to happen, this is a vote of confidence, not just from the analysts, not just from the company, not just from the market, but everybody combined. And when we see those kind of synergies take place, we could expect either great things to continue to happen for Qualcomm, or, is there a bubble in the future? And I don't think that's the case. Qualcomm and ARM, which we're going to be talking about also, I believe, here, in cahoots, working together, are against each other. There's a little lawsuit going on. They've got some legal issues that are happening between them. Qualcomm, however, though, is positioned and will continue, through automotive and Internet of Things type, IoT type of data. We could expect Qualcomm to continue in this rally and to continue doing it.
Yeah, slipping a little bit to 186 now, but I mean, to the point of the buyback, that's so big, Caroline, that to Scott's point, you don't do that if you don't feel confident, which takes me back to the earnings call. I feel like they're going to be telling us something real nice. They got to have something to match up with this.
Yeah, and I think that's also why we're seeing this big pop. I think that, I started taking a peek at ARM's report here, so let me go back to Qualcomm for a second. I think that, I think the big question for Qualcomm was, will the bounce that we started to see when it last reported with the smartphone sales, kind of bouncing back, will that hold? It seems like that's going to be, that is the case. So I think any commentary around that. Also, they still have early phases with the Snapdragon chips for AI in terms of laptops and smartphones. I don't think that, I saw some analysts kind of scale back their price targets heading into this report, thinking that, maybe demand wouldn't be as strong for those. Kind of tepid demand, I think was the word one of the analysts was using. We'll have to see in terms of commentary if they're in fact wrong and demand for the AI Snapdragon chips actually better than expected. So a few things to keep an eye out for, but I think the buyback's certainly helping, along with the fact that it's just a beat all around.
Yeah, really beautiful number. Seems like as good as it could have gone, and probably good implications for Apple iPhone sales as well. Still a big player in that world. All right, it also looks like it's going to be doing the heavy lifting this afternoon in terms of earnings reactions. ARM coming in right now a little bit lower as company looks like it beat adjusted earnings 30 cents versus 26, sales 844 versus 800. Stock's actually been doing quite well after debuting late last year. ARM went from $46 to $144, but it still is not the cheapest of the group. Caroline, it's a little bit more, it seems like still the market kind of figuring out this company. They traded 100 times earnings, and the earnings have been pretty volatile.
And I think that's the thing to actually consider as we head into this report, is that ARM is actually up 92% year to date heading into this report, 162% over the past 1 year. So I think the bar, I would argue, is higher for this name, especially given the valuation that you had just said. So I think that, that's something important to keep in mind heading into these results. That being said, it seems like it's a beat on both the top and bottom line. Adjusted EPS of 30 cents. Wall Street was looking for 26 cents or 25 cents, depending on the estimate. Sales of $844 million. Expectation was for $809.5 million. So that was a beat there as well. In terms of guidance, I was just pulling up, seeing that the guidance for the current fiscal third quarter, revenue in a range between $920 and $970 million. So basically the midpoint there would be somewhere around $945, $950, and the average analyst estimates are just over $940, so that would be in line with expectations. And then fiscal third quarter earnings between 32 and 36 cents per share. Wall Street was looking for 34 cents per share. So guidance in line with expectations. The CEO, Renee Haas, said this quarter is all about the validation of the strategies we've been talking about. We've got some real proof points. So that's according to a Reuters headline that I saw. So I think that, this one we saw pop, but maybe some scaling back, and could be because the guidance is just in line and not really blowing out of the park, or it could be the fact that, this is a stock that has run pretty far, pretty fast. And to Scott's point, these are two companies involved in what seems to be a pretty nasty legal dispute. So I'm curious if either talks about it on the calls today.
Great point. Yeah, that is unresolved. Very good reminder. ARM, what do you think, Scott? Ready to play with the big dogs?
Avalon, ARM, I'm not sure that they are yet. I think that they've got to get through this legal issue with Qualcomm. I think that there's still, I love the guidance and I love the beats. I love everything that we're seeing today. I'm just a little bit apprehensive to go out on a limb and say, oh yeah, these guys are playing with the big dogs. We've seen ARM, they've signed an MOU with digitally enhanced Avalon's Thunder Bay lithium processing facility in Canada. Those are the kinds of things that ARM needs to continue to bolster up as they're continuing in business, right? They're going to use Qualcomm's industrial and edge technologies to build digital infrastructure for mining operations with IoT-enabled solutions, aiming for commercialization in coming years. And so, those things have got to get worked out, right? Yeah, that's right. But they've got to get worked out. They've got to learn to play like friends. And when they do, Qualcomm's in a better position in this situation. We'll see how ARM responds to it.
Yeah, great point. Company's still kind of in the throes of getting its feet on the ground and being a major competitor, being a major player. Maybe it helps to throw little bows in the meantime here and there, fend off your turf. All right, all this seems to be solid enough, even though it's not like a hugely successful, like big aftermarket, because you got a little offset here. I think Qualcomm matters a lot more, Caroline.
You think Qualcomm has what? Sorry.
Qualcomm matters a lot more. It's like, they're offsetting a little bit,
I think so. And the one thing that I did know, I always like to track to see what analysts are doing. Sometimes they obviously have to play catch up after these reports, but ARM was already trading above its median price target of 137 heading into this report. So it'll be interesting to see if they, if analysts make any adjustments or if they just think that this is kind of fairly priced at these levels. I will say the majority still in the buy camp for ARM. So but the fact that the median price target is below where it closed today, I think is something to consider when thinking about how it could trade tomorrow.
Love it. Good stuff. Thanks, guys. Appreciate it. Scott Durfee, Caroline Woods. We got another earnings coming up. Software business, app loving. It's behind a lot of the mobile games that you're probably familiar with. Been an overlooked stock here and there. We've also had the leadership team on. It's also ripping up to $200. George Till's going to take a peek at the comeback story in this stock next.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Accelerate your market knowledge and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
We got another aftermarket winner, and Apple loving shares of the software business are up big. George Tillis joins me. GT, quite a journey this stock has been on over the last few years. Has swung from like $100 plus coming out of COVID in 2021 down to $9, and now we're at 177. Pretty amazing stuff. Aftermarket 206 right now, GT. So what's kicking in here? Everybody making apps?
Well, I mean, ideally speaking, this has been a remarkable play. I mean, just going back a few months, I noticed there was a tremendous breakout on the 10th of September. So it looks like they've got some additional contracts and monetization, or essentially some emerging opportunities that manifested into their business. But I mean, it's a software company that focuses on, marketing and monetization of apps, but they also focus on the connected TV realm as well. So they have a growing online presence. They're competing in the right space, I think, at the right time. But for some reason, and it could be additional contracts or user interface that they're trying to monetize a lot better for their customers, is really taken off. But if you take a look at the report, just numerically speaking, they reported GAAP earnings. Looks like $1.25 was the number. Compare that to 94 cents estimate, and that's still a tremendous, 300+% increase relative to the 30 cents they earned for the same quarter last year. And they're doing it on sales, which essentially are growing about 39% year over year. They beat the estimates at 1.19 billion versus 1.13, and their software platform revenue increased by 66%. And I think it's their connected TV software platform that's been growing. Obviously, there's been a lot of marketing demand because of elections across the board. That might be a catalyst that we've seen since September in this name, but they're really monetizing their sales quite tremendously. If you just look at the EBITDA growth compared to sales growth, with sales growth, for the quarter, up nicely 39% annually in the last 4 quarters, excluding the quarter they just reported, 37%. And their EBITDA grew, excluding this quarter just reported, 121%. So operating leverage, they're generating more of it as a business, and the stock has really reflected that performance, and it's rewarded shareholders quite nicely. Excluding the after-hours move, the stock is up over 300+% on a year-to-date basis.
All right. It's quite a swing, and I think the AI stuff means something here. There's a good bit of gaming design that once you know the direction you're going, you can kind of just set it to go. So that's going to help too, I think. Same thing, kind of reminds me of GoDaddy, right? We just had the GoDaddy team on this past week, where you're building websites and they're using AI for that. I mean, this is very similar, but for applications, for games, etc. I mean, they're doing buybacks now, so Qualcomm's doing buybacks, AppLovin's doing buybacks. We're back, baby. We're back. We never really went anywhere, but we're back.
Yeah, ideally, I mean, most of them never went anywhere. I mean, Qualcomm, obviously, a nice move in the after hours with the $15 billion share buyback announced, and there was earnings estimates going into that quarter, which were sort of underwhelming, so the beats obviously help, the buybacks also help. And in this case, what I have noticed too in AppLovin is there's a lot of folks that are still not convinced of this business. The short interest, just going back about 2 quarters ago or 6 months ago, was around 15%. Last quarter was around 10%. It's still around 8%. So a portion of this move in the after hours is potentially some shorts who are forced to cover based upon the growing user interface and AI integration of their technologies with app development and the connected TV market. Makes this company sort of well positioned in the technology sphere for entertainment, but also for ad monetization for major companies. But they've done a great job. It's been a great turnaround. You did mention the move from the pandemic highs to the lows, and I would put this in the same camp as Carvana. These are a couple stocks that made some tremendous turnarounds and have rewarded shareholders quite nicely.
All right, nice, good assessment, George. Thank you. Big rally to 213. Appreciate that. Nice little overlook stock and earnings. George Tillis on AppLovin. Risk Radar coming up, and I think a helpful piece of information on distinguishing what happened here today. So we'll be right back.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl?
Schwab. Schwab, a modern approach to wealth management.
A fresh take on the hottest trends in the market, from every click to every tick.
There's no fear of missing out on Next Gen Investing. 1 p.m. Eastern, only on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Higgs. Catch me on Fast Market, weekdays at noon on the Schwab Network.
That was a huge day today, and it was a huge night last night. And I think it went about as well as we could have asked for. I had two strong conviction views coming into the election. The first was that stock volatility was elevated on the risk of a contested election, and that the range that we had fallen into, which is why the yellow light was there, was on the risk possibility of a very tight race that then led to a massive fallout days, weeks, months, or to inauguration long, and thankfully for everyone, we didn't get that. That is basically a function of the electoral victory that was delivered by Donald Trump. So that means stocks go back green. This is where it gets very important here. Everything else holds, because in my mind, this is less about what's going to happen under the Trump administration and more just about clearing out the risk of a basically tail risk thing that's not supposed to happen in the US, but almost did happen last time. So then that puts a lot of ease into the market. And I think the best way to consider things still is as a continuation of trend. There might be certain things here that do take on unique Trump characteristics. Certainly policy can have an impact in the short term, 100%, and especially now sentiment on the expectation that it's going to have an impact is very real too. That feedback mechanism is now a fresh force to continue the trend, which has been better than expected economic outcomes. The economy surprising positively at every turn. Inflation deflating. Yes, prices are still up, but the Fed has done a good job of keeping it under control. There's a separate risk that I want to talk about. That's the possibility that this administration would tamper with the Fed or get involved in. In my mind, that is kind of the biggest risk of this administration, the way they've talked about it, the way Vivek Ramaswamy told us that he thought the Fed had abetted inflation. So that's going to be something the market's going to have to deal with. And I don't know when it will, but that to me is the main risk. However, everything else can be thought of as potentially additive, sector-wise, thematically, what Musk is going to do, all these things potentially could have impact, but most of them still funnel down to the main themes we've been tracking. Better than expected economic data. That's why the bond red light has been there since the day the Fed cut 50, because it cued a pro-cyclical approach to the market that makes sense as economic data improve and we get all these things that have never happened after a first cut. Now they're going to cut again. That should just add more onto it. So nothing's changing here on the radar, which suggests this is more just about continuation of trend. We'll figure out what policies come. Some that have been talked about will, some won't. For the crypto crew, what's going to happen now? To me, that's a pretty big one out there that they're going to want some answers on quick. The crypto rally today also just tiny bit suspicious, and then a lot of other indicators like the Russell went to near overbought, yields, same, dollar, hot. Crypto still hasn't, looking at the Bitcoin chart, gotten to an overbought level yet, which is what I think needs to happen for it to then take off. So in my mind, even though the green light is there because it's already broken out, in my mind, I'm waiting to watch to see if that RSI can get back over to overbought. The point is, all these things will come into clarity with time. Today, we want to think about this as a continuation of the trend, which has been better than expected economic situations. The Fed doing a good job shepherding inflation and getting us on track. And the innovation of tech companies that are leading the world and keeping the US on top. Everybody's thinking about what the impact of Musk is going to be. Sure, Musk the man now has another job to put on his plate. Musk the CEO now has more places to share his mind, but he's done a pretty good job multitasking so far, but ultimately he too is continuation of trend. Big tech disruption has been at the heart of the market. Almost everything here is a continuation of trend that the market was worried might get distracted by a major geopolitical event. So now that we have moved on past that, thankfully for us as investors, as Americans, as people, as friends, breathe the sigh of relief, and we'll figure out the rest of the stuff as it comes for the market. But right now, continuation of trend is what this is about. Have a great night. So what can you watch at the Schwab Network? Let's break that down for you. Every day from our studios here in Chicago and on the floor of the NYSE, we deliver more than 8 hours live programming. We kick off every day bright and early at 8 a.m. Eastern with our Futures Show, breaking down commodity markets, futures, and technical trends. At 9 a.m., I'm in studio hosting our 2-hour opening bell show, Morning Trade Live. It sets the blueprint for traders for the day. We invite top analysts and investors to determine what's driving the early action, how to interpret the news, what's on the agenda for the session. Hey, Nicole, tell them about our shows at the NYSE.
Thanks, Oliver. Welcome, everyone, to our beautiful NYSE studio. We are here on the New York Stock Exchange floor, broadcasting live each day. I host the Watch List, which provides investors a fun midday update on the major news stories and themes. Best part of being down here is we are right in the center of the action. The energy is palpable. The sights are unmistakable. It's back to Chicago now. Jenny Horn.
Thanks, Nicole. Hi, everyone. I'm Jenny Horn, the host of Next Gen Investing. We all know how many new investors are beginning their trading journey and are eager to participate in the markets. And that's what I cover alongside Alex Coffey from 1 to 2 p.m. every day. We watch the hottest names, trending sectors, and under-the-radar stocks. Oliver, back to you.
For our active traders at lunch, Fast Market steps up the engagement to a deep dive into volatility, options dynamics, trading trends with former floor pros Tom White and Kevin Hinks. At 3 p.m., I'm here to guide you through the closing bell. We construct the best narrative explaining the day's action, which trends held or broke, and prepare for tomorrow's earnings and other market-moving events. Spend some time with the Schwab Net.
Bobo's back. We'll catch y'all later.